Jason, how do you think the Fed is looking at this? And you brought that up a moment ago, just in terms of what is exactly how they're looking at the weakening data, maybe how they're looking at tariffs specifically. I guess, do you think it makes it more likely that they're going to act sooner rather than later? And then what does that mean just for the ongoing potential for multiple cuts here between now and year end?
So there's two conflicting forces here. Higher prices mean you want to raise interest rates. A slower economy means you want to cut interest rates. There's a lot of uncertainty about how much this is a one-time change in the price level versus a change in inflation. I'm not entirely sure what the Fed would do, but at the very least, that level of uncertainty raises the bar on their acting, makes it the evidentiary threshold to cut interest rates that much higher. And I think that evidentiary threshold is going to be something like the unemployment rate rising to 4.5% before any more interest rate cuts are implemented.
Jason, is that the most important economic indicator we're watching when we're trying to assess the threat here or the likelihood of an economic downturn?
You want to look at a lot of data, but certainly the unemployment rate, what we're seeing in terms of job growth, those are two of the most timely and accurate measures of the economy. There was GDP now from the Atlanta Fed is showing negative growth. I would discount that quite heavily. I think there's some real flaws in their methodology. So I don't think the economy is turning on a dime in a negative direction, but everything, the uncertainty, sentiment, all of that is pushing towards slow.
Jason, always great to get in. Thanks so much for taking the time to join us.
Thanks for having me.
Yahoo Finance bringing you team coverage across our newsroom of President Trump's tariff fallout. Now we're going to take a look at the auto sector, commodities, and pharmaceuticals. Let's start with automakers. We're seeing a huge move this morning in pre-market trading. They're looking at a move to the upside here. This coming after U.S. Commerce Secretary Howard Lutnick teased an update related to the trade standoff between the U.S., Canada, and Mexico. Madison Mills joining us now with more. And Maddie, the thought of some relief here, enough here to really move a handful of names.
That's exactly right, Sean. The auto stocks rallying this morning as it sounds like car makers could get an exemption from tariffs. Clarity that could come as soon as today. Commerce Secretary Howard Lutnick all but confirmed that the three big automakers will receive exemptions from the tariffs on Canada and Mexico. He said, quote, our expectation is categories. There will be some categories left out, and it could be autos. He added that the big three say that they produce cars that are compliant under USMCA, implying that USMCA compliant companies could be exempt from these tariffs. And these comments come after we just had one report showing that tariffs could increase some car prices by as much as $12,000, leading to a dip in auto stocks. We've already seen used car prices rising as demand for used cars has ticked up ahead of these potential tariffs. So will that inflation remain following these comments? Again, the market seeing this as a win, with companies like GM, Ford, and Stellantis all rallying off of those comments.
All right, Maddie, we'll continue to closely track those in today's session. We also want to turn to commodities. When you take a look at copper prices, they're surging this morning after President Trump last night mentioned imports will be subject to a 25% tariff. Jared and Jared Woodbury joining us now with the latest move to the upside that we're seeing. Jared.
Thank you, Shauna. I think it's instructive that this is the biggest jump for copper, 4.32%, that we have seen since early November of 2022. I'm going to put on a 3-year chart here. In fact, we're also seeing the highest prices almost since May of last year. But back in 2022, that was when the demand picture for China was changing, and that was because they were ending their zero COVID policy. Markets were looking ahead to the demand picture increasing for copper. Now, today, we have a different picture. We have supply concerns. We have elevated prices for copper because of tariffs. So my argument is this is changing the picture for macro components. There are lots of levers here, and the playbook for this year is definitely different than anything we've seen in years past.
All right, Jared, thanks. Finally, we want to move on to the healthcare sector. On top of the existing levies that have been announced on China, Canada, and Mexico, President Trump is also weighing additional tariffs specifically on the pharmaceutical sector. Here to closer look is Angelique Milani.
Yeah, that's right. Quick note on the Mexico part of it. We know that there is an announcement on potential adjustments to that, but Mexico specifically has medical device makers overly exposed to those tariffs. Mexico had flipped in the last several years from a big importer to a big exporter of medical devices, and so that is where it could feel the most pain. We know that companies like Medtronic, Johnson & Johnson, GE Healthcare are among those that could be heavily affected. Meanwhile, the pharma manufacturing situation, Trump announcing potential actually next week, 25% tariffs on pharmaceutical manufacturers. That is causing some concern about nearshoring that happened over the last several years and potentially having to shift that to onshoring entirely. Pfizer CEO Albert Bourla telling a recent investment conference that they have the capabilities here in the U.S. and the manufacturing sites are operating in good capacity, so they might be able to just transfer manufacturing from outside to inside. That's something that a lot of other companies are looking at. We know that Eli Lilly, for example, just announced $27 billion in raising its manufacturing specifically for key active ingredients. APIs is what they're known as, and that is something that is a major importation product. So that is something that we'll have to keep an eye on.
All right, Anjali, thanks for breaking that down. Coming up next on the morning brief, we're going to count you down to the opening bell on Wall Street. Futures is still falling into the red, at least for the Dow, and actually we're looking at just above the flat line there, flipping as we speak. CrowdStrike.
Good morning. Good morning.
We'll break down how tariffs are impacting retailers, all that and more coming up on the morning brief. I've got to get Marcus some new cleats.
I bet you could buy the whole team new cleats with all that money you saved.
Nancy doesn't is passive progressive.
You know, Nancy, that's actually really hard.
Nancy doesn't have progressive, so she takes it out on those who do.
She can lose a private coaching with that. Maybe he'll score a goal. I figured you want the 100 since you've seen 100.
All right. So looking at what Brent provided for us as a roadmap, that new Condor doubled up again. We're at 15,000 contracts. Over 10,000, we tend to see some effect. Okay, so with price action being right where we are right now, we'll see dealer buying if we take out the pre-market highs, and dealer selling if we take out the pre-market lows. We're coming off the pre-market lows right now, so that's a good sign. Okay, watch the New York FANG components. Those all had a nice day yesterday towards the close. We've got about 10 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 5th of March. And it's 9:20. All right. So New York FANGs did see a little bit of profit taking in the pre-market. Let's go take a look at some of those names real quick. We've got Apple. You can see over there on the right, pre-market or inside of yesterday's candle. Amazon up here, trying to make an attempt at a reversal. Amazon, Broadcom a little bit higher into that wick from yesterday. Okay, looking for a bounce, looking for the futures to bounce.
Anybody sticking to their plan of holding stocks. I don't know who's buying and selling based on this stuff. I'm certainly not, but it does make me wonder, what the discipline is of most investors out there right now.
You don't enjoy whiplash, Peter? It's not a fun thing for you?
Yeah, that move towards the close yesterday was pretty crazy. Okay, that's Broadcom. Let's look at Meta. Meta had a good day yesterday. And we're right in the middle of yesterday's price action. Pre-market, 643. Looking for a move back above the 50-day. Microsoft had a nice run as well. We're in yesterday's wick at 389.60 pre-market. We're just above yesterday's previous daily close.
So you're generally still looking for the secular plays, the themes.
Meta, Microsoft, Nvidia.
At the whims of the tariff prices or whatever else might be coming that way.
Yes, I think that is a reasonable. However,
Nvidia.
It really does take a lot of courage to stay with that plan. But
Trying to reverse.
everybody needs to have some kind of discipline. If you are an emergency room doctor and somebody comes in there, very, very mortally wounded, they don't just do random things. They have a mnemonic that they go through, so that they can kind of keep sane and not be distracted. I think we should do the same thing with stocks, that have dropped 10, 20, 30%. But it's a rare thing, frankly, for investors to do that. And it would be a very valuable thing because it makes you far more objective than emotional and saying, oh my gosh, look at this person on the gurney table. I don't know what to do first. All I know is that they're bleeding out.
I always thought our stock market mnemonic was just BTD. Buy the dip, baby.
Yeah.
Peter, do you think when you look at companies like Nvidia that came off so hard here in the last couple of weeks, and maybe Tesla, obviously there are different stories for each of these companies. How do you kind of go through that?
All right, so we left off with Nvidia, Netflix.
Like a Tesla, you might, one could argue that's almost a pure policy play to some.
Netflix just above
That's right. And so, say Nvidia
where we closed yesterday, 973.
What do you do? And what I do is I pull up my mnemonic, which was the sell triggers.
Tesla.
I think we've discussed that before. I had two sell triggers, the better mousetrap.
Okay, Tesla's inside of that wick as well.
Is there competition coming on that might be
Doji looked a lot better early, right towards the 3 o'clock hour. We're looking a lot better, and then we rolled over. So we're looking for some improvement. Will investors come in and continue to buy like we saw yesterday?
CrowdStrike and what else? Tell me more about better trades.
Okay. This is almost a gift, I think, that was given to us. And it's a little bit complicated, but let me just explain the situation. So NATO, that Trump is not very much in favor of NATO funding. He's been very critical of the members not paying at least their 2% of GDP. Well, it turns out last November, if you track this, last November was the first time we saw an inflection point, and now those members are paying greater than 2% of their GDP. So that signals military defense buildup in Europe. Secondly, you've got the new chancellor elected in Germany, and he is very, very defense oriented. And then we have to throw in the whole Ukrainian situation. So this all adds up to a wonderful buy signal for some of the ADRs, the American Depository Receipts, for European aerospace and defense companies such as BAE Aerospace, Rolls-Royce, and Airbus. So I have actually sold NVIDIA and I'm now placing a fairly confident position on Euro aerospace and defense.
Like that. And it does seem that Europeans coming to the defense trade has been a factor for some of their economic pickup.
Big gap up on BAE Systems.
Okay, Peter, stocks. I love that you were still laser focused on picking the stock stories. When you think about other parts of the portfolio, bonds, gold, any of that other stuff, you feel play a major role right now, or is stock picking basically the best way to immunize yourself from some of these headline swings?
Well, years ago, I used to have to do that, Oliver. I used to have to recommend for clients a completely diversified portfolio. I am happy to tell you that since I launched my own business, I'm just focused on one equity strategy. So it makes life a lot simpler for me. I leave the allocation to other specialists in terms of their financial advice. I would say, though, in passing, that I've never been a fan.
Rheinmetall AG, that one's on the move too.
Have 15 different sectors, and they, contribute maybe 2 or 3% slice of that pie. And I also think gold is, frankly, almost like crypto in the sense that I can't analyze it. I don't have any kind of process.
Sales, all of these stocks taken off the upside. I wouldn't chase them. I'd wait for the next base, the next move lower. This is going to be an ongoing thesis with defense spending in Europe picking up. Rolls-Royce. Okay, Rolls-Royce. Okay.
Tariffs, then maybe you've got somewhat of an answer here after the president's speech last night and some commentary from his deputies as well. Dollar giving up quite a bit of the gains now since
Leonardo, fairly inexpensive at $20. We got less than 2 minutes to go. All right, futures are just a bit off the low of the day, the morning trade. Okay, take a screen cap if you want, or download the image from the Gamma updates. Keep track of where dealers will be buying or selling. Okay. Basically above 5,800. 5,800, we should see dealer buying. Below 5,750, we would see dealer accelerated selling. 5,750. Okay, we're about. Are we open? I missed the opening bell.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Anticipated. The president doesn't want to wreck the stock market. That is simplistic. The president wants to get this done, and once he gets it done, then we'll be fine. You have to stay the course. David, there isn't anything he's saying that he didn't tell you he was going to do.
Okay, we got a little bit. Stock starting to rise now. Okay, futures starting to rise. Okay, Broadcom. Nice move on Broadcom. Okay, Broadcom moving a bit higher. Okay, watching NVIDIA. NVIDIA. All of these stocks in the upper wick of yesterday's candle.
So you think he's trying to get the weakness out of the way? Yes. And if we get into a recession, do it soon enough where it doesn't affect the midterms? Is that? I look, I think we'll see employment, and it does seem like employment. The ADP numbers were very weak. But David, I tend to.
Okay, Supermicro pulling back a little bit. Supermicro. Let's see what those covered calls look like.
You get lower rates at least.
Okay.
I mean, listen, the way the banks traded yesterday.
we're down. Disney, see how Disney traded? You want to talk about a reflection or
Okay, first few minutes we're just watching markets. Wait till about 9:45. That's what I like to do. Look for high relative volume. Want to see the futures moving a bit higher from here. Start to move above 5,800. Start to move above 5,800. We should see dealer buying. Okay, Apple lower, Microsoft trying to bounce. Okay, the New York Fangs are mixed at the moment. I got to imagine a lot of people are very apprehensive after that big move we saw yesterday. We were up. We went positive and then we dropped, 80 to 100 handles in 40, 45 minutes, something like that in the afternoon and the evening session towards the close. And then we bounced after hours. Okay. What is Bitcoin doing? Bitcoin.
Let's talk about let's talk about it. I'm happy to. The stock, by the way, has moved up of late, in part because it's a defensive name with an incredible portfolio.
Bitcoin. All right, Bitcoin's trying to follow through. NASDAQ 100 is about 55% declining, 45% advancing. Pinduoduo Duos at the top of the list again. Pinduoduo Duo. ASML on Semiconductor, Intuit, and Kraft Heinz. That's a nice mix. Chinese stocks, chips, consumer staples, Gilead Pharmaceuticals. That's number 7. Charter Communications, Meta. Meta's trying to climb up the list. Meta. Okay, Meta just popped up a little bit. Maybe some short covering. There's Meta. Meta.
And then the question, Jim, becomes, what does that mean for the future of the CEO? Because I think there has been some focus on whether, in fact, that is something that perhaps needs to change. I don't think anybody has made any conclusions in that regard.
Okay, Meta with a pop. Microsoft popping.
Is going to be focused on, in general, as it focuses on reinvesting.
All right, 8 of 10 New York Fangs are lower for the most part. Okay, so this is not giving us really a good signal at the moment. Need futures to make a decision which way to go. Okay, we're going to move higher. We're going to move lower. What are we doing here? We're just sitting here. Okay, inside of yesterday's crazy price action with a new iron condor, 15,000 contracts. The call side short is 58.40. The put side short is 57.05. So any move towards 5,800, we could see a test of that upper call wall and iron condor at 58.40. Okay, trying to form a bias at this point. Not seeing much. You can see price action just sitting here, not moving. Supermicro coming back again. Supermicro pulling back after a nice move higher yesterday. Supermicro.
When you go on the board, you get locked up too, by the way. So you got to be in there for some period of time. I think, again, the first order of business is going to be, as I said, sort of focusing on and discussing, if there's change necessary in terms of senior executive ranks in some way. And then, listen, there's going to be, I can guarantee you, there'll still be some takeover chatter around this name. You've got, would Unilever ever consider doing something? Would P&G ever consider? How about Haleon? But Haleon would have to use all stock.
Okay, let's look at HII.
Procter isn't actual. I don't know where Procter feels in terms of being. That is going to most likely come around
HII.
around this name so far. There's nothing that's been going on.
Huntington Ingalls moving higher. Huntington Ingalls being mentioned by Jason.
To consider a sale. That's not what's being considered. Doesn't mean that it's rare, but that somebody might not make an approach. But I will tell you, I'm not hearing that at all at this point, but we'll have to watch. But one of the things that David received a really amazing award last night. I think we'll talk about thank you. Yes. But I was proud to be your partner and to be able to say, listen, you break that news. My analysis is, wait a second, we can sit here and moan on what to do with tariffs, or we can take a hard look at a company like Kenvue, which is a brand new board who's got tremendous assets, and others did, and wondering, geez, maybe this is a place to go, right? I mean, especially after the pirouette yesterday, where some of these stocks just got crushed. It's maybe interesting.
We had 70 million options contracts trade yesterday. Crazy volume on 0 day as well.
CNBC Business News. I brought them together for a panel discussion as I received this Lifetime Achievement Award from the New York Financial Writers. My two colleagues, of course, were in attendance, which I greatly appreciate. So many of my amazing colleagues were there as well. It was a great evening, and obviously it's a great honor.
Okay, Meta, a little pop, and then came right back down. All right, so Apple's dropping off a bit more. Apple.
Congratulations, David. Not many broadcast journalists get this award. Now, Mike Candell, Ray Brady, who are the others? Louis Kaiser, of course.
That was it, yeah. Yeah, no, it wasn't. Louis Kaiser, and I forget who the fourth was. Yeah.
Brief bit of sound from David's remarks last night. Take a listen.
Okay, just watching the futures. We're not going anywhere at the moment.
I answer an ad in the New York Times for a job at the newsletter division of Institutional Investor. I was an English major in college. I had never taken so much as a semester of economics. I get the job. Going to be the case.
All right, watching S&P. Do we push off of this and start heading towards that upper iron condor strike? Okay, 5840 is the upper short strike, so maybe a magnet up into that area. Right now, we're just watching. We start seeing a move above 5800. You could see a quick move like we saw yesterday if you want to do some quick scalping.
Interesting. Well, VIX is holding in pretty good up here right now. So if the high yield market catches up in that direction, we will certainly be having more growth scare discussions. So we'll revisit that topic in about 20 minutes as we start getting some data flowing in. Thanks, KG. Appreciate that. Let's look at some stocks with Diane King Hall, host of Morning Movers. All right, Diane, Abercrombie, I thought they were cool again. Maybe, did I get on the train right as it was crashing? Just kidding, I never got on.
I know for any of us now, if we're getting
Okay, we're starting to move here. All right, so let's see. What today? Okay, we're starting to move now. All right, watch for a quick move. Let's see what the SPY looks like. SPY's starting to turn. Okay, buy order blocks right before the open. We got volume at the open.
But here's the issue, guidance. They're projecting sales to increase between 3 and 5% this fiscal year. That's below the estimate Street was looking for, closer to 7% in terms of.
Okay, here we go. Here we go. We're starting to move. All right. So with this up there at the top, you can see the low stability at 6%. Okay, that tells you can see a fast move in either direction. You know what dealers are going to do. If we start to rise, dealers are going to start buying. If we drop below where we started the morning, then we're going to see dealers selling. Now, it's possible we have another day like yesterday where we have this very whippy action in both directions. So just keep that in mind. Above 5,800, look for a move towards 5,850 quickly. due to that low stability data point.
So, you know, if the tariffs are short-lived, that could obviously change the trajectory here. But in terms of investment,
Okay, Caterpillar. Let's see, Caterpillar.
right now that's stock down 15%, Oliver.
Okay, Caterpillar reversing. A 3-candle reversal on Caterpillar. Looking at that. Thank you, Mondo, for the heads up. That looks pretty good. It could be a multi-day move back up towards the 200 days. So you definitely don't want to chase it right here. You know, this is taken off to the upside after this move lower yesterday. A lot of the defense names over in Europe getting some action. This is Leonardo. Okay. We've got other names like Rolls-Royce moving higher again. Rolls-Royce. Thales. I think that's probably an English company. Okay, so defense names, watch those. Huntington Ingalls moving above the 50-day. Okay, and S&P moving through, up to, and maybe through some supply here.
Good stuff. Good explanation.
Okay, Microsoft starting to bounce. Microsoft starting to bounce.
Tech names real quick.
Okay, SPY. All right, we hit some supply right there, watching. Inside of this area of liquidity on the right, you can see that green band there. That's liquidity, looking for buyers to step up. Super Micro looking for the bounce. Yesterday had a nice little rally, looking for that to follow through. Super Micro, thank you for the update there, Armando. All right. Okay, looking for a follow through.
Worst looking chart considering how hard it's come off. It still looks like it kind of looks like the face of like Half Dome, the mountain. You know, it still is a very impressive run. Holding $80, I think, is pretty key on the chart too, frankly. So big support there showing up. Aristonet also up a little bit more love with an upgrade here.
Yes, upgrade from UBS on ANET here. They're boosting their outlook to a buy from a neutral stance on the company. Their new price target is $115 a share, so certainly some room to run from here, more than 30% upside over the next year it sees. Their view is the company's investments in data center capex will remain strong. They think also that the revenue guidance that Arista Networks gave was overly conservative, and so they essentially see just attractive risk reward scenario at the current share price. They believe just the overall AI infrastructure build out, since they see it as still in the early phases, that's going to be beneficial to Arista.
Okay, we're hitting supply.
Revenue should essentially line up with the spending that
kind of a slow morning so far. Okay, so Meta's trying to hold on to morning gains. So is Microsoft. Microsoft trying to push up after the lows that we've seen recently. Apple off this morning. Apple is off.
Thank you very much. Good look at some of the analyst commentary here for us. Market looking pretty good. Definitely better. Firming up across the board. Okay, not bad. but most of the other, everything else in the Mag suite is higher. We're going to talk some of the stress in retail some more when we come back looking at the dollar stores. It's a tough racket with inflation sticking around.
Slow morning. No doubt people are a bit apprehensive after yesterday's whippy price action. We're still watching for direction. Above 5,800, we could see a fast move to the upside. Below 5,750, the reverse and move lower quickly. The idea is that we can move quickly given the stability in the markets at a low number, below 10%. Okay. All right, so the markets are just sitting here for now.
Look at the composite from 50.4 mid-month to 51.6. Also, the best since January when it was at 52.7. Haven't had a sub 50 number there. Also, since January when it was under 50 at 46 and change. We see that the yield curve is steepened because of this notion of uncertainty has prompted more rate cuts. So short maturity treasury yields have dropped more substantially than long dated. And the motivation, at least for today, was 77,000 ADP jobs, about half what we're looking for, and the smallest number going back to July of last year. Squawking on the Street will return after a short break.
All right, markets are just sitting here, not going anywhere. Inside of yesterday's price action, that the body of that candle, PMI just came out. Rick Santelli talking about that. Oh boy, it's only 20 minutes into the trading day.
Next generation chips going to come from? Are they going to be built here? Are they going to be built in Asia? Where are they going to be built? My bet is some of them are going to be built here, but don't sleep on Asia. Asia will build a lot of GPUs, a lot of chips. Look at what ARM's doing and the ambition that Masa has. Those chips won't be built in the U.S. Some will be built in the U.S. Some will be built in Japan. So I think you have to take the long view on semiconductors. You have to take the long view on chips. And I personally am long-term on GPUs and chips.
All right, Mark, unfortunately, we have to leave it there. Hope to continue this conversation soon. Really interesting. That is Digital Bridge CEO Mark Ganzi. Meanwhile, let's get a check on these markets. We're about 19 minutes into the U.S. trading day. You can see the S&P 500 still kind of deciding what to do. Currently higher by about 0.1%. We know that we've seen a lot of pain over the past 2 days. A lot of questions around the will he, won't he. Okay, he did when it comes to tariffs, but maybe they'll roll back a bit. All of that volatility coming through.
All right, Supermicro are looking for a push higher. Markets are just sitting here. Feels like we could go in either direction very quickly, so I'm just watching for now. We're looking for a reflexive bounce back towards the 50-day. Pinduoduo trying to push a bit higher. Chinese stocks, keep an eye on them. ASML, chips, On Semiconductor, looking a little better. Intuit, rising. Broadcom, flat. Gilead, moving higher. Gilead's on the move again. Gilead. Okay, that one's pushing higher again. Gilead on the move.
Germany has historically underspent in terms of defense, right? We haven't always wanted Germany to rebuild their military, you know, and now they're rearming, maybe problematically, just as the far right starts to gain a huge amount of the vote, but nonetheless, they're going to spend $500 billion on defense. You see a 25 basis
All right, Gilead.
Energy by far the big laggard on the market this morning. S&P Energy's down a full percent. This is oil now down for a third day, approaching 66, and this would be the lowest settle since November of 2021. Keep an eye on that.
Okay, the New York Fangs are all mixed. They're lower and mixed, so don't have a signal there. Let's go take a look at junk bonds. Junk bonds had a nice pop. Let's see what it's doing right now. Okay, so junk bonds are looking a little better. So if you are a investor that would be trading junk bonds, you know that they are risk averse. So they'll get out of the markets when they think it's too risky, and they'll get back into the markets when they're not as concerned. Are they looking at the S&P bounce off of the 200-day yesterday? Inside day for now. No follow through. Here's junk bonds. Junk bonds back above the 50-day. Okay, we saw quite a bit of action yesterday. We were down at the 200-day, then back above the 50-day, then we closed right at the 50-day. So volatility is pretty high. Expect the same as we saw yesterday. Hopefully we'll get a trend up and head back towards the 50-day. For now, I'm just sitting and watching, not doing anything. There are a number of stocks that are moving higher that you could focus on, like Pinduoduo. This one's very gappy, as most of these Chinese ADRs are. Okay, ASML. Okay. Back to the 50-day. On Semiconductor. Trying to bounce. Okay, that's number 3 on the NASDAQ, so a little short covering most likely. CSGP, that doesn't ring a bell. CoStar Group. All right, that one's been in and out of the news over the last few weeks. This is choppy. I don't like choppy action. I like trending stocks, like Gilead, for example. Gilead, very trendy. That way you know when you get a pullback to the 9 EMA or the 21-day, once the buyers show up again and we resume the trend, it's very easy to see it. I don't like range bound action like this. This is very hard to trade. Okay, when I look at a stock, that's the first thing I see. Okay, then I look at the weekly time frame and I judge how far it is from the 10 EMA. A little extended there. Then I look at the 60-minute, maybe not necessarily in this order, but whenever I'm above the 60-day, I know I can be long. Look to be close to the 20 EMA, the green line, when I'm buying. I don't want to buy up here. I want to buy an ABCD pattern. So I'll look at a potential trade. I wouldn't buy it up here, so I'd be looking for a dip. So pretty straightforward. Daily chart. Looks good. Look at the weekly chart. Look at the 60-minute. And then look for an entry with a short-term chart. All right, so Gilead looks pretty good. Gilead. Okay, Broadcom. If you use this strategy, by the way, more often than not, you're going to have better results on your trades. Okay, we're dropping off here. We're dropping off. Watch the S&P. If you use this strategy, you'll probably do a lot better in your trading. Okay, S&P. Okay, now we're trading down in the other direction.
But this is a good company that was on a huge winning streak and now is just so despised. When you mentioned to me what could happen down the road after the president's done with this part of the agenda, you look at this, you'll say, how did that get there? But right now, you just can't look at it. You just say, I can't buy Abercrombie. And it's rather amazing because, boy, they were on a hot streak to beat the band.
They had some stellar earnings reactions these last few
Okay,
quarters.
S&P into yesterday's price action. Do we go down and test the 50-day? I mean, the 200-day again? Looks like it. Looks like it.
seller's going to be wrong. Then David Gitlin, a Carrier, the HVAC, they moved very aggressively into the data center. And ever since they moved into the data center, every one of those stocks has been crushed. But now they may be coincidental, maybe not. So, yeah, look, I'm trying to find good things. That's why I did my own favor report. Because I felt it can do. Listerine will be sold.
Okay, what are we doing here?
They will sell. Aveeno will still go. They always sell.
S&P.
Neutrogena product. Yeah, no, I mean they have to go. Why
You
don't
realize that David's going to want to do stop trading. So,
David,
get ready.
it's all yours, partner. Congratulations
Matt.
again.
Thank you, Jim.
And your family's great. Look, sorry your daughter wasn't there.
She's all right. She's busy studying.
We'll see you tonight, Mad Money, 6 p.m. as the S&P dips into the red with our eyes glued to DC and the tape.
All right. So we're testing the
money option premium.
testing the lower wick now.
So you get to collect that dividend yield, which is about a 1% dividend yield. Not a lot, but it pays you.
That iron condor noted in the bottom right.
Sure.
Okay, 57.05 is the short put side. We could go in either direction. If we start to move lower, we can move quicker to the downside because dealers will be selling futures more to hedge as well. Whereas the bounce, we could see a fast move to the upside as well. Maybe not as quick. But we had those fast moves yesterday. The move to the upside did take a little while longer. That dip in the last 45 minutes was pretty hair-raising. So I'm watching this bounce. Did we just get some shorts to commit? So far, that's what it looks like. Tick cumulative is green on the 30-minute. Okay, tick cumulative. The signal line is turning up on tick cumulative. Watch that. Also watch your 60-minute time frame. Okay, you want the 60-minute to be green. The signal line's trying to cross up and give us a bull cross on tick cumulative. That would tell us what institutions are doing. So let's go take a look real quick at advanced decline percent, which was moving lower yesterday, despite the New York FANG components all moving higher. All right, so we're all turned up. All right, so that looks good, except for the NASDAQ. NASDAQ was leading yesterday. Everything else was pushing lower. Towards the close, we had all of those New York FANG components for the most part. Okay, there we goes the futures in the other direction. Okay, we just popped in the other direction. There goes Broadcom, Meta, Netflix, some Microsoft action, some covering on Apple most likely. Okay, so big reversal there on the S&P. Okay, so we're starting to reverse here. Very windy here for those of you who asked. Very windy and rainy. What just happened there? Okay, 10 o'clock. We had a data point at 10. What was it? I missed that, whatever that was. Let me go to financial news. Okay, services PMI. That was TMI. PMI just came out. Let's see what Rick has to say. All right, nice pop on PMI.
Take a look at stocks. We started out with a nice little bounce rally. S&P, we lost it. We're coming back. S&P now up about 0.4%. So it's been a little bit choppy. The
Supermicro, nice bounce. Supermicro.
After a big sell-off yesterday into the close, the Dow is up 246 points. Very sensitive to these trade headlines that are coming lately and to the economic data. Let's look at treasuries. There's been a lot of buying lately, and treasury yields have fallen sharply. We're higher today, 422. So pretty steep bounce here from the lows. We were below 4.2 yesterday. The 2-year yield is still lower, below that 4% level. We're 30 minutes here into the trading session. Here are 3 big movers we're watching. Shares of CrowdStrike dropping, the cybersecurity company's outlook falling short of estimates. The stock also getting a number of price target cuts on the street. We're looking at an 11% decline right now. Novo Nordisk shares rallying. The company offering its blockbuster weight loss drug Wegovy for less than half the price through a new direct-to-consumer pharmacy. Also keep
All right.
keeping our eye on Tesla after another rough day yesterday. A price target cut, bearish sales numbers out of Europe. Stock is up though 1%. More on Tesla coming up.
Market taking some heart in these ISM services numbers. Let's get to Rick Santelli. Hey, Rick.
Yeah, the new batch of data looking pretty solid. Look at equities and rates both moving up. Factory orders for January coming in as expected, which isn't bad when you expect 1.7. In the rearview mirror, we went from -0.9 to -0.6. 1.7's best month-over-month change since July of last year. Strip out transportation, and it's up 0.2, exactly as expected. Now, let's look at durable good orders, shall we? Now, these are January final numbers. So 3.1 now becomes 3.2. And that, of course, is a positive number. 3.2 would be the best read. Going back to, you guessed it, July.
All right, looking for. All right, we just popped up a little bit, but not following through yet.
Unchanged matches our mid-month read. If we look at capital good orders, non-defense ex-aircraft, a proxy for capital spending.
Oops. Sorry about that, Rick. Come on. Come on. Come on.
July. And finally, what we have here is ISM, and also very positive. ISM 53.5. That's a full point better than expected.
Okay, you're hearing it. PMI is better than expected. PMI better than expected.
62.6 on services, prices paid. 62.6 would be the highest since December. And of course, we want this to go the other way. In the rearview mirror, that was 60.4. If we look at new orders, last look was 51.3. It moves in at 52.2. Also the best since the end of last year. And finally, employment. The employment index after a weaker ADP in front of the big jobs report comes in at 53.9. That's a solid read. That would be the best read going all the way back to D's of 21. So we see rates moving up. Yesterday, the low yield in a 10 was 4.10, 4.10. It's currently now coming back up towards 423, and the high yield today is 426.
Okay, so, all right, futures moving a bit higher.
That's good news. Thank you, Rick Santelli. Market reacting to that, as Rick said, we're higher across the board, although some sectors are still lower, like technology. It's weighed down by CrowdStrike. Utilities and energy are lower today. Besides the economic data, it's all about trade and tariffs, and there's some solace or hope, I think, being drawn today from what we heard from the Commerce Secretary, Howard Lutnick.
PMI better than expected is the bottom line. Now that we got PMI, people will shift back to what happened yesterday. Got to see what price action, what big boys do. Big boys, big girls, what do they do with this information? We already had junk bonds moving higher.
Negotiate this, and we do know that there's a conversation between Trump and Trudeau. Market likes conversations. When that's on the agenda, maybe we'll get some sort of truce or an exemption. Although if you listen to the president last night in Congress, you know, he did not back down from this tariff strategy and did talk up this April 2nd date where the administration is set to.
Okay, Broadcom on the move. Broadcom. All right, let's see if we can lift out of this here. A move above 5,800. We should see a quick move towards 5,850.
And whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth. Whatever they tax us, we will tax them. If they do non-monetary tariffs to keep us out of their market, then we will do non-monetary barriers to keep them out.
Microsoft pushing a bit higher now.
There'll be a little disturbance.
There'll be a little disturbance, but that's okay, he says, which is just another sign that, for anyone saying, oh, no, Trump's not going to deal with this market plunge. He's not going to deal with the weaker data. There's a higher threshold because he really believes these tariffs are in the best interest of the United States and will bring back jobs and level the playing field when it comes to countries, as he says, that are ripping us off. And just to further that point, David, there was a Barclays trading note going around. So it turns out last administration.
Okay, let's go take a look at junk real quick. Junk.
He posted on social media about the market.
Okay, junk, a little bit off the high of the day.
On social media last time around.
Okay, there goes the futures though. The futures are on the move. Okay, moving above 5,800.
Right. So ratio-wise, given over 4 years, 156, it does appear to be lower, given we're only 1 month in. It's funny. I come back sometimes to when Jim went up and spoke to him.
Okay, there goes Super Micro. Nice move on Super Micro.
Answer at that point as well, where he more or less, I'm paraphrasing, said, markets go up and markets go down, instead of the typical Trumpian response, which would be,
Buy America.
it's off to the races, baby.
But instead, he's focused on interest rates. And last night,
As is the Treasury Secretary as well, very much focused on the 10-year, Mr. Besson. I hear in all the interviews he seems to do, just none with us.
he'll be on with us very soon.
Good.
I think it's coming.
Good.
But
Keep working on it, Sarah. Make it happen.
But Besson knows that he's a bond guy. He knows that in order to see a fall in interest rates, you might have to see a little bit of economic pain and a fall in equity markets, which might be why they're tolerant. In the speech last night.
Okay, starting to bounce, starting to move. Can we get a little follow through here?
We saw a beautiful fall in interest rates.
So are you going to cause a recession to get interest rates lower?
This is the old saying, burning down your house to cook a steak. Although when you spend $3 billion a day.
Well, Carl, we know that you're
doesn't hurt.
not a big Trump fan, so.
Mortgage rates today? Yeah. In 3 months left. And we saw a big pickup in refinancing. So
All right, so just watching the markets. We're grinding. We're not really taking off. Just grinding up here, getting the bulls to bite now. Let's see if this is a bull trap. Okay. I really don't like sitting here down near the 200-day moving average. I don't like it one bit. Okay, let's look at the advanced decline again. Advanced decline on that number. Okay, so the S&P, higher, mid caps, small caps, NASDAQ. Okay, if you recall, just right before PMI, this was pointed down. Now it's pointing up. So we should expect to see some more. Okay, there goes Microsoft, a little bit better. Apple, a little bit of short covering on Apple. Apple down there near that 230 level.
Is talking about. I mean, is this the reciprocal trade tariffs that Mexico and Canada will not be dealt with, or is there going to be some rollback of the 25% that just went in place as a result of what was supposed to be interdicting fentanyl or trying to get, stop?
I don't know. It seems like he was talking about that, the 25%.
It felt like that too, but then I thought that was about fentanyl deaths. That's what he said on our air.
Yeah, that it was a drug war, not a fentanyl war. They clearly are trying to exact concessions from our trading partners, and it is all about sort of leveling the playing field, even though they're also trying to target the fentanyl and the drugs that are coming across the border. I just wanted to mention private sector jobs because it was a big.
Okay, Robinhood with a little bounce back to 46 and change.
You said it'll take years. What could happen?
Okay, it's flat. It's up 3 cents. It's off 2 cents. All right, so Robinhood's flat at the moment. Supermicro trying to continue. Bottom line, the breadth looks good. All right, so the 60-minute just went green. 60-minute tick just went green. Okay, with a crossover on the 60-minute. Okay, so tick is showing you that dealer or that institutions are buying more than they're selling presently. That doesn't mean it can't change because of the volatility we've seen lately. If you're day trading, this is good for you. If you're day trading, you get these quick moves. You can make some quick coin. If you're a swing trader, it's a little bit nauseating. Back and forth, makes you question your entries. You have to have a good thesis. I'll give you a good example. All right, we talked about this a few minutes ago. All right, so let's say you want to get long in some positions, then look for stocks like Gilead. Okay, if it doesn't look like this, then pass. Okay, the stock doesn't look like this, then pass. Okay, this is a nice bullish trend. It doesn't deviate much. Very nice follow through. You got volume. Okay, so look for stocks like this versus what was it we were looking at? On Semiconductor? No, it wasn't on. It was what was it? ASML? ASML? Yeah, you see, I mean, this is much more choppy. Okay, this is a lot more choppy. So in a market like we're dealing with right now, you don't want to be in a stock like this because you're going to question your entries. You know, look at the entry just 6 days ago. Looked like we're going to break higher, and then the next day you get this big drop. Okay. Gilead, nice trend. We've been watching this pharmaceuticals. They're doing well. Merck, I'd like to see Merck up again today. Okay, Merck, 2 steps forward, 1 step back. Merck, looking forward to get above the 50-day. Johnson & Johnson. Okay, nice trendy stock. Does it bounce right here? This is exactly what I'm looking for. Okay, so if we get a bounce, we'll know. We won't know until tomorrow, most likely, unless it produces a hanging man candle. Let's look at that was Johnson. Let's look at Abbott Labs. Abbott Labs, AstraZeneca. AstraZeneca. Survey says, okay, we're waiting for stock charts to display. Okay, my screen's locked here. Let me see if this unlocks. Okay. AstraZeneca trending. Okay, this is one we pointed out along with, was it Abbott Labs? No, that Abbott Labs. Abbott Labs was the one we looked at. No, that's not it. What's the one on the watch list that we were looking at? It was GSK. All right, so another stock, GSK. Look at this one, okay? We looked at this 2 weeks ago. Nice little trend. Now, it doesn't move a lot. It's got an ATR of about 70 cents, okay? About 70 cents. So buying off the 9 EMA after you get the first reversal into that candle 4 days ago, nice trend. Okay, so you can just stick with this. 9 EMA crossing up through the 200-day most likely continues higher. Some of the energy stocks like Con Edison, Edison International, electricity, EIX. This one looked good yesterday. Okay, there goes Microsoft. All right, so these are starting to move. Microsoft coming off the low. Microsoft day 2 looks good.
It's likely to be a little bit on the unit volume, potentially, and a little bit on
Microsoft day 2 on the reversal.
Model of earnings would suggest that if tariffs, which are currently around 3%, if they would go up by potentially 5 percentage points to 8%, Sarah, that would reduce our earnings estimates by 1 to 2%. So instead of growing at sort of 9% this year, 7% next year, it could be slightly lower as a consequence.
So every time he comes out with new tariffs, do you revise your earnings expectation?
Well, no, we have a sensitivity model, so we understand what the impact would be, and the reason we don't.
Okay, just watching the S&P. No follow through after that PMI number.
Timing, the specifics of when the tariffs may.
Can it be a doji today? An inside day? Frustrate everybody? Probably. Okay, let's look at the charts. 0 day. Okay, it's 2-to-1 up volume on the NYSE. Let's take a look at the NYSE. Okay, NYSE. Okay, yesterday the NYSE dropped below the 50-day for the first time since the last week of January. Okay, we're back below the 50-day. Looking for a move back. All right, so this was towards the close, towards the last hour, this was back above the 50-day. And then we had that late evening sell-off and pushed us back below the 50-day. So now we need to get back above. RSI is starting to turn up. So it would be good for the bulls if we can manage to get back above the 50-day. It's very choppy price action. Here's the weekly consolidating at highs. Let's look at TRBCX. I'm looking at long-term indicators. TRBCX still pulling back, so I won't add to my TRBCX unless we see a base like over here, where we pulled back from 179 to 156. I'm watching for that kind of action to indicate it'd be safe to do something in my IRAs or 401k. S&P still sitting here.
Most recently, so there's some concerns. And in our view, my view,
This thing could go either way.
evidence that the growth is
Okay, up down volume and tick cumulative are green. Advanced decline is green, so we're giving the odds to the bulls for now.
Some of the data that's consistent with some of the data being weaker, and the way to combat and then navigate.
If you're an investor, if you have an investing time frame and you're just listening to the back and forth during the day, I would just sit tight, wouldn't do anything, wouldn't put money to work at the moment. Okay.
Have traded less consistently or less in line with where cyclicals versus defensives have traded.
And just sit back and wait. Okay, we want to see how the markets start to trade out, maybe get some more good news, you know, like Zelensky and Trump talking yesterday, signing that rare earth minerals agreement. And maybe with Trump talking to Trudeau, maybe there's something that worked out there. All right, so I like the fact that he does these tariffs to get conversations moving, because the way things are previously, I mean, there's just we get taken advantage of. You may not believe that, but if you look at the data, you'll see that we charge the least when it comes to tariffs, products coming into the country versus our products going into other countries. So I'm not an economist, but I got to believe talking is a good idea. Negotiating, ripping up agreements that don't work, that are proven to not work for, you know, us in this case. All right, so we're starting to drift a little bit lower here. Okay, so there's no concerted move to the upside yet.
We'll get to that next time you're on, David. Good stuff. Thanks for coming in, David Kostin. As we go to break, look at the roadmap for the rest of the hour. NVIDIA and the semis rebounding a bit today.
Just feels like one of those days where we're going to chop around. Note the over on the left. Okay, let me just turn this off so you can see just this chart. Okay, note the resistance overhead, the supply, the liquidity down below. So we could ping pong between these levels and get people to go short at the wrong time, go long at the wrong time. I'm just watching this ping pong because that's exactly what we look like the game ping pong. If you're old enough to remember that one. One of the first video games, electronic video games, aside from pinball. He's a pinball wizard. I was not a pinball wizard. Great song. All right, so we're just sitting here watching the markets ping pong between these levels. I'm pretty confident that this is what's going to happen today. I'm looking at up-down volume, and we can see it's 1-to-1 on the SPY. It's a little bit higher on the Qs, 2-to-1 on the Qs. Let's take a look at the Qs real quick. Qs, okay. Qs, all right, so we're looking for liquidity down below. We don't see the liquidity down here, okay? So let me zoom out. Let me go to the 60-minute. See what we can glean from that. Okay, 60-minute. Okay, we got supply overhead, but no liquidity down below. So this is a little more precarious. Okay, so we need these stocks like Microsoft to continue higher. Microsoft, this is day 2 on Microsoft. We could see Microsoft move higher. Microsoft showing strength, so you can see the volume here. I'd like to see it pick up like yesterday, Microsoft. This is day 2 on Microsoft, looking pretty good. Okay, so Microsoft, volume above average yesterday. Okay, and Friday. Okay, we're trying to build the base down here. 380 below 381. All right, so futures pulling back a bit more now. Okay. Got the resist trying to take puts. Okay, bouncing around.
By the way, I have a similar problem. I can't do cursive because I think that was being taught in the second grade when it was Jewish holidays and I wasn't in school, so I can't really write cursive, so I don't have to worry about this. I'm not going to be Secretary of Treasury. But there is a proposal now to have a $250 bill away before you get your picture on it. But do you have any comment on that? Well, my only comment is why would he pick 250? Let's go for 1,000 if they're going to pass the law, okay? Well, when you were Treasury Secretary, you did work on, I think, having a woman on the dollar bill. Was it the $20 bill or something? It was going to be somebody, but it took years to get it done. Hasn't happened yet. Do you actually think there will be a woman on the dollar bill in our lifetime?
Well, David, what I was focused on, and I knew it wasn't going to be my decision. It was going to pass over. I don't know if it'll be Scott Bessent's or not. But what we were very focused on the time is the issue around the dollar and so that you couldn't replicate it and the security features of the dollar. And there are changes that I can't talk about.
Okay, NVIDIA is still grinding a bit lower. NVIDIA. Bitcoin grinding lower. All right, so everything is just kind of chopping around right now. This is one of those days where the more active traders are going to be more frustrated, usually, because you think it's going to drop off. You're not looking at up-down volume, and we get a bounce like we're starting to see right now. You just took a short. Now it's starting to move in the other direction. Now you're going to go long. You flip it back to long, gets back up to the previous 20 minutes resistance, and it drops back down. You get frustrated again. My experience is that you need to sit and wait for that trend. Okay, remember what we were just talking about. All right, so we were just talking about, is it trending? Okay, is the stock trending? Very obvious trend, very smooth looking chart, or is it chopping around? Okay, I don't like choppy price action. Let's see what CSGP, what was it? CSGP, was it? Yeah, choppy. I don't like this. This is not my kind of my kind of stock, okay? This is not going to help you out any. Let's take a look at Super Micro because this is starting to get that kind of look too, all right? But the good thing is we're bouncing off the 50-day, so we have that as a reference point. I don't like this kind of price action though. Kind of similar, but not really. It's a little bit more smooth price action. So I can clearly see the high, the low. What are the odds that I'm going to move back up? And if not, I got to stop right below. So I'll get a very close adjacent stop, knowing what the daily price action is, $5. Okay, we're only up 60 cents. We're right above the 50-day. I like this much better than ASML. Okay, ASML is just, I don't know, too choppy. Back and forth. The other one was, what was it? CSGP? CSGP. So on a doji day, you're going to get chopped up. Apple's still moving lower, so that short's working for Corey. Robinhood, drifting back. Robinhood, let's take a look at Robinhood. Okay, Robinhood. Okay, this needs to start trending again. All right, so a good example of you don't buy just because it hits a 9 EMA or a 21-day or a 50-day. You got to wait for the price action to push higher. I made that mistake on Monday. I'm down a little bit on Robinhood, but I'm selling covered calls, so it's bringing my cost basis down to 46. And if I do it again on the next bounce, I'll do it again, bring my cost basis down to say 45 or 44. Looking for that to turn back up. But the pharmaceutical stocks look really good. Abbott. Okay. Today, pulling back. Bristol Myers. Okay, Bristol Myers is in that category of not trending. It's in a range-bound condition, so it needs to break out. Okta, the CEO's been on the news a lot lately. Okta, day 2. Okay, Okta. All right, so this could start trending too. I'm not going to chase it. I'd be looking for an ABCD pattern. Okay, nice trend. Okay, Meta we talked about. Okay, want to get an ABCD pattern. Kind of ugly pattern right now. So Microsoft. Okay, Microsoft. Okay, trying to pull away from the shorter term moving averages. Microsoft day 2. Okay, so we're already starting to see a little bit of selling into that candle. S&P. Okay, look, we could slip out of this area. So if we do move lower, this could go pretty quick. All right. So given the ping pong situation, be ready for a move lower. Okay, watching the futures. We're not going anywhere. All right, tick cumulative is grinding higher. 60-minute, the signal line starting to pull away from tick cumulative signal line. All right, all these little nuances are really difficult to read right now. We got mixed signals. As far as difficulty to read, I mean, there's mixed signals. All right, so you got one thing that's looking good, one or two things looking good. Let's see, Bitcoin pulled back. So that's a mixed signal. Bitcoin moving lower, sitting at the 200-day. You got MicroStrategy. Okay, MicroStrategy fading from the open. And the New York FANG. They're just telling you don't do anything right now. Meta. Okay, Meta. Doji, inside day. Below the 50-day, RSI could turn up. It all depends on what institutions are going to do. I don't like the S&P sitting down here any more than you do. I mean, this could drop off and test the 200-day real quick. That's 57.30, right around there. Don't like it. Apple still drifting lower. Wow, Apple down to 230 now. Getting down into the 230 handle. Apple, let's take a look at Apple. Okay, Apple looked like it was going to get above the 50-day. Flat 50-day, 200-day right. Excuse me. Whoa, where'd that come from? Oh, boy. All right, so the 200-day right here, Apple. S&P. I guess what you could do is sell an iron condor. Just feels very risky, though. All right, so we're starting to pick up a little bit. Here goes tick is starting to pick up a little bit more. Okay, so it's probably going to take a little patience. All right, so I'm going to take a 5-minute break. I'll be right back. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's Wednesday the 5th. Just listening to Bloomberg at the moment. Steven Mnuchin talking, former U.S. Treasury Secretary. I'll be right back. It's 10:30 on the East Coast.
and you're sitting there with the members of Congress and they say, I'll give you this and you give me this. And how does that really work? Are there trade-offs, or everybody says we just have to do what's best for the American people and we're not going to do any trade-offs or deals? Well, first of all, there are no smoke-filled rooms. That may have happened in gas, but at least when I was there, nobody was smoking. No, I think that, in a sense, we worked very closely with the House and Senate. These are huge, complicated issues. Of course, there have to be trade-offs. You have to think of how they were paid for. So, when we did this the first time, it was $1.5 trillion static, $1 trillion dynamic, and we had about $500 billion of what we considered to be baseline issues. So, of course, there have to be trade-offs. And then I would just comment on, even once tax reform was passed, we spent the next year writing tax regulations in Treasury, which is a very important function to institute the law. So if you were king for the day and you could make any change in the way the economy, the finance structure of the United States is based, the spending is done, what would be the one thing you think we should do to make our economy better or make our financial system better than it is today? One thing. I would reform the spending process and the debt ceiling process so that there was a real process of the administration having a budget, that budget going through Congress every year, and that kind of the focus around spending. Okay, so for the time being, you're going to be in the private sector, you're not going to be drafted back in the government, and you're happy with the highest calling of mankind that you're now pursuing, private equity, right? The highest calling was serving the people in my government. I know you think this is the highest, David. I know you've been terrific in advising and helping presidents, and I'm sure you'll also give President Trump a bunch of advice. Well, I don't know if he needs my advice. Certainly not on the Kennedy Center, probably, but we'll see. Okay, I think we're out of time. So we're out of time? Right. Okay. Steve, thank you very much. Thank you.
All right, starting to push back up now. You see what I mean? If you took a short right there, now you're starting to see it'll move higher, so you're going to question your entry. We're just going to chop around right now. Chop.
Considering what's happened with tariffs, we've heard Howard Lutnick, well, first, before the tariffs went on, he said maybe it won't be 25%, and then they were 25%. And now, 36 hours later, he's telling people that President Trump may take these tariffs off. Well, that was pretty short-lived. So I think investors are really having a hard time figuring out exactly what bets to put down. And in that case, I can understand why we'd have low volume. I can't understand if you've got the Commerce Secretary out there signaling that these tariffs are not going to live very long. I can't understand why this market doesn't rally a little bit from the big dents that it's taken the last couple of sessions.
Well, maybe like you said, maybe a wait and see mode. We know that we have jobs.
All right, starting to rise now.
On Friday, a really difficult environment for traders, but maybe if you have a longer term.
All right, the New York Fangs are starting to see more short covering. New York Fang components, many of them are seeing short covering. Apple, not one of them at the moment.
We're so focused on the day-to-day, but you guys are taking, 5, 10, 20-year views on these things. Steve, let me start with you. What does your investment horizon look like, and how do you deal with the day-to-day headlines of such a volatile administration?
Well, I'd like to tell you we ignore the headlines, but we truly don't. We're long-term investors. We've got liabilities that are multi-generational, and we do tend to focus more on 10 and 15-year investment horizons. But we watch and monitor the changes that are going on down in D.C. with the current administration. I to get a sense for, do we need to rethink our strategic allocation? Are there things that are changing on the horizon?
All right, Microsoft looking a little bit better. Microsoft trying to push.
Considering allocating to external managers and the like, how do you factor in what's going on?
Nvidia starting to turn.
So we take a barbell approach, I would say, to it. We do a lot in the privates where we can just kind of ride through the volatility, where we're really looking for 5, 7, 10-year type returns, and not worrying so much about the day-to-day. And then at the other end of the barbell, we do allocate money to hedge funds and long-only managers that are much more in the flow every day. And we're seeing, right now, we're seeing there's not a lot of signal in the noise, right? The signal to noise ratio is a little out of whack. And so we're finding people who can we're trying to find managers that can really trade around that and take advantage of the swings when there's not a lot of content in them.
Well, you mentioned privates, and this is something I'd like to hear from you both. How do you construct a portfolio with privates? Obviously, private assets have been one of the hottest topics of conversations within these halls and walls. And we heard from Dawn Fitzpatrick, the CIO of Soros, yesterday, saying that actually she thinks private investors are in for a world of hurt when you think about the returns and the liquidity in the public markets. Obviously, Soros is doing something different than the investment objectives you're trying to achieve. But how do you weigh that?
So we're finding that we like privates, again, given the longer term. So our liabilities are a 10 to 15-year duration. So we're thinking about that time frame. And then we're just finding that there's a lot of challenges, I would say, in the public markets, right? So you've seen there's a lot fewer public companies now. Given how strong the markets have been, there's been very little IPO activity. And you have David Solomon of Goldman Sachs telling people to not go public. And so for all those reasons, we do think companies are going to spend a lot longer in the private sector, and we want to go and grab that economic value added through. If it's not going to be in the public markets, we'll grab it in.
Okay, nice move on Microsoft, following through. All right, markets are starting to lift, but again, Doji, we need to break out above the morning range. Okay, so we got to get above this range, this little line right in here. Need to get through that area there. We'll take the bodies. Okay, Microsoft looking pretty good. Microsoft looking better. Microsoft grinding higher. Microsoft day 2 on the reverse. All right, Apple's starting to look like short covering. Apple short starting to cover. Amazon looking better. Amazon. Okay, futures though, S&P still sitting here. Bollinger Bands are tight. That's the other thing. Bollinger Bands coming together. So whatever direction this takes, it could be a fast one.
Ago in privates were just under sort of high teens, and today we're right around 30 with a plan to go to 35 over time. All right, unfortunately, guys, we have to leave it there. Really enjoyed this conversation. That is Anne Marie of this Meanwhile, we check on these markets right now. It's been a pretty rocky ride over the past couple days. You take a look right now, pretty quiet. A lot of the action is outside of the benchmark levels, and you can see that under the hood, though, there is quite some movement. General Motors, Ford, and Stellantis all mightily higher after what we heard from Commerce Secretary Howard Lutnick on the Bloomberg TV earlier today.
Yeah, this is really another one of the big market moves.
Taiwan Semiconductor.
We will continue to play sound.
Taiwan Semi looking a little better, back above the 200-day. Yeah, I agree, Mr. Kurtz.
Still pouring into the country, and it's got to stop. So what's happened is they're showing us even more ways to try to stop the flow of fentanyl. And if they can stop the flow of fentanyl, the president is open-minded. There are going to be tariffs, let's be clear. But what he's thinking about is
I mean, how can you not be against the flow of fentanyl? You know, you can hate President Trump, but I mean, fentanyl, if you have children and you're not worried about fentanyl, I don't know what to say. I'm worried about it constantly telling my son, you know, you don't take any shit that somebody gives you, no matter what they say. This stuff can kill you, you know? As a parent, it freaks me out. My boy is so important to me. So are my daughters, but my boy is just too important. Stop the frickin' fentanyl. And China just keeps letting it be shipped. Really pisses you off. All right.
And that was Commerce Secretary Howard Lutnick speaking on Bloomberg Television earlier today, teasing that we might get maybe a rollback of those tariffs that went into place on Canada, on Mexico, perhaps this afternoon. We'll certainly keep our eyes and ears peeled for that. But let's get back to the Bloomberg Events main stage right now, because the CEO of TIAA is sitting down.
All right. We're still squeezing, looking for a big move.
So we have been in the business of guaranteed income for over 100 years. And I can tell you that not a day goes by that I hear from either a participant or a family member that says, thank you. My dad is now 90 years old and he's still getting that check. You know, my mother is 80. Her husband passed away and she's still able to get that check from TIAA. So the point is that guaranteed income was an annuity. It was in their retirement plan. And so when I think about where we are today, you're right. There's so many permutations around annuities, so many different flavors. And so we as an industry have to make sure that we can
Amazon pushing. Trying to push a bit higher. Amazon. Day 2. Has this turned into a reversal? I'd like to see more of these stocks move higher. Tick cumulative is still green on the 60-minute. The signal line is moving away, up and away. Momentum does look a little better. Momentum is shifting. Okay, we've got 1, 2, 3, 4, 5, 6, 7 out of 12 sectors green. 7 out of 12 are green. 6 out of 12. All right, so it just went to 6 out of 12. Communications are back and forth due to Meta. Looking a little better, but it still looks like a doji day is possible today. Just chopping around. Squeeze. Doji inside day.
we want to make sure that we are investing in a way that our participants can feel confident that 20, 30, 40, 50 years from now, that the money will be there, it will be well invested, and they will be able to have income that they cannot outlive. And so when we look at what we're doing, we have our general account. We also, with Naveen, have third-party assets. And what's important there is whatever returns that we're getting from Naveen, that ultimately goes back to our participants. We return all of our earnings back to our participants. And so that allows them to get outside performance over time. And so within our company, we serve the 403B market. We've done that. That's a nod to our heritage. We will continue to do that. We see that there's tremendous opportunity to make sure the people that are helping and serving so many millions of Americans, whether it's higher ed and healthcare, can feel comfortable and confident about their retirement plan. But we're also, in partnership with Naveen, taking that benefit into the 401k market so that companies.
All right, still squeezing. Whatever direction they pick, that's the direction I'd go with. You could see a fast move due to the instability of the markets right now. Watching momentum it's favoring a bullish move, but doesn't mean we can't see the opposite. 6 sectors are green, 6 sectors are red. Healthcare and real estate are the strongest right now. Healthcare, let's take a look at healthcare and real estate. Here's healthcare and real estate, XLRE. Looks good.
It's not a red state issue. It absolutely is an American issue that we can all relate to. And so I am optimistic. And the reason why I'm optimistic is that the policy that we have been able to achieve over many years as an industry have been bipartisan. It did not matter who was in office. It did not matter issue that everyone came together on. And so I'm looking forward.
Still squeezing. Tick has just been above and below zero line. Plus 500, minus 500, just back and forth.
We cannot close this retirement gap without private-public partnership. We have to have good policy, and we have to make sure that we in the private sector are doing our part to educate our employees, to make sure that the plans are designed so that people can have access no matter where they are within their employee base, whether they're senior executives or the people that are on the front line or working in the mailroom. Having plans that are designed in a way where you have education, in a way that it has exposure to equities, bonds, and insurance, and having great policies so that more people have access.
All right, drifting a bit lower now, testing a low again.
I'm sure have paid attention to the recent conversation about that. Has it changed notionally the way that your company approaches these issues? What do you make of companies that have, in light of this increased scrutiny, stepped back from some of the commitments they made before?
Yeah, I mean, I'll speak to it through the lens of TIAA and through the lens of me being a CEO. You know, I think that for us, our values are very clear. You know, our values go back well over 100 years, and that will continue to remain. I've always said that talent is created equally, opportunity is not. And so if the objective is to continue a pursuit.
Some of the nice returns that could have been achieved had we been a little bit more invested in a traditional allocation space.
Tick cumulative giving a slight hint. Tick cumulative is giving a slight hint that we might see a move to the upside.
If rates start to, if we do start to see that rate decline, they tend to sink a bit faster in sort of in money market yields. Obviously, that will be a push into that ultra short space or possibly other parts of the equity market.
Junk, back to a doji again today. Junk. Bitcoin fading from the earlier high. Let's see what IWM looks like. IWM. Doji spending top. Biotechs. Biotech's a little better. Bouncing off its lower Bollinger Band back to the 50-day. Signals are very mixed, folks. Signals are very mixed. Equal weight index sitting on the 200-day. Advanced decline percent.
I think where most of the questions that we get from them.
Okay, slight leaning to the long side. NYSE. Let's see what the new highs, new lows can tell us. Still below the zero line? Yes, barely. Yesterday was pretty intense. Okay, advanced decline is starting to drift a little bit lower. And we got red elder sticks again. All right. The XII, the ARCA Institutional Index, what institutions are doing. We're right at the 200-day. Pretty much looks like everything else. Okay. Got a bearish signal on high low. The cumulative S&P 1500 is still bearish. There's more risk to the downside than there is to the upside. It's going to take us several days for us to hold this level if you're bullish. So there's no hurry to do anything. We looked at TRBCX earlier. Okay, if you're a investor time frame, you're just waiting. You're waiting for the opportunity. Okay, so we're just watching. Similar, if I were looking for an area to put money to work, okay, I'd be looking for this kind of action like this right here. Okay. Okay. This is not a guarantee, but I'd like to at least see consolidation of this move. Okay, right now we're just waiting to see where does this stop. Okay, if I'm going to invest in a long only fund in my 401k or IRA, this is what I'm watching for. Do note that we've been in this uptrend over 120% up to that high. So a pullback of 382 wouldn't be out of the ordinary. Okay, let's see what that looks. Oops. The other way around. Okay, so 382 would be about through 155. Let's go to 236. 236 is right here. Let's go to 236. 236 is just a little bit lower. Okay, so the risk is there's more downside potential. So if you're an IRA or a 401k investor and you're in your 20s, early 30s, or even in your 40s, many years before retirement, you want to be watching for the next consolidation. Having driven up 120%. Okay. Okay. So it's a little, you have to have some patience. You have to have some patience while we're waiting for this. Okay, looked really good yesterday. Okay, so far we got a bounce off the 200-day. RSI is oversold, so that could turn very quickly. We had distribution volume yesterday. Stochastics looking for that to turn up along with MACD. So it's a matter of tapping your foot and waiting at this point. You don't have to be right every time. You just need to be right most of the time. Okay. So waiting for this to give you a signal is a lot better than taking the signal and getting chopped up, taken out of your position, second guessing your position. That creates uncertainty when you're investing and trading. So, let's wait for the signal. Okay, we don't have a signal right now. All of the New York FANGs are mixed. Amazon's trying to push, so is Microsoft. NVIDIA trying to do something. Tesla, maybe it turns. Robinhood's trying to turn back up. All right, tomorrow we got jobless claims and then wholesale inventories, and then jobs report on Friday. Does Zscaler have earnings? I believe they do, right? The CEO is going to be on tomorrow. Zscaler. Okay, March 5th, after the close today, Zscaler, the CEO is going to be on Yahoo tomorrow. He'll be doing the circuit tomorrow. Okay, Zscaler looks pretty good. This is Zscaler. All right, so here's Zscaler. Let's look at Okta. Okta reported yesterday. Okta. Okay, their earnings were 657%. Beautiful. The CEO's been doing the circuit, talking about the company, about how they're focused on things that maybe the other big companies are not. Zscaler reports tonight. We could see a repeat of Zscaler beating expectations, hopefully. Okay, let's take a look at Zscaler and Okta. Here's Zscaler sitting on top of the 200-day. So I might do an iron condor on this one. Okta post earnings. Nice clean chart. I wouldn't chase it up here. Look for a ABCD pattern. Okay, I got to grab my son. I got to go take him to school. Okay, S&P.
Going back to the downside, you also got your S&P 500 down about a 0.1%. The market digesting commentary about the implementation of tariff policy, but also that weaker than expected ADP numbers.
Let's take a look at TLT real quick. See what that's doing. TLT. Or TLT. Talked about this on Monday, that the last time it moved above the 200-day, it failed. So that's what we're looking at right now. So the yields must be moving higher, 10-year yield. Okay, the yield's back above the 200-day. All right, so we're going to get choppy action here, back and forth with Trump. Hopefully Trudeau and those conversations go well. All right, I got to take my son to school. I'll be back probably right around 12 o'clock.
So this is a good opportunity for investors to take a look at their portfolio and make sure that it aligns with their risk tolerance, and that volatility is not going to cause them to do something painful or harmful to kind of their long-term wealth if they can't handle this on a go-forward basis.
I think given that so much of the double-digit gains that we've experienced for the past 2 years have been in a large part due to the lift in tech stocks, we've seen a lot of younger people in particular shifting a lot of their portfolio allocation to those large cap big tech names. Should younger people who have a little bit more timeline ahead be rethinking allocation to big tech in this environment?
Look, I think no matter kind of what type of investor that you are, technology is going to be a big component of your portfolio. It's such a huge component of the S&P 500, which is the index that a lot of investors gravitate towards here in the United States. However, there are other places to invest besides just technology, and kind of when specific headwinds or tailwinds to technology kind of cause outsized influence to the upside or to the downside. And here specifically, we can talk about artificial intelligence investing. We've had that be a huge tailwind to technology the last couple of years, but so far this year, it just hasn't really been that. And if you're overly concentrated towards U.S. technology, you miss some of the rotation that's happened within markets, specifically international equities having a good start to this year, which wasn't the base case for a lot of investors as we started 2025.
So it sounds like this moment is a reminder that it might be good to own the index, to invest in ETFs that are tracking the broader S&P 500 as opposed to maybe allocating too much capital into one sector versus another?
I think that's correct. I think if you look at long-term returns in a portfolio, what you get paid for doing is by kind of diversifying risk in a portfolio. You don't necessarily get compensated well in terms of owning a lot of what's called idiosyncratic risk or stock-specific risk. We invest in individual equities as well, but that's well diversified across the portfolio. If it's concentrated risk that we're talking about as it relates to technology, that can have outsized impact to the downside as well as to the upside as it relates to a portfolio. It's just sometimes a lot of investors tend to overestimate their tolerance for that level of concentration and find out after the fact when it moves against them that they just didn't have that risk tolerance going into the trade.
And what about investors nearing retirement? If they are concerned about the next couple of years, more volatility under the Trump administration, should they reposition?
Well, I think if you are an investor that is nearing retirement, talk with your financial advisor, come up with a portfolio that makes sense to you. There are other investments.
Chop. I'll leave here shortly.
Or overall equities specifically. I think high-quality fixed income still remains an attractive place to invest. And it's shining through this year.
Would be pretty easy for them to hit the accelerator or to drop the markets from this point. Watching the New York Fangs, we got mixed signals. So as far as days to do things, we got mixed signals. We got 6 out of 12 sectors green. If you're going to point at anything, look at healthcare and real estate. Industrial seeing some action, consumer staples, and materials.
They operate the New York Stock Exchange, and higher volatility in the market markets translates to higher trading volumes for their market business. And then outside of that, you do have a recurring high margin business in the form of selling market data out to professional investors, as well as the potential that if these tariffs cause growth to move lower, and with lower growth comes lower rates, that's actually some of the cyclical tailwind to the mortgage side of their business that has been under pressure from higher rates causing a lower level of activity in the housing markets. And so if that were to change, you get the cyclical upside in the mortgage business, which is continuing to grow despite the depressed levels of activity that we're seeing in the housing market today.
All right, Matt, we got to leave it there. Thanks so much for joining us. We appreciate it. It's time now for some of today's trending tickers. Scan the QR code below where you can track the best and worst performing stocks of the day. Yahoo Finance's trending tickers page. First up, Novo Nordisk shipping its weight loss drug Wegovy to cash paying patients at a reduced price of $499 per month. That's down from over $13.
So a move lower, we know what dealers are going to do. A move lower, dealers will start selling. That could exacerbate a move down towards 57.05. Okay, a move back above 5,800. Look for 5,850. Right now, we're just chopping around with a leaning towards the short side at this point.
Getting an upgrade at William Blair to market perform from underperform, and it was Louis DePalma touting the company's government contract, saying despite risk of a 40% plus drop on potential delays, these government deals have been stickier than envisioned. The batch of deals made in the fourth quarter could bode well for first quarter revenue growth. The analyst also noting the company's AI pipeline could support the stock value moving forward. You see their shares up just about 0.6%. And major averages off to a rocky start for the year, and with more market uncertainty following the implementation of the president's tariffs, Yahoo Finance's own Carrie Hannon is here to share some ways to protect your retirement nest egg. Carrie, always a pleasure to speak with you. Talk to me about what retirement savers nearing retirement can do to protect their retirement accounts.
Absolutely. Thanks for having me on. Volatility is often just noise, right? So it's really important to keep a disciplined, long-range outlook on how, no matter if you're nearing retirement, because you may have 30 years in retirement, so you need to. So the first thing, number one, I tell people and all the advisors I've spoken to today, say wait. Sit on your hands a little bit. Wait before you make any big emotional moves, okay? Number two, it's important to stay in equities, no matter how close you are to retirement, because you need to stay invested here. This is where your growth is going to continue to come from. That said, the older you are, and the closer you are to retirement, you need to shift a bit into, some cash equivalents or some great fixed income opportunities, because you want to have 5+ years of living expenses, right? We're just at the beginning of what I would anticipate to be a few years of volatility. So keep in mind as well, if you're invested in your 401k retirement plan, or if you're set up in auto investing with your IRA, you are regularly making investments when the market is slow or when the market is hot. This tends to even out over time. And if you're in a target date investment fund, you have managers there that are slowly readjusting or reallocating your portfolio to keep up with the risk allocation you've identified as appropriate. The final thing I would say is, please make sure you meet with your financial advisor if you have one. Sit down and talk through, is this really making you nervous? How does this volatility impact you? You might, with their advice, you might make some shifts in what your allocations are going to be between equities and fixed income. But this is someone you should bounce the ideas off of before getting too emotional. And so periodically you should be rebalancing anyway, but this might be a good time to have that conversation. The final thing I'll add here, Maddie, is that I ride horses, I jump jumps, right? That's one of the things I love to do. You know what? I don't focus on the jump, I look beyond the jump. And I think that's exactly what any retirement investor, no matter what your age, should be doing.
Harry, no surprise, amazing advice as always. Really appreciate you joining us. Thank you so much. Now coming up, some disappointing data like today's private payroll numbers have some investors saying we're in a growth scare. We'll find that term to talk about the labor market after the break. And my progressive rep was super helpful.
Tom Hayes is passive progressive.
The way Kevin says he always has to help you.
Tom doesn't have progressive, so he takes it out on those who do.
You switch, you can save hundreds. That's great. You can buy more of that cologne we all love.
Progressive called me back about the claim I filed.
Support when you need it. Wonder what that's like, huh?
In my office.
No, Tom.
Don't be passive progressive.
It's bad, right?
Switch to get good coverage and savings for yourself.
Hello, Moto. Hi, it's Sabrina. I have spent my life on TV helping people create spaces with beautiful outcomes. But my real passion is redesigning life, embracing the little shifts that really create the life that you love. Join me with a lineup of incredible experts as we inspire you to transcending to redesign your life. I love this. I love you. One small change at a time.
Healing is not a one-time event, it's a journey.
This is the Sabrina Soto Show. Come on in.
I miss you.
I miss you too. You want to look at what's Dawson?
I don't feel like myself anymore. Love has this horrible habit of messing everything up.
I'm just trying to make sense of what's happened to us.
Joy is one thing, Jen is completely different.
What is that? I love all of it.
He now needs to rest. He needs to build up those injury reserves so that he has a chance to see right through tomorrow.
Economic data has been disappointing over the last month. Private payrolls in the month of February slowing more than expected. New home sales hit record low. Consumer confidence has fallen off a cliff. The slew of data making investors question whether we're currently seeing signs of a growth scare. Now, growth scare happens when investors suddenly start worrying that economic growth is slowing. This can be triggered by weak data, like slowing GDP, falling retail sales, or a weaker than expected labor market. It can also be caused by global events like geopolitical tensions or slowdown from a major country outside the U.S., like China. When a growth scare hits, markets react fast. Investors tend to sell riskier assets like stocks, especially in sectors tied to economic expansion, like tech and consumer stocks. At the same time, they often pile into safe havens like bonds, gold, or defensives, think utilities and healthcare. Sometimes a growth scare turns out to be just that, a scare, with the economy proving more resilient than feared. Other times it's an early warning of a real slowdown or even a recession. The key for investors is distinguishing between a temporary panic or a fundamental shift in the economy. Right now, investors digesting policy from the Trump administration that could hinder growth. The president himself saying tariffs may cause a disturbance. Market leadership is shifting in a defensive direction. The big question, is the economy cooling off while the market's in wait-and-see mode, or is this something more serious brewing? Let's zero in now on the labor market. Hiring in the month of February slowing far more than economists were anticipating. Private employers adding just 77,000 jobs during the month, the smallest level of gains since July, according to payrolls processing firm ADP. The print fueling concerns of an economic slowdown as worries about growth that President Trump's tariffs could cause. Joining us now with more, Jennifer Lee, BMO Capital Markets senior economist and managing director. Jennifer, great to have you on here. What would you say is the current status of the labor market? Is it slowing, or has it already hit a breaking point?
Good morning, and thank you very much for having me on. Well, I guess if you're just looking strictly at the ADP numbers and some of the employment surveys out there on the components of different surveys, you'd say that it is slowing, and it probably is. We have already been seeing this slowing pace over the last little while, and I think we're kind of seeing it build up a little bit more now, but it's more in anticipation of what could happen. There's so much unknown out there about what will happen with tariffs, how much of an impact it's going to have on the economy, and certainly on inflation and consumer spending, and all that feeds into what businesses are going to be doing on the hiring front. I mean, all in, like broadly speaking, when you take a big step back, we're at a pretty still, up until now, healthy labor market. For just a 4% jobless rate. Don't forget, we still have over 7 million vacant jobs out there, so still a lot of jobs to be had. So I think the labor market is still in decent shape right now, but again, things are slowing. Given there's all this uncertainty over tariffs, what the impact is going to be on the overall economy and spending and inflation and all that. So I think businesses are probably holding off a little bit until there's some more certainty on that front. So I wouldn't be shocked if we saw a slower number as well on Friday for the payroll report.
And talk to me, Jennifer, about how that's impacting where it's easiest or hardest to find jobs. I noticed in the ADP data that there was a little bit of a leadership change, that we saw losses in hiring in areas that we typically see growth, like education and healthcare. Do you anticipate that continuing? And if so, which areas of the job market seem safe right now?
So that could be also reflective of potentially these jobs that we're seeing potential job cuts at the federal government level as well. So there could be a little bit of that being reflected. But overall, we're going to see at some point, you would expect more hiring in construction, for example, continuing on in the leisure and hospitality sectors, and certainly potentially in the agriculture front, with all the greatest deportation effort ever, you're going to start seeing a lot more undocumented workers leaving the labor force, and we're going to have to start hiring for those to replace them again in those certain sectors. So we're probably going to see some of that, but I think potentially on the education front, the healthcare front, is probably reflective of some of the cuts or no cuts coming in from coming in from the Department of Government Efficiency.
So Jennifer, I just want to end on your feeling on the overall economic vibe. Are we heading towards a potential recession, or is this just another continuation of the vibe session?
I think we are, broadly speaking, I'm going to say that globally we're heading toward a slowdown. We're already seeing that. Just given the uncertainty, our businesses have already started tackling the brakes on business investment plans. Again, waiting to see how things fall out and whether or not they're going to stay that way. So we do not see a recession in the U.S. Per se, but it will be hit by higher prices, higher inflation. That's probably going to be the first impact of all these tariffs. We did knock down our growth forecast to just under 2% growth for the next couple of years from over 2% growth. So that has knocked out. Still going to be growing, but other areas such as Canada, we do have a mild recession penciled in, just over 0.5% growth over the next couple of years. So for the U.S. specifically, there will be a slowdown. There already is. We're already starting to see the signs of the slowdown, but it's probably too early to say that there will be a recession.
All right, Jennifer, always great to get your insights. Thanks so much for joining us this morning. Coming up, we'll bring you the 3 biggest lessons from retail earnings this quarter, and then I'll talk to an expert about what potential tariffs could mean for your next car purchase. That's coming up next, right here on Well.
Every workspace. It has a ruler, level, screw bit, ballpoint pen, and a stylus for touchscreen devices.
5 functional tools, all in one convenient place. A must-have for any creator.
From concept to creation, the Pen Tool Pro is your versatile companion, simplifying your workflow, putting the focus on what truly matters, your creativity. Scan the code to order the Pen Tool Pro while supplies last.
It's report card season for the big retailers. We've got results from Walmart, Target, Home Depot, and more. The company's reporting amid some uncertainty about President Trump's tariff policies and falling consumer confidence. So what have we learned so far? Our very own Brooke DePalma joins us now with more takeaways from retail earnings. Brooke, what do we know?
Good morning, Maddie. Well, it's certainly been a roller coaster for retailers this past quarter. Let's break down the three top takeaways from earnings so far. They include consumer spending trends remain uncertain. Promotions and markdowns are still key, and tariffs are heavily in focus. Let's start with that consumer slowdown. Walmart kicked off this retail earnings season with a warning. It issued a cautious profit outlook. Now the company emphasized that the consumer remains steady, but CFO John David Rainey said the team has taken, quote, a kind of prudent approach at this point, end quote, given uncertainty regarding tariffs and the overall macro environment. Now, its competitor, Target, took that a step further. It said it saw soft sales in February, citing consumer uncertainty as a headwind in its current quarter. Home improvement retailers Home Depot and Lowe's, they also struck cautious tones in their results.
Home Depot CFO told investors on its earnings call that its full-year outlook was impacted by, quote, some benefits from hurricanes that won't fully repeat in 2025, and that it assumes continued pressure on larger projects. Lowe's outcome fell below Wall Street's expectations as well, highlighting more cautious consumer spending in the year ahead too. This brings us to our second point. Promotions are still key to luring in consumers. Target saw gross margins fall about 0.4 percentage points this fourth quarter, partially due to, quote, higher promotional and clearance markdown rates. Now, the heavy promotion environment is something that we haven't just been seeing in retailers, we've also been seeing it in the adjacent restaurant industry as companies like McDonald's, Wendy's, and Yum Brands are using promotions like these meal deals, these $5 meal deals, to really lure in consumers and battle for the few dollars that they're willing to spend here. And that brings us to our last point, tariffs. Retailers are beginning to sound the alarm of what this could mean for its consumers. Target CEO said as far as vegetables and fruits go, the consumer will likely see price increases over the next couple of days. Best Buy also chiming in. CEO Corey Berry telling Yahoo Finance around 55% of its products are sourced from China in some way, shape, or form, and another 20% comes from Mexico. She told Yahoo Finance, quote, we expect much more impact in quarters 2 through 4 versus this first quarter in terms of increased prices. Now, of course, keep in mind that this is a very agile situation, and retailers are following this really, really closely. They're ultimately having to make these changes very quickly, despite months and months of getting ready and getting prepared with what this will look like. And as we've been talking about this morning, Brooke, the policy is shifting so quickly. It's challenging for us as journalists to keep up with it, and of course for companies to kind of chase the wheel as well. So we appreciate you covering it for us and breaking it all down. Well, auto stocks are rising after Commerce Secretary Howard Lutnick says some auto companies may be exempt from tariffs. Lutnick telling Bloomberg companies that are in compliance with the U.S.-Mexico-Canada trade agreement could receive exemptions, which could be announced as early as Wednesday. On Tuesday night, President Trump told members of Congress that tariffs could be good for the auto industry.
And by the way, we're going to have growth in the auto industry like nobody's ever seen. Plants are opening up all over the place. Deals are being made. Never seen. That's a combination of the election win and tariffs. It's a beautiful word, isn't it? That, along with our other policies, will allow our auto industry to absolutely boom. It's going to boom.
For more on this, we turn to Matt Deegan, senior editor with Kelley Blue Book. And Matt, obviously it's been challenging to track the huge swings that we've seen from these tariffs. We had stocks in the auto space selling off the back of these tariff announcements yesterday, and then today you have Howard Lutnick saying, well, maybe car companies will get a carve out. How does that impact the end consumer? If these automakers do get carve outs, then no price raises for cars for consumers?
Yeah, well, uncertainty certainly is kind of the word of the day here. There's just so much in flux that we don't know. If these tariffs end up not affecting autos, then that's going to be a huge bullet that they dodge. Because if they do go into effect, or if they, as intended, go into effect for the car industry, we're talking, that could raise the price of your car thousands of dollars. So this could be a really big hit for consumers who are shopping for a car right now.
And we've already seen used car prices ticking up, Matt. I wonder, do you think there's any evidence of both used car dealers, but also dealers in general, maybe seizing the tariff opportunity as a moment where they can get away with raising prices because consumers are primed for it due to tariffs?
Well, that's always a concern, and the issue is we're already flirting with record high prices for both new and used cars. I mean, the average transaction price of a new car these days is nearly $50,000, and it's about half of that for a used car. So if you haven't shopped for a car for a while, and most people don't, this isn't something you buy every year, it just seems that there's constant sticker shock is what we're hearing from consumers who are out, getting ready to buy a car. They're thinking, is that truck really $50,000, $60,000? And the reality is, yes, it is. Now, if these tariffs are implemented, that could raise those prices by $3,000 to $10,000 on the average new car.
And when might those price hikes take place? If consumers are listening right now, would it benefit them to run out and buy a car today before those price hikes hit?
That's that's a great question. And normally we're not one to say, you need to go and buy your car right now. But if you are in a position where you've done your research, you know the blue book value of the car that you should be paying, you know all your, you've dotted all your I's and crossed your T's. If you are ready to buy a car right now, you probably want to jump on that sooner versus later. And the reason is because the cars that are on dealer lots right now or in transit to dealers, they will not be affected by the tariffs. It only affects, if they do in effect happen, they affect cars being imported to the U.S. from these neighbor countries. So if a car is already on a dealer lot, well, the price is the price. It's not going to be affected by tariffs. So if you are ready to buy a car right now, you probably want to jump on that sooner versus later.
And it's interesting too, just given what you said, that we were already at such record highs when it comes to auto prices. Do you think there's a risk of consumers falling off a cliff and just saying, okay, well, we just can't afford these prices anymore? And what impact might that have on automakers?
Yeah, and that's already happened to some extent, because when they see the new car prices, they say, I can't afford this. So guess what? They go to the used car lot, and then that in turn puts pressure on used cars. And again, we just see these prices going up and up. So it's not an easy time to be shopping for a car, or frankly anything else right now. And interest rates still are higher. So that puts more pressure on just how much people are paying to afford the cars.
Matt, really quick, what is the best way for consumers to find an affordable car right now?
Well, again, you might want to go used, you might want to go certified pre-owned, or you might want to look at some brands that will have a lot more inventory. We're talking brands, brands like Nissan, Mazda, Buick, Dodge. All of those brands have higher levels of inventory. They're going to be more willing to deal than, let's say, your Toyota, Lexus, or Honda dealer, which has tight supply right now, and you're probably not going to find a really good deal on one of those cars.
All right, Matt, great breakdown. Thank you so much for joining us. Coming up, we'll continue our conversation around tariffs and how they could impact your wallet. We'll discuss the housing market next.
Fortunately, the Dalmatian managed to avoid surgery and can now go home unscathed.
And my Progressive rep was super helpful.
Tom Hayes is passive progressive.
The way Kevin says he always has to help you.
Tom doesn't have progressive, so he takes it out on those who do.
Switch, you can save hundreds. That's great. You can buy more of that cologne we all love.
Progressive called me back about the claim I filed.
Support when you need it. Wonder what that's like, huh?
No, Tom.
Don't be passive progressive.
Bad, right?
Switch to get good coverage and savings for yourself.
market action here. You've got stocks still under pressure today following several days of losses here. If you take a look at the S&P 500 over the last couple of days to kick off the week, you can see that we're in the longest losing streak so far that we have had since December. We have stocks still under pressure following the announcement of those tariffs from the Trump administration. We actually did see a little bit of a lift to stocks earlier in the trade. You can see that it's been a pretty volatile session, dipping between the green and the red here. We had that ISM services data coming in better than expected, indicating maybe a little bit of a recovery in the market. That's when you saw stocks lifting. We also had commentary from Howard Lutnick indicating that there could be some exemptions and carve-outs on tariffs. So you saw a bit of a lift to stocks then. But now also we have that ADP report indicating some weakness in the labor market. That's also potentially weighing on stocks just a bit. You've also got your small caps continuing to be under pressure. And if you take a look at small caps since election day, you can see that they have dropped 15% from that November high following the election of President Trump. That made investors think that we were going to see a little bit of a come down on things like interest rates. That's usually a lift to small caps. But as you can see, those stocks still under pressure this morning. Well, home builder stocks are rebounding today after Commerce Secretary Howard Lutnick hinted that President Trump could offer some exemptions on tariffs. Investors likely hoping for carve-outs for the lumber industry. We heard from Jim Tobin, the CEO of the National Association of Home Builders, about the potential impact.
We get 30% of our lumber from Canada, and that will certainly crimp our ability to build more houses, but build those houses affordably. Everything is starting to impact, again, tariffs and immigration policy are really starting to squeeze every market in this country.
Joining me now on this, Logan Mohtashami, a lead analyst at Housing Wire. Logan, great to speak with you. How are you seeing tariffs potentially impacting home prices?
I don't think the builders have the margins to really push prices too much higher right now. With rates elevated, I think their concern is, they're not going to be building a lot of homes. And they, it's different. When COVID happened, lumber prices were $1,000 higher than what they are today, but mortgage rates were at 3%. So the increase we've seen in lumber prices already in the last few weeks is anticipating tariffs and duties and what traditionally we deal with lumber pricing. But the builders' active inventory is up, completed units are up. The South is a problem for them. So I don't see them really pushing the prices too much on the consumer now. But I do see this as, they're not going to be building a lot of permits with rates elevated right now. And this just hampers the future production of housing in this kind of environment. This is one of the reasons why the White House wants lower mortgage rates as well.
So then, that's interesting. Where do you see home prices going in the near term versus long term?
Now, the existing home sales market, if tariffs and the economy slows down, reduce spending, we fire people, 10-year yield goes lower, that helps pricing, right? It's really rare in America post-World War II for nominal home prices fall, but we do see pricing softness when rates are elevated. So to me, it's more of a rate story for the existing home sales market. For the builders, it's a supply and margin story right now, and they were not happy about anything talking about tariffs, and this is why if you look at the Builders' Confidence Index, the last 2 months has had one of the biggest drops in looking out forward 6 months. And you can see this higher rates and tariffs does not help them build a lot of homes in the future.
So if you are looking for a home right now and you've been hoping for interest rates to come down and make it more affordable, should you go ahead and buy as soon as possible?
I mean, if you're looking for a house right now and you've done the pre-qualification, then you're pretty much legit where you're looking to buy, where the rates are up a quarter or down a quarter. But if the economy gets weaker, right? If tariffs actually bring the economy growth slower, then bond yields can go down and mortgage rates go down. I think this is one of the reasons why the White House and Treasury Secretary said they are very, very active on trying to get mortgage rates lower because it alleviates some of the concern of tariffs and higher costs out there. But in this case, mortgage rates have been hovering back and forth for a few years now. It's really rare to even get under 6% since 2022. So you're dealing with a housing market that's very unaffordable, and the builders are also very stressed right now with rates elevated, and on top of this, the tariffs coming in. It just hurts their margin ability.
Yeah, and we haven't even talked about the potential impact of immigration policy, but I want to talk about first-time home buyers in particular, because one of the challenges, as you know, is that there isn't enough supply of those single single-family, smaller homes for starter first-time home buyers. What's your outlook for those smaller homes? Do you anticipate more of that supply coming into the market?
I always ask everyone, what does an affordable house look like? Like really, like it's really, it has to be a condo or a townhouse, but then that marketplace is getting hit with insurance costs and HOA costs are rising. So the supply of the condo market is actually faster than the single family market. So you're not getting any relief there, but because they are smaller than single families, they tend to be priced much lower. So if you're looking at that kind of starter home, townhome, condo, the difficulty is the HOAs are increasing. So you're not getting much relief in the total payment there as well.
Is the ROI there on a townhouse, a condo? Is that return there for people who see it as an opportunity to have an investment in a property where they're not throwing away rent every month and they can sell it someday?
You know, housing is a cost of shelter to your own capacity to own the debt. I think traditionally home buyers tend to make more money than renters. So you have millions of people buying homes each year. But the HOA condo market is much different now than in the previous years, especially we see the stress in Florida. Can you get insurance? Can the condo project even get approved? Can you even get a mortgage? Some people have a very hard time selling their homes to anybody with a mortgage buyer. So there is stress in that marketplace, but for the kind of the first-time home buyer that doesn't make a lot of money, that would be one avenue to deal with housing inflation. But again, the HOA costs increasing makes that a little bit more affordable than it has in the past few years.
All right, Logan, great breakdown as always. Thanks so much for joining us.
My pleasure.
Coming up, the former head of the Social Security Administration has a warning about layoffs and missing payments. Plus, tax season is underway. Some of you watching may qualify for relief if you were impacted by a natural disaster. We'll explain more after the break.
Some people just know they can save hundreds on car insurance by checking Allstate first. Like you know to check your outfit first before meeting your girlfriend's family. So check Allstate first for a quote that could save you hundreds.
Oh my gosh! Careful. Oh my god. I just went down one. It sucks to lose. The red team definitely is not familiar with this feeling. Oh no, what are you guys doing?
I know what that feels like. I'm so happy to start. Good luck, Sean.
Let's go, guys. Come on, hurry. No, I don't know how I get on the winning team. Yes, I do. All I do is win.
Hi, it's Sabrina. I have spent my life on TV helping people create spaces with beautiful outcomes. But my real passion is redesigning life, embracing the little shifts that really create the life that you love. Join me with a lineup of incredible experts as we inspire you transcending to redesign your life. I love this. I love you. One small change at a time.
Healing is not a one-time event, it's a journey.
This is the Sabrina Soto Show. Come on in.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial team. We'll go beyond the headlines, analyzing all of the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
Could your Social Security payments be at risk? That is what the former head of the Social Security Administration is warning, saying the agency could be at risk of missing payments to seniors for the first time in its history, thanks to staffing cuts planned by the Trump administration. Here's more. We got Yahoo Finance senior reporter Jordan Weissman. Hey, Jordan.
Hey, thanks for having me.
So talk to us about what these potential payment misses could look like and could mean for consumers.
So Social Security has never missed a payment as long to retirees as long as the program is existing. Here's what O'Malley is worried about. At the moment, the Social Security Administration is looking to cut its workforce by about 12%, from 57,000 to 50,000 workers, right? What O'Malley says is that this is probably going to lead to a massive brain drain of all of the tech support people who know how to maintain Social Security's payment system and know what to do if something goes wrong. And the reason for that is that a lot of those guys are really, really old. Social Security runs on a language called COBOL. It's this ancient computer code that most younger IT don't know how to deal with. So much of the IT support of Social Security is already at retirement age, and they're now looking to offer all these buyout and early retirement incentives. So he's worried that they're simply not going to have the staff on hand to intervene if something goes wrong with the systems, with their old mainframes, and payments suddenly stop. And he thinks it's very likely that this is going to happen. I've also talked to the chief information officer, or former chief information officer who resigned in January. She's also sounded warning about this.
So Jordan, obviously it would be politically extremely damaging if there was a miss to Social Security payments. Just curious what your sources are telling you more broadly about how likely that miss might be.
So apparently people are divided within the Social Security Administration. There are some tech guys there who think, no, this isn't likely to happen once your name is in the system. Payments are just designed to go out automatically, and that will keep running come hell or high water. O'Malley and some others are not so sure. And the reason for that is that they've just never really tried to run Social Security on such a bare-bones staff, or at least such a bare-bones staff as the Trump administration appears to be planning for. So it's not a guarantee, but what O'Malley is telling me and other reporters is that if he were a retiree, he would be putting aside some money right now.
All right, Jordan, really great roundup. Thank you so much for joining us. We appreciate it.
Thanks for having me.
If you were impacted by a natural disaster last year, you might qualify for some tax relief. 2024 had 27 natural disasters costing $1 million or more, responsible for $183 billion in damages and impacting millions of Americans. Some of them could qualify for those tax deductions. Here's what you need to know before you file. We've got Mark Stewart Jackson, who is Tax Service Chief Tax Officer. Mark, great to have you on. I want to start on what to do. What can people who've been impacted by these natural disasters do to get
Well, first, and I'm from Florida, so believe me, I'm all too personally affected by this, and I've followed this for decades as I can for other hurricane states. First thing is not to put a priority over your family's safety and security. Taxes are important, and they're certainly something you can't get away from, but it's not the most important thing. So once you got your house and your life in order, your family secured, do not look past the tax rules. There's a lot of crazy rules and loopholes in the law. Some of the best rules for American taxpayers, especially those disaster affected, are in the natural disaster, especially the federally declared disaster rules. There are delays in time, of course. You've seen those extensions to file, and those are great. They give you time not to worry. But there are more benefits in carrying your losses, especially if you've suffered economic loss, back and recovering back taxes, offsetting current taxes, even carrying losses forward, calculating the losses. People panic because they don't have good records, they don't have basis. There's a lot of latitude in that as well. Any good tax pro can make you the best result you can if you've otherwise been adversely affected. But do not put off, you focus on your family. Secondly, do not put off looking at the tax benefits and the horrendously complicated tax code for some of those really, really important nuggets that can get you back on the right track economically.
And help me out here. Do you have to itemize your deductions in order to benefit from some of that disaster-related relief, or can you take the standard deduction and still get some of that
Well,
relief?
and it's really, really complicated.
complicated. I won't bore your viewers with it. I'll simply say you can take a deduction if it's federal disaster area if you itemize. But the reality is you usually have a federal disaster. You get quickly there much faster than you would with just a normal year. You do need to itemize, and there's some other, thresholds that you have. But the reality is if you lost a house or a property or even damage or even yard debris or whatever it might be, you can get past those pretty minimum standard deductions. 14,000 if you're single, pretty quickly. 24,000 if you're married. That sounds like a lot, but 24,000 damage. I had that last year without even losing a home. Just with damage to my property, pool, cage, cars. When you get a big hurricane, and when you see it, or wildfires, let's be clear on those California people, or earthquakes, or just the list goes on and on. I think there's like a dozen states right now. Get a pro, help them understand what your damages were. Let them help you understand what else you need. Video, documented footage as fast as you can get it on the damage, because the loss is really the value before and the value after, subject to the basis and the rest. But the point is that it's not just an extension of time. That may sound like a really nice benefit, and it is, and not having to pay taxes or file later. But those losses that you can carry back immediately, get a fast backwards refund, and help you jumpstart your economic situation.
And you said you don't necessarily have to have the note keeping and bookkeeping perfectly in order.
That is the one big myth. Oh, I don't have the basis for my house and car and yard work and trees. No, they let contemporaneous documentation substitute. And you do have to have more than just a bar napkin with some notes, but a good pro can help you go, well, when did you buy it? When do you have a picture of it? What was the value at that point? You get an appraiser. There's lots of tools, lots of FEMA resources, and lots of help in this space because so many people are affected. And it is one of those good things in the tax code, amidst all the other bad news you might have. Oh, it's complicated. I hate taxes. You've been disaster impacted, economically impacted. I promise you there's some salvage in there.
And really quickly here, you said that not everyone who's been impacted by a natural disaster can get this relief. You have to be in a specific area.
You have to be in a federally declared disaster area. That was some of the new law put in several years ago. What is that? Well, that's when it's bad, you know it. Like you had a lot of rain or you had some flooding, those may be, but it has to be declared by FEMA, it has to be declared by the president, a federal disaster area. And the bar is pretty low. You know it when you see it. Big hurricane, for example, big rainstorm, all the fire areas. And you go to the FEMA website or the IRS website, put in your zip code, it'll tell you whether you're in a federal disaster area. But I can tell you, being from Florida, you know it when you see it.
Yeah, well, and it's interesting too, just really quickly, should these individuals still be trying to get their taxes in as soon as possible?
Well, the carry back loss as soon as possible, because that's money in hand. That's not money that you paid this year. That is taxes that last year. You can carry a federal disaster loss backwards. And you say, well, I can't get the exact number. There's some latitude on that. You carry as big a number back as you can accurately forecast, and then you refine it with an amended return. There's lots of different ways to get where you need to be. So it's not a file fast like it is for regular taxpayers to get your refund and get your tax return prepared. It's more about help you economically by just doing what the law allows, carrying a disaster loss backwards and recovering your prior year taxes. It's a really nice tax benefit in tax code.
All right, well, we appreciate you breaking that down for our viewers, Mark. Thank you so much for joining us. Really appreciate it. Let's do a final check on the markets here. You got losses still occurring across those major averages. You've actually got them taking a bigger step lower this morning. We had the S&P 500 and the tech-heavy NASDAQ waffling around the flat line. You see them taking a step lower here. You've got the S&P off nearly 0.5%. Your tech-heavy NASDAQ down just about 0.5% as well. And it's interesting, we're actually seeing energy and utilities leading the losses for the S&P 500 today. Utilities falling to their lowest level since January here, which is interesting off the back of utilities as an AI play. And then you've got energy down nearly 3% in today's trade. You've got leadership in materials and industrials and healthcare potentially off the back of those ISM numbers. All right, that's going to be it for Wealth. I am Madison Mills. Thank you so much for watching. Stay tuned for Market Domination. Julie Hyman and Josh Lipton. That's at 3 p.m. Eastern.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor who's just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Podcast will make you a smarter investor.
Welcome to Stocks in Translation. I'm your host, Jared Quigley. Welcome to Financial Freestyle. Hi, I'm Bob Powell, and welcome to Decoding Behind.
Welcome to Living Not So Bad This Week.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Capital Gains. I'm your host, Madison Mills.
Welcome to Word Life. I'm Patrick Murphy.
And I'm Dan Kunis.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Scan the code on your screen right now to get your free offer from AutoVac, the handheld vacuum for cars and trucks. Keeping your vehicle's interior clean can be such a hassle. Big vacuums on wheels are impossible to use for quick jobs, and professional detailing is time-consuming and expensive. But now, here's the AutoVac, the handheld vacuum for cars and trucks that makes vehicle interior cleanup quick and easy. The AutoVac's powerful suction handles dirt, dust, crumbs, and debris. Even sand and metal screws are no problem with the AutoVac. Plus, lightweight ergonomic design makes it the perfect choice for cleanup every time. Scan the code on your screen now to get the AutoVac for just $59.99. But if you order right now, you'll get a second AutoVac absolutely free. Scan the code on your screen to take advantage of this special TV offer. Hurry, this is only available for a limited time. Get your AutoVac today.
It's time for Yahoo Finance's Market Minute. Stocks wavering as investors digest mixed economic data and a potential easing in tariffs on Canada and Mexico for certain sectors. Moderna shares jumping after a German court ruled Pfizer and BioNTech violated Moderna's COVID vaccine patent and owe appropriate compensation. Moderna CEO also picked up $5 million in common stock on Monday, according to an SEC filing. Alibaba and Tencent both rising after Bernstein boosted its price target on the Chinese tech companies. The analysts saying Baba and Tencent will be key beneficiaries of China's AI push. And BlackRock leading a $22.8 billion deal to control two key ports on either end of the Panama Canal. The ports are owned by a Hong Kong-based firm. This comes as President Trump has raised concerns about potential Chinese interference in shipping lanes. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo, scan the QR code below to track the best commercial performing stocks.
Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari, coming to you live from the New York Stock Exchange, a place that's been my home for decades and still feels the pulse of capitalism, entrepreneurship, and really most of all, freedom. Now let's jump into it. Rate cuts are the new fairy tale, the market's favorite bedside story right now. Rate cuts are coming to save the day. Investors clinging to the idea like a warm security blanket, convincing themselves that no matter how bad the data looks, whether it's weak retail sales, inflation creeping up, or geopolitical uncertainty, the Fed is going to swoop in and lower rates just to fix everything. Well, here's the problem. It's not really reality. Look at the data. The economy is not collapsing. The labor market is holding steady. Inflation, while off its peak, is still running a little bit harder than the Fed would like. Wages remain strong and corporate earnings are mostly solid, and demand has not fallen off a cliff. So why exactly should the Fed cut rates? Because the market wants it? That's really not how it works. And let's be clear, rate cuts aren't a gift. They are a tool used when things are breaking. A real reason to cut would be a recession, credit markets freezing, or serious economic distress. If we get those cuts investors are salivating over, it won't be a bullish signal. It will mean the Fed sees serious trouble ahead. Right now, the market is pricing in perfection, a strong economy and lower rates. That's a contradiction. If things are so great, why do they need the cut rates? And if the Fed does cut aggressively, it likely means something is wrong. The real risk, the Fed doesn't cut as quickly as the market hopes for. The longer inflation stays sticky, the more the Fed will need to hold rates steady, and the more investors will realize that they've been betting on a fantasy. And when that bubble bursts, the adjustment may not be triggered. So what do investors do? Start making decisions.
All right, we're back. Looks like we got a little bit of short covering right off of that low, that liquidity level. All right.
That may never come. Now, I'd like to introduce my next guest, Dan Mahaffey. Dan is the president and CEO of the Dr. Scholl Foundation of Norfolk, Illinois.
Let's see what we got going here on CNBC. All right. It is 12:05 on the East Coast, the best coast, the coast with the most. I am your host, Cousin Vinny, coming to you from theclosingprint.com. It is March the 5th. Looking for the Fed. What do we got? Beige book today.
These are going to continue. And if you want to place bets on a group that has fallen, that's a place to put some money. If you want to just trade, it's better for financials today than it was yesterday. It's better for consumer today or tomorrow. I think that's a mistake because there's weakness, there's uncertainty.
Let's see if we can't get something going here.
Understand that's going to continue.
There seems to be, Weiss, an expectation too that no matter how you get driven by one headline and then driven by the next, that as long as the president and his team are talking about April reciprocal tariffs. Remember that report on reciprocal tariffs is supposed to be coming due April 1st or the 2nd or whatever it is. JP Morgan's trading desk says that we're only at the beginning of trade war 2.0. And with that study coming, you could see blanket tariffs. They say we expect this portion of the trade war to last until at least.
All right, they're talking about trade wars. This is a repeat of the first time Trump was in office, except that he waited a year to do it.
Yes, at least April, and I think longer than that. So, to Carrie's point.
All right, so to the degree that we can look at history to see what kind of reaction we had the last time around to Trump's first term. Okay, we had a 11, 12% pullback. So far, we've only pulled back, 7%? I think it was 7%. So do we go down below the 200-day this time? Hard to say. Let's see. S&P. Here's S&P. Okay. So we're yesterday was a spinning top, very large range. Today we have a tighter range, but a spinning top doji above the 200-day moving average. We're only down. Yesterday was just shy of 7%. And the last time around, we had a 12% pullback. It just so happened that we were extended at highs during his first year in office. And we came back furiously right through the 50-day, sliced through it, went back up, retraced, and retested it, and then dropped back down again. So the 200 days right there, is that all it's going to be? Well, there is a prospect that we could see, 12% pullback. So we got to keep that in mind. I think we lost CNBC there. So maybe more, maybe a 10% pullback. For now, though, we're just sitting right here negotiating the 200-day. We had a nice little bounce just now on the S&P. Can we add to this and continue higher? Well, let's keep an eye on it. Let's see.
I think that's the first thing this administration is focusing on in terms of lowering inflation. And, I think it's working. We just got to keep watching, though. The problem or the good news is, if you're a trader, is There's headlines every hour, Tom. It's literally every hour there's some market moving event going on.
Okay, there's buyers there, that area of liquidity. We showed you earlier this morning that we could potentially get down to that area of liquidity. Ping pong around was the term I used, and that's what we look like we're doing now. We're moving back up towards 5,800. That's resistance. If we get above 5,800, we could see a nice rally up to and around resistance just above that level is around 80, 5850, 5850.
Concerns, or is this about the supply that potentially may come online here in the next month or so on OPEC Plus?
Yeah, I think it's a multiple. There's multiple factors here. So the OPEC news obviously has put pressure to the downside. Crude has been in a downtrend. Once again, the consumption numbers on a global scale just haven't showed that we are seeing a rapid demand to the upside. Right, all of these pops that we've seen over the last year or so have been all supply side driven. I think this is actually an indication of a slowing economy, and that $65 level is very key. If you kind of go back,
yeah, it's been raining all morning, so finally we got some rain. It brought a lot of wind gusts with it. 30, 40 mile an hour wind gusts. It was interesting driving back from dropping my son off. Cars all over the place. Okay, Microsoft looking pretty good here. Microsoft continues. All right, that looks good. Day 2 on Microsoft. If you were been paying attention, Microsoft looking pretty good. Let me update this chart. Update. Okay, so Microsoft looking really good off the low. The 9 EMA's first resistance. We got some congestion right in here. I would imagine that we'd have some people that are looking to break even right in this area right here. Okay, right in this zone. Probably going to run into some resistance right in this area. And if we can manage to get through this, head back up to the 50-day maybe. And then eventually maybe the 200-day. I like the odds for Microsoft. Looks good though. Definitely looks good. All right, so it looks like we're going to go.
Zelensky says he expects positive results from cooperation with U.S. next week. That's also breaking right now as well. So
yeah,
a couple things.
I think he said that before the last meeting with the administration last Friday. That didn't come to fruition.
He means it this time, though, Tom.
Yeah, they should probably just do a WebEx this time around instead of being in the Oval.
Yeah,
that's true.
With a buffer.
Maybe it was just a picture of Zelensky on there without his.
Kevin Green, we're going to have you mediate.
Yeah, that's right.
There you go.
Hey guys, KG, I'll go back to you real quick on this. The ADP report came in a little bit lighter than expected. I didn't expect it to be above estimates, but coming in at 77K at this point, that kind of puts
okay, MicroStrategy looks like it might go.
on jobless claims tomorrow.
What are you guys trading on MicroStrategy? I haven't touched this one in a while. MicroStrategy.
News items, right?
Let's see, Cayman's MicroStrategy 322.
Right, they calculate a little bit differently. ADP actually looks at
MicroStrategy 322.
So I would say that you look at the trend, and the trend is to the downside for the month. Now, some of that could also be weather related. There is, some slowing. That's what Neela Richardson from ADP is actually saying, and we'll see.
Ooh, some beefy premiums on this. I haven't traded this one. Haven't traded MicroStrategy. Wow. That's some beefy premiums. Just 1 week out. Okay.
Still a lot of economic data for us to kind of chew over here over the next couple of trading sessions.
Okay,
and
S&P.
To see more stability in the hard data to try to take some of this vol out of the market. I mean, I'd like to still see vol at around 18, 19. Don't get me wrong; it's actually a pretty decent trading environment, but you really don't want to start getting towards that 28, 30 level. That makes it a little bit difficult for these intraday traders.
Bitcoin. Let me go take a look at Bitcoin. Okay, so the markets are moving higher. Bitcoin.
Trump did hold that call with the CEOs from GM, Ford, Stellantis on that potential auto tariff delay. Who knows if it comes to fruition? Even if they delay it, Trump's still going to come out and say, hey, they're going to go into effect
Okay,
in a
so
month.
not the
So
best
it's a
setup.
negotiating tactic once
Could see a
again.
move to the upside, could
John,
see it lose the
you've done
200
some
days.
earnings. It
So
came
I'm
out
going to stay away from
CrowdStrike,
Bitcoin for now.
got slammed. We talked about it
Again,
yesterday.
another one of these patterns I don't particularly like. I like to see smooth, easy, easy to read patterns where the support is. That's just me. Let's see what Take Two looks like. Take Two sneaking up the list, just popped up on the screen. Take Two sideways range, needs to break out or break down. What's Twilio doing? Twilio, TWLO, Twilio. Twilio still sitting here. This is what, day 11, below the 50 day. Last time I consolidated, it took 5 weeks and then it broke out on a gap. Okay, Twilio, if you're trading that. What's Supermicro doing? Supermicro, Doji. Microsoft looks good. Microsoft. Apple turning a little bit. Microsoft. Okay, higher lows, higher highs. Looks like we might move a bit higher into the evening session. Microsoft. Microsoft. Okay. MACD stochastics are all set up for a move higher. All right, so if we do get a move higher, you got RSI down at 30, turning up, currently trading at 37.60. All right, so that's good. Price action looks good. Volume looks good. MACD's turning. So we need to see bulls take the momentum. That could give us a couple of weeks of upside, maybe. Stochastics sitting here ready to trigger. Looks pretty good on Microsoft.
That seems to be the words that need to be spoken. A willingness to move the production here to the United States, and I agree. I think that is why Apple is performing, having that relative outperformance. I'm not saying it's not a positive. No, I know. It clearly is. No, I agree with that. But look, I agree with you. I think at some point we're going to come in and we're going to say, there we go, bag 7 once again, leading the market higher. There's your leadership.
And if you take a look, because we've done a lot of work on this, on their trend and reshoring.
Microsoft. Microsoft. Okay, watching this, watching this move. Watching this move. All right, I'm gonna just put something in the microwave real quick. Some chili, I think, heat it up. I'll be right back.
So he can grab the headlines, but that's what it is.
I mean, it's also
but it's positive.
It's also more complicated. I mean, weren't there agreements in Trump 1.0?
Yes.
On certain things, and a shovel never went into the ground.
Nope.
So, and we're all talking about years away projects for most of it. Apple can say, well, we're investing X billions of dollars in the United States to build such and such products here. Wake me up when, the production lines are going.
Yep.
I mean, it just takes time. Let's do our chart of the day. CrowdStrike. We talked about it on the way up. We're going to talk about it on the way down. Falls on disappointing earnings, their forecast. What do you think, Joe? There are some who look at the slide today and say, like Mizuho does, fantastic setup. That's what this pullback does. The stock's had an incredible rebound from the issues of, 6 months ago? What do you think? You own the stock.
So I wouldn't use the word fantastic, but I would say you have to give them the benefit of the doubt. You have to trust that the subscription revenue growth in the second half of the year is going to be there. Keep in mind that one-time discounts are now ending. They're rolling off. And I think that's one of the reasons why you've seen in the third quarterly report since the misstep of last summer that the guidance here was not so strong. So it's still above, technically, you're still above the 200-day moving average. I think it's at 333, not breaking down. But fundamentally, they get the benefit of the doubt, in my opinion. And I do think in the back half of the year, that's why you're buying it today, because that subscription revenue growth will be there.
Palantir got up today, by the way. William Blair had it as underperform. I don't know how long they had it there. Presumably that didn't work well. They upgraded it to market perform, though. Joe, what's your take here on this stock, which has been really at the forefront of the momentum unwind?
Yeah, and you had this 9-day period from February 18th to February 28th where it fell from 125 down to an intraday low of 78.58. What's the bounce look like? Not really a V, more of a U. I said a couple of weeks ago, I want to buy this stock if you don't own it around 84, 85. Well, guess what?
It's right there. It's kind of sitting there. The market generally, after you have that type of free fall, it doesn't give you the opportunity to buy it over a prolonged period at an expressed price. If you say I want to buy it at 85, usually it goes down to 85. It's there for a moment. You look in the afternoon, you say, oh, you traded 85 and I missed it. Next thing you know, you're paying 89.90.
Well, right now you're paying 86. So if you missed at 85, it was $1 make a huge difference. So let me ask you this.
I still don't think it's a strong enough bounce.
So you own it in the ETF.
Yes. And the momentum is still, believe it or not, the momentum, if you're measuring momentum on a 12-month basis, it's still positive.
Okay, so why don't you buy it personally then?
Because I own it in the ETF. I own a lot of momentum names that have lost leadership, and I am not ready to basically double down on a factor of momentum, which is clearly in a correction process.
Joe, can I ask you 2 questions?
Please, you can.
So we all know that, and we've seen it countless times, that in a slowing economy, enterprise spending, which is CrowdStrike, is the first to be put on pause. Deals get pushed out. That's one thing. And the direction of the what we're seeing in economic data, including jobs today, would say that the economy's slow. Second thing is, if you want to cut costs in the government, why wouldn't you say, we know that that DOGE is not sensitive to the security of data by sending, people that have clearance into Treasury and all that thing. So why wouldn't you say, why are we double paying for cyber? Why can't just Microsoft, some very good cyber protection, do enough for us? So with with CrowdStrike's exposure to government, the other's exposure to the government, why isn't that an added risk? Both of which should really hit the multiple, and maybe down 8% today isn't enough for going forward.
Yeah, I think again we look at markets strategically different.
Right.
That's something that is taking a fair-minded theoretical look at the optionality of what's ahead in the future.
Right.
And it's a reasonable expectation that you present. I'm not dismissing it, but it's not ultimately what I do.
Got it.
It's not how I'm looking at things and saying theoretically in the future this may unfold. Yeah, it's obvious to me. If that happens, Steve, you're 100% right. That's damaging towards revenue and EPS growth, but I just can't sit there and speculate this might happen,
ANET
might not happen.
ANET upgraded today to a buy. The target 115 at UBS. You own that stock. What do you think about that one?
Well, you do as well. This should be working a little bit better than it has recently. It's been a little bit on the decline. You would think that the networking here related to AI and the data center connectivity would have a little bit of more of a positive benefit. I do agree this is the right spot technically if you want to make the play on it. And if there's going to be an overall recovery in technology, this will be one of the clear leaders because it is identified as an AI leader.
AppLovin's down another 4% today. What about that one?
So AppLovin, I think you asked me on Monday if I thought it was up at around 350, 355, if you thought that was it, if the bottom was in. And again, no, it's just a classic example of it looks like a U. It doesn't look like a V. And you need a V. You need that V type of bounce to really gain confidence that you've ultimately reached the bottom. You know what's interesting is, everyone's kind of looking at where we are technically and saying we're riding slightly above the 200-day moving average. We're trying to find support. We're hoping that we come out and that there's going to be a relaxation in the tariffs. Really, the other side of that is if you want to get to a tradable bottom, it's probably let's get the bad news out of the way. Let's flush below the 200-day moving average. Let's basically get all those non-discretionary funds stopped out. And then ultimately you'll find your bottom and get the V-shaped recovery. But at AppLovin, you don't have that.
Okay, Bitcoin is slightly higher, still volatile. Obviously, Weiss, you're done.
All right, so we got okay, we're starting to break through these levels now.
For you.
SPY's breaking through levels.
I'm sure there's going to be a bounce here because I believe the market's going to bounce, so it's a risk asset. But keep in mind that from the moment I went into it, what I said, as soon as the momentum dies, I'm gone because that's all, in my view, that's all it had for it because I don't see any intrinsic value. I don't see any use case for it. And I'm also skeptical that, not that it would matter, frankly, that Trump gets in as a reserve currency because it's the opposite of reserve currency.
All right, let's talk about some other areas before we take our first break that we focused on very heavily yesterday. Either shaken up by the tariffs or growth slowdown or both, for that matter. Banks. So we've got a nice turn in some of these names. At least we did as we came on the air today. As I'm having a look, we can see the big banks. Yeah, some of them are higher. It's still mixed. JPM and Citi are down. Bank of America's down. Goldman's up. Morgan Stanley is up. Chubb got upgraded the insurance space today to buy from hold, target to 323. That's at HSBC. You also have a lot of exposure, Joe, Goldman and JPM. So what about the banks here?
Look, I think the banks, in particular the money center banks, JP Morgan, Goldman Sachs, you can get Morgan Stanley on a little bit more of a sell-off. I think that's an opportunity. That's what I would focus on. You mentioned Chubb. The insurance industry is right now the leadership in the financial sector. And it's been that way now for the better part of the last 18 months. Chubb, yes, that's an insurance company that we own and a company that I like. The favorite name right now in the insurance names is Progressive Corp. That's the one to me that is showing really strong earnings momentum growth and price momentum growth as well.
All right, travel. Airlines have been bouncing a little bit. Casinos have been bouncing a bit. Cruises, travel-related names, Booking Holdings. What about this space here?
Well, I would say on airlines and to some extent cruises, the fact that oil prices are down is very helpful. So that's been a boost for some of the travel names. In terms of just travel and booking and how much are people traveling, they are still traveling. There was an article today or yesterday about how even in middle class and below, people are traveling more than one would expect. They continue to see experiences as something they're spending money on rather than goods. We see that in some of the retail numbers, and the numbers for all of these travel companies have continued to remain positive.
Retail Gap, brutal again today, down almost another 7%. Abercrombie, maybe it's moving on that. Their guidance was below. Target was down again. Walmart and Costco favored at Evercore over Target. You've got both of those. TJX called a high conviction buy today at UBS. You own that one too.
The three names to own clearly: Walmart, Costco, TJX. TJX off price,
Love TJX.
Clearly benefiting. I wouldn't touch Target right now. I know everyone continues to come on air and talk about the valuation and talk about the opportunity. To me, it looks like a particularly troubled stock. Overall, as you look at consumer discretionary, a recovery in Europe, a recovery in Asia, that's going to benefit.
There goes Apple. All right, things are looking a lot better now. Futures moving higher.
You mentioned Gap, Abercrombie, Fitch, no touch.
We finally got our rain, accompanied by some winds, but don't mind. Looking pretty good. All right, the market's moving higher. Looking good. Microsoft rising. Okay, all the New York Fangs are looking a lot better. New York Fangs looking a lot better. Okay, now we're consolidating a bit. All right, nice little reversal. Gilead had a little dip there. Gilead. If you like Gilead, I like it too. What happened there? That is the 5 minute. Oh, this is a 5 minute. Okay, 5 minute. 5 minute. Nice little dip on Gilead. Okay, I was just using Gilead as an example this morning. Gilead as a trending stock. Okay, so it did give you a little dip opportunity. Probably in the next couple of days, Gilead is going to be a good setup. It's been trending, Gilead. Okay, that said, let's keep an eye on S&P 500. S&P, nice turn. Okay, so yesterday's price action, we dropped off towards the close. We're back above some of these levels. Now we're moving back into the range from yesterday. Don't forget the kind of reversal we had. So once you start seeing some decent profits, you're up 100%, take half your position off. You got a free trade at that point. ride it as far as you can. If we get back up to 58.50, we're most likely going to run into resistance. So be aware of it. Don't get greedy. Yesterday, greedy people turned around 5 minutes later. Their positions were starting to leak as the markets dropped over 100 handles in like 45 minutes. Okay, there goes Amazon, looking good. NVIDIA's starting to gain some traction. Meta's pushing higher, so is SPY. All right, looking good. Nice job.
It's a reality. Let's get to these moves that I mentioned. We do have, it's healthcare, best performing group of the year. So you are completely out of the XBI. Why so?
I'd like you to do me a favor. Next time I mention that I've gotten into the XBI, would you just look at me and say, please get out? Because every time I buy the XBI, it has not worked over the last 3 years.
Okay.
I have tried on multiple occasions, and it seems as though we continue to have this conversation over and over again where you say, oh, you got out of the XBI. Yep, I got out of the XBI, and the reason I got out of the XBI is because it's been lousy. It hasn't worked. It should have worked, and I rotated into another large cap biotech name, which would be
Amgen.
And the reason I did that is because I want to simplify the story. I want to have exposure, but let's simplify the story. Let's go with what's working. And I truly believe that Amgen is advancing and ultimately delivering an obesity drug that potentially could challenge Eli Lilly.
Price target went up today at Bank of America. What do you think about Amgen?
I like Amgen. I think it's a really good trade. I do. It's a low multiple stock. You look at the chart, it looks like it's breaking out. It has a yield. It has a staple of good drugs. And Maritide, which is the GLP-1 drug, is once a month. They believe they're going to have phase 3 data soon. They've got drugs in inflammation. There's some cardiovascular drugs that in phase 3. It's got a nice staple of products that are going to increase over the next 5 to 10 years, which has been a problem with Amgen because Epogen and Neupogen and some of their original drugs, and not a lot of growth. So this, I think, is a good time.
All right, hey, stop showing off with knowing all the names.
Yeah, that was impressive.
Bristol, I know. She's allowed to flex. Bristol Myers, you like better?
Yeah, I like
Abbott
Bristol.
better.
I think they're all doing well. If you look at the charts, they all look like they're moving higher here. That's true of a number of the drug stocks, not all of them. Bristol's got a number that are quite a few in phase 3 that, again, are going to replace the drugs coming off. And I don't have to say what they all are, but it's Optivo, you're right. And the same is true of Abbott, which has had problems because of some lawsuits. That's getting settled. We're moving forward with devices and technology on the healthcare side that I think is
Thermo, you're talking about, right? Yeah.
Abbott and Thermo. So Thermo has not behaved well, and that's in part because of the vaccine worries. Because if you look at where they get their business, it's much from universities and from clinical trials, and these are all places that are under siege, perhaps, but the stock's cheap.
Why don't you own Lilly? I'm just curious.
So Lilly is a name that we have for the last 2 years looked at and said we want to buy it at this price, and then it didn't get to
Well,
that
you just
price.
never got your
Yeah,
price.
I mean, it's a great stock. I mean, it's something that Lilly or Novo would love to own, but maybe there's a chance right here with Novo.
You do own, you and Weiss own United Health. What do you think of this here?
I like United Health. Look, we know there's going to be or likely to be some hits to Medicaid, but they more than make it up with the Medicare Advantage, which the administration likes and goes through the whole.
All right, continue to move higher.
VBC phenomenon that the government's pushing
Okay.
everybody to. Which
So we're at 5,800. That's resistance. If we can get through this area, that would be good.
I do think that it's a safe port in a storm in the market and very defensive. Now that's really defensive, Gary.
One more, ResMed. Bring it up because it got upgraded today to a buy. The price target goes to 44 from 41. That coming at Citi today. They say the valuation is reasonable. They like the EPS growth, the free cash flow. They like the fact that they say there'll be no debt by the end of the fiscal year. You own this name?
Yeah, they're a leader in sleep deprivation, talking about literally 40% of.
But they don't lead in sleep deprivation. They lead in CPAP. They don't get people to sleep less.
I understand that, but they're the leader in the space. The stock is underperformed.
Yeah.
Right now, to me, Boston Scientific, Eli Lilly, Cencora, those are the 3 names in healthcare that you want to own.
All right, let's get the headlines now with Silvana Henao. Hi, Silvana.
Hey, Scott, good afternoon. The Trump administration has been holding secret talks with Hamas over U.S. hostages held in Gaza. Sources tell Axios the meetings also included talks of a broader deal to release all of the remaining hostages and to end the war.
Joe Terranova talking Boston Scientific. I like it. Looking for a breakout above 107.
Terrorist organization in 1997, the White House has yet to comment. Congressman Sylvester Turner died last night, just 2 months after taking office. House Democratic lawmakers told NBC News the first-term member from Texas suffered a medical emergency, but his cause of death is still unclear. The former mayor of Houston was elected to Congress in November, filling the seat left vacant by longtime Representative Sheila Jackson Lee, who died of cancer last year. Turner was 70 years old. And just a day after the Trump administration posted a list of 443 federal properties up for potential sale, it changed course today. The General Services Administration took down the list, which included some of the government's most iconic properties. The GSA has yet to comment on the change, Scott. I'll send it back to you.
Okay. All right, Silvana. Thank you so much. Silvana Henao. Up next, we'll do our calls of the day. One firm says now is the time to buy this struggling sector, and still to come, we'll tell you about some stocks that one firm says offer a safe port in this tariff storm. We're back after this.
All right, Bitcoin is ripping. Bitcoin looking really good. Not crazy about the chart on the daily, but this does look pretty good. Big taking off in the opposite direction. Looks good. All right, S&P, just keeping an eye on that. We're right up against resistance right here at 5,800. Watching 5,800. Listening to Okta's CEO.
The initial excitement happens, and then everyone has to figure out how to make it work pragmatically. And we're helping do that. Very important point there, Todd, that I am in fact sophisticated. And I thank you. At least more people realize it. I thank you for noticing, Todd. Yeah, I picked up recently a 15-inch Amazon Echo Show, and I did this in advance of Alexa Plus. I went to the Amazon event. I saw all these weird and cool things that it's doing. But as I was setting up this Echo Show in my home, in my kitchen, Todd, I'm like, holy shit, my life is going to be less secure. Like, it has my face. I'm giving information. Like, that's just the reality I need to live with. Like, things are just going to be less secure in my personal life. I don't think so. I don't think we should just live with that reality. I think what we have to do is we have to take these powerful use cases, whether it's your Echo doing tasks on your behalf, or whether it's an agent at work helping you out, doing research for your podcast, for your broadcast, whether it's any kind of your customer support agent working with agents, we can make these things secure. We can do both.
Looking for a pop through here. And don't forget this graphic is telling you a lot about what to expect if we break above these levels. That stability graphic is telling you that we could see a fast move through this area.
Stanley, Joe T. If you look at the technicals, this is the spot that you want to buy it. It's sitting right in between the 50 and the 100 day. The thing that I'm a little troubled by is the fact that natural gas has been rising over the last several weeks, but yet EQT kind of found its highest price in the middle of February. So there's a little bit of a relative underperformance. Can't dismiss that. You have to pay importance to it. Keep your eye on what develops here if it challenges the 100-day.
Oil, do you see crude? Is it $65. Well, basically 66. It's down more than 3%.
Well, we're drilling, aren't we? Lowest level for Brent since 2021. Lowest level for WTI, I believe, since 2023.
What's that mean for the stocks in the space? Don't you still have pretty good exposure there?
No, we had zero exposure to energy. We took up the exposure marginally. I think we're sitting somewhere around 2.9%. There are a lot of people that came into 2025. A lot of managers came into 25 overweight energy. I think you're beginning to see the process of energy equities, a little bit of a deleveraging, reducing those allocations from overweight.
Let's jump to Leidos, which Citi says is now the time to buy along with other defense stocks. These stocks have been hit pretty hard, as you know. Weiss, you own it?
Yeah, and I've been watching it. The chart is coming off the bottom, as is Lockheed and others. So I don't disagree with their call. I think there's still some certainty out there, but I also believe it's going to be very tough to cut defense in any meaningful way.
NVIDIA moving higher. NVIDIA.
Defense businesses, the manufacturing, the employees are in red states and blue states.
Right, but what if you cut it like they are talking about and they just spend it differently?
Right. So Leidos is one that is in the right spot. So you want cyber. You want basically you want electronic warfare where there's big push for it, right? You can't shoot down drones with $2 to $4 million missiles, which is what they're doing now. You need drone technology to do it, and there is some out there. A company, Everest, which shoots down 100 drones for a cost of a nickel. So I think you're seeing some good things that happen there.
Is that a publicly traded company?
No, it's a private company. It's a private company. And there are others like that. So technology is the way to be. That's a new form of warfare going forward. So Leidos is right in the sweet spot. Plus, they've got a big healthcare contract with the Veterans Administration, and they do have their commercial business. So when I saw the German defense stocks, European defense stocks move up, the joke of it was that their exposure to Europe is 20% or below. The U.S. companies have similar exposure. So why shouldn't those move up as well?
I mean, you just sold booze, right? You finally just said enough's enough.
Well, it's a contractor gets almost all of its business from the U.S. government, and the U.S. government is just going to hand out less contracts, and they're cutting their spending. So that was inevitable.
What about Carrier Global, which got upgraded to overweight, the price target by $1 higher at J.P. Morgan? They cite a quote tariff tango. They say it's cheap enough to add some.
Cheap enough relative to its peers, for sure. I agree with that. This is a good call. Stock's up 14% the last year. Just announced a partnership with Google for cloud to deliver some AI products to homeowners. HVAC leader. I think it's a good spot to buy.
What about Amphenol, which is outperforming Baird today?
That's an AI story. Once again, we're talking about data center connectivity, connectors, and the relationship that they have with NVIDIA. I'm somewhat surprised after NVIDIA's earnings that you didn't see a stronger bounce in the name. Talking about potential here, $1 billion in revenue for that data center connector business.
All right, Santoli, he's next with his midday word.
All right.
A lot of the players, like I mentioned, are legacy software companies. They were born a long time ago, before the cloud, before SaaS, and we have a different view. Our view is that identity and security, it should be modern, it should be cloud delivered, it should be integrated to everything. And so when we look at deals, we're always open to exploring deals, but we want modern architectures. We want to buy things that are the future, not the past. So a lot of our acquisitions have tended to be small tuck-ins, technology tuck-ins, but we're looking at everything. We're open to aggressively pursue this market. We want to be the one-stop shop for identity, which means having leading product in every identity use case, whether it's workforce identity, whether it's customer identity, whether it's privileged access, whether it's governance. We have a very strong start in those two markets. So we're open to being whatever we have to do to be the winner. But our path so far has been a lot of organic innovation. We've done small tuck-ins here and there.
All right, hang with us, Todd. We're going to go off for a quick break. We'll be right back on Opening Bid.
The rain is really coming down. Thank goodness.
I miss you. I miss you too. You want to think about Sasson? I feel like myself. Sometimes there's a vocabulary of messing everything up. I'm just trying to make sense of what's happened to us. Joy is one thing, Jen is completely different. What is that? I fell in love all over again. Sorry, homie.
We are moving to the upside as we speak. As we mentioned, we were down 0.5% to kick off the show, or right before the show started. Now we're up. The S&P 500 up 0.4%. Dow up 250 points. The Nasdaq 100 up 0.5%. And the Russell actually now positive. Russell is flirting with correction territory, down 15% from 52-week highs that we saw, all-time highs that we saw in November. So seeing a nice rebound in equities on those rumors that we're going to get maybe a pushback of a month on potential auto tariffs from Mexico and Canada. Maybe some more negotiations due here. We'll continue to watch this story. Crude oil hitting basically lows that we haven't seen since May 2023. Yields kind of reversing, firming up just a little bit, not creating any headwinds for equities, but watch the headlines because everything can change within a matter of seconds. All right, let's get into another discussion about an earnings call, and that's going to be MDB, MongoDB. They report earnings after the close. As I mentioned before the break, the bar is low on this one, down 41% from year ago levels, off 40%.
All right, we just got rejected at the 5,800 level.
Let's bring in George Tillis, senior markets contributor here to help us break this one down. George, give us a breakdown on this. You know, it's in the tech space. It's in, what you need to do. And you think AI is going to help this company, but it seems like their last couple earnings reports have kind of hurt the stock.
It has. I mean, you're right. If you go back and just look at February of last year, the stock is trading over $500. It's quite remarkable. And you would think that being sort of this general purpose database management company that's, of course, more agnostic in public and private cloud.
All right, initially rejected here.
Hyperscale industry space, that their stock wouldn't be down this much, but it is. And there's quite a few reasons why. But you know, one of the mainstay competitors of Mongo is Snowflake in the infrastructure and database management application software space. But if you do come in and look at the estimates for earnings, now they're expected to be down to 67 cents on an adjusted basis. So they're profitable on an adjusted basis. And I'll come back to this point in just a sec. But 67 cents is actually going to be down about 22% compared to last year for the same quarter. At 86 cents, they're expecting to come in higher on sales to 519 million by about 13.5% compared to the same quarter last year at 458 million. Now, I think one of the challenges with MongoDB's business has basically been the competition from OpenAI and even companies like DeepSeek, these large language models, which basically help aggregate.
All right, S&P pulling back a bit.
Organize unstructured data into making it structured, and this is important for statistical analysis, inference analysis, and so forth. But at the same time, you know, competition from companies like Snowflake has encroached on the prospective business for MongoDB. One of the aspects that is actually unique to MongoDB is that they're able to essentially host the data on one cloud platform and run the application management on another platform. So a lot of the hyperscalers may actually like this agnostic feature that MongoDB has relative to maybe some of the competitors like Snowflake. But nonetheless, I think the problem here for Mongo is that investors have worn thin in terms of their patience, because if you look at the last 9 years, and I went through their financial statements, just quickly overviewed them, the company has yet to achieve any GAAP profitability, meaning that they're making money on an adjusted basis, but on a unadjusted basis or on a GAAP basis, they haven't made any money. And if you look at the numbers last year based on sales, the company generated around 1.9 billion in sales, and they lost $200 million. So that's a negative 10% earnings yield on a GAAP basis or an unadjusted basis. And I think right now what's happened is that this has really constrained investors' patience, to be honest with you. And I think, again, the bar is low for the quarter, as it should be, but they've had to, of course, continue to increase the financing expenditures on the business. In other words, issue secondary offerings to finance those losses, which are still a problem for Mongo. And I think that's really the reason why we're seeing stock under pressure in the last year.
George, the couple of articles I read on this name really talked about good news and bad news. The bad news is the growth is decelerating, but the good news is, in an effort to try to reignite growth, they're pivoting to more enterprise customers and AI opportunities, those kind of things. They're trying to pivot this company, much like an IBM did and a bunch of companies have done over the years. But as you know, that's a tricky process. But at least they're trying to pivot to more growth opportunities to reignite and get this company growing again. Because right now, you and I have talked many times with Tom, decelerating growth is a bad word in this industry.
It is. And so we always talk about decelerating growth as, an indication of the business, obviously health, which is flying. You can demonstrate decelerating sales growth as long as your EBITDA growth is making up for it. And I just don't see that quite yet for Mongo. Now, the problem that I've noticed in this company has been transactional consistency, whether it's recurring revenue consistency, enterprise customer consistency. The bright spot is the company's technology seems to be becoming more efficient, and that may be a value proposition for end customers. And I think maybe this could be a transitional quarter for the business if they actually demonstrate more adoption of new technologies that they're offering their customers. So I can't say this one. This will be interesting because it's down a lot already. And again, if they can demonstrate some positive trend growth, getting closer towards GAAP profitability, and it can be very marginal at best, maybe 2 or 3% better than historical averages at least the last 5 years, that actually might demonstrate a pivot point or a turnaround in the stock. So we'll have to see on this one. It's going to be pretty tight.
Real quick here, George, the partnerships that they have, Microsoft, they're using their platform, the Atlas platform. Is that the key here? Because, those customers paying over $100,000 annually, that's about $2,300. Is that expected to continue to move higher?
I think it should. I think it's necessary for it to, because at the end of the day, you have to look at competition, Snowflake, new customer growth may be increasing at a decelerating pace. So what you need to do is increase, of course, net revenue retention and dollar spend on existing products by mainstay large customers. So the bottom line is that can certainly be a big catalyst. If the large customers are spending more at the margin, that's just straight to the bottom line, because those additional costs aren't really embedded in those additional revenues from high spend customers.
Yep. And Snowflake did pop post earnings, but it's pulled back, I think, on the tech sell-off here a little bit, maybe some influence there. All right, great stuff. Thanks to George Tilla, senior markets correspondent here, helping us break down MDB. So, Cav, I looked at this one. The anticipated market maker move, actually pretty big. It's a $255 stock. So $31, $32 move either way priced in. So I looked at a strategy. If you think this thing's going to rebound, the bar is low on this one. I believe the RSI on this one, Kevin, pretty low, not oversold by any stretch yet, but about the 41 level. So I looked at a strategy similar to what you did on the calendar, where you look at vol dispersion but I looked at something a little bit more bullish as an example here. If you think the stock's going to rebound, maybe pop post earnings, call diagonal to the upside. Really short-term positioning, though, on this one. March 14th, weekly cycle that expires in 9 days. Buy the at-the-money 252.5 strike call, and then against it, sell the March 7th weekly options that expire in 2 days, the 275 strike call on that one. So $22.5 wide call diagonal, and you're paying roughly we've got a $10 debit on here. It's trading closer to 11. Markets have rebounded, like I said before, but you'd have to pay $11 right now. But if you pay that $10 debit, you'd have $1,000 in risk. If you paid $11, you'd have $1,100.
Okay, here's that fast move we've been looking for.
Even about 256, Kevin, to the upside on this one. Anything above that's going to be profitability on it. Really short-term call diagonal to the upside, Kev. Give me your take here because you're paying less than half the width of it.
Yeah, you're collecting a fair amount of theta too on this. I've got the theoretical theta of about $315. So theta's working in your favor. You need a move. Remember, this is a big boy diagonal. It's $22.5. You're paying somewhere between 10 and 11 right now, Tom, for it. And this has a chance, but you need a move, Tom. This is one of those, you're buying something pretty much right at the money, just a couple dollars in the money, and you're looking for a move up towards, the 275 level. So you're looking for about a $20, $18, $19 move to the upside, Tom. But, this has got a chance if you're right directionally for a pretty good return on your money here.
Yeah, Kev, that 275 strike on this one, which is nearly $20 out of the money to the upside, that expires in a couple days. That's worth $10 in option premium. That's all extrinsic option premium because of higher implied volatilities. We mentioned that vol dispersion again, buying 112% in the aggregate on the March 14th, 252.5, selling about a 210% in that near-term March 7th weekly options. Kevin, before we wrap up here, we're near session highs as we're going to break. I mean, you just got to be prepared that, it's going to be headline risk driven, right?
Yeah, you got to watch almost every hour, Tom. And right now for headlines coming out, so far the headlines are skewing a little bit positive, but they weren't this morning, Tom. These markets, the S&P was down 0.5%. So these markets continue to be all over the board.
Yep, and the VIX has come off a little bit, just below the 23 level. Watch yields; those have firmed up a little bit. A little sell-off here in treasuries at this point. Watch the dollar; that's at multi-month lows also. So there's a lot to watch, but I think the biggest thing is, as Kevin mentioned, watch the headlines because this could be that roller coaster that we saw once again that we've seen so far this week. All right, that's going to wrap it up for us today here on Fast Market. But stick around right here at the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No
All right, the market's looking good. All of the New York Bank components are moving higher.
Money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day.
bonds, stocks across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. Alex, we are firmly green today after some pressure that began this week. I leave and markets tumble. I guess though we really saw that start to pick up now about a week and a half ago, and we've since seen more and more of these macro pressures dampen some of the overall expectations for now economic data, and as far as like stock market performance. I mean, all of the headlines I was still very much tuned into, and I was like, I have got to get back to work. What is going on?
Yeah, it's a noisy market at the moment. You see big moves that happen very quickly. You can see they've happened at several times even today. But we've largely, over the last at least few sessions, been kind of in this range. Now, the range is a wide one. I mean, yesterday we were down like 100. We rallied all the way back. We were up on the day, and then we went back down like 70 or 80. And so you're having these tremendous swings. Things change dramatically. So for traders, knowing the comments from the president, knowing when there's economic data, all of this stuff is critical for a short-term trader. For a long-term trader, the zoom out, cooler heads prevail conversation, I think is critical. That said, if you feel the information that's coming in is changing your outlook on things over whatever that period is, then yeah, it's time to, address the plan, see if there's any changes that need to be made. But try not to react if it's a longer term situation to every little headline, this, then that, and then this, and then that. And then it's like, it's a back and forth tug of war. And that's what's really, I think, catching and capturing the attention of investors and traders right now is what you look away for 10 minutes, whole different picture when you look back.
Yeah, and I know oftentimes we say, of course, the stock market is not the economy, but everything I read, which I actually agree with, is the rhetoric of confidence right now seems to be a bit waning. So that can impact, the stock market, and consumer confidence has buoyed the overall U.S. economy for quite some time. So that I do think right now remains a bit in flux, but there's still so many unknowns. So we will step away from some of that conversation on our show. There's still actually some pretty big movers today to discuss. We'll kick things off here with some of those biggest movers to discuss throughout today's session. We'll also be looking at Palantir for FOMO today, as it did strike now this TMT TWG, global partner, now bringing to their financial services. So expanding their financial services offerings. Shares are higher today. Tesla also with another bad month overseas in Germany as sales tumbled 76%. We'll also be diving into the retail earnings roundup and some winners and losers within retail. And we'll close things out with a retailer that actually ties it all together, JD.com, which is reporting tomorrow before the market opens.
Yeah, lots to get through. If there are any breaking news headlines or major market moves, of course, we'll go through those. Well, let's go through some of our movers here. First one I see on the list, ANF. This has been a big winner. It had been, at least I should say, but story has changed. Okay, it was a big winner like early last year. The story's changed really dramatically in 2025, but it had kind of leveled off for a lot of the end of 2024. But to me, I can't get out of my head the turnaround for ANF and just how much it has kind of come back into just kind of trendy fashion. It's up 136% over the last 3 years, but depending on the time frame you look at, most of the shorter ones not so great.
Yeah, and I will say that even in terms of the comeback today, I mean, I know shares were down almost 12%, but shares were earlier today down about 16%, lowest levels not seen since 2023 after issuing a first quarter profit warning due partially to higher inventory levels and slower sales over the winter. They also said they expect their 2025 sales to increase by 3 to 5%. That was below consensus, calling for 5.5% growth, partially due to the impact of tariffs. So for the first quarter, expecting to earn now $1.25 to $1.45 a share, well below consensus of just shy of $2 a share, actually. Again, higher freight costs, inventory levels, but the company did say to analysts they have a bit more carryover inventory versus last year, which they've been working through to sell through as they see these colder temperatures here in January and February. The company also did cite outsized growth in high-cost items like some of their overall dresses, licensed products. That's actually a profit headwind, but they are forecasting now earnings for the year to even somewhat disappoint versus consensus and say their outlook does include an estimated $5 million impact from tariffs on goods imported from China, Mexico, and Canada as laid out in February. So it does not include, though, I think that this is an important asterisk because a lot of times it's like, okay, the bar has been lowered, maybe that's a good thing, but it does not include any potential future tariffs or policy changes or retaliatory tariffs. So that still does remain a bit of a question mark for a lot of these retailers. I think right so to adjust expectations accordingly, but then I think that the major question mark is, do we have to further adjust to the downside?
Yeah, and we are hearing from Howard Lutnick right now regarding the Trudeau-Trump conversation. So maybe some of that information
S&P continue.
out. It does seem that there's going to be something. It's just a matter of what it looks like. Let's talk Marvell, though. This is a name that has earnings still on its calendar. They are slated for after the close today. A name that had been a nice performer, but like so many of these tech names, it has changed its trajectory in recent weeks, falling from about 127 now down to sub 90 a share.
And so, okay, I think that that's interesting. A lot of that pressure that I've seen just last week as we pulled down about 11% last week, trying to hang on to its positivity on a 12-month basis, but down about 20% on the year. Street expectations are now for around $1.8 billion in revenue on adjusted earnings of 59 cents a share. Marvell does sell a portfolio of chips and hardware products for data centers as well as 5G infrastructure, networking, and storage markets. And right now, also does aid some of these large tech companies on designing their own semiconductors.
Nice reversal.
Application-specific integrated circuits. That's where they fall within the AI trade. But last week, Raymond James actually kept their outperform rating, saying they expect the custom AI accelerator market to grow by $50 billion by 2028, and they believe Marvell is well positioned for significant market share given its strong intellectual property and system level expertise and its expert track record. So Bank of America did say that this week's earnings could give a lift to AI. We do also know we have Broadcom coming after the market closes on Thursday, but so far that has not been the case. And I guess who could have predicted some of this massive turbulence created by, tariffs? But I do think that within the AI chip demand story, it also helps that Marvell is a pretty major partnership with Amazon. We do know that they're still planning to spend, substantially so.
Yeah, no doubt. And you have to wonder, too, at what point buyers are going to step into some of these names that have been such big winners. They're finally pulling back, perhaps giving opportunity for those who missed out on some of those runs. I mean, you're still talking about a name that's still, even with this pretty steep decline of almost 20% over the last month, a rolling month period, it's still up, 11, 12% for the last 12 months on a rolling basis, and almost 37% over the last 3 years. So, at some point you got to wonder, is there going to be a, kind of line in the sand that's drawn by bulls who missed out on some of these names? I mean, NVIDIA, maybe you saw that at 110, buyers stepped in. We'll see if that happens with Marvell. A name that needs that to happen and needs that to happen maybe quick is AppLovin. This stock, after what seemingly never had a downtick, has not had an uptick since those moments. Huge, dramatic swings around earnings, but a stock that went from around $60, $70 a share to over 500 is back to 314.
I know, what a volatile ride it has been for AppLovin, and this name really rocketed. On now the renewed hype around the
Okay, another little rejection there.
post earnings move. Then the day following, we saw those two short reports issued, one by Fuzzy Panda Research, one by Culper Research, that were really saying that the stock has been at risk of allegedly stealing Meta's data. Also accused them of fraud by Axon 2.0, which is the machine learning algorithm, and was at risk at one point of being removed from App Store platforms for violating terms. So all that turbulence has now brought shares down.
All right, so we got some sells right here.
Over the last 12 months, but now with some news today, plans to sell its games unit to Triple Dot Studios in a $900 million deal. First reported by Business Insider, Triple Dot Studios is worth about $1.5 billion, and it specializes in these popular mobile games. So that was at least, I think, perceived as maybe a mixed message, because
Somebody took some profits there.
Today, well, the rest of the market is seemingly faring okay. So most, actually, I would say analysts on this name have adjusted accordingly, but you look at the average price target right now, 504, implies about 60% upside. I think speaks to the fact that we haven't seen necessarily all of those with conviction on this name update their coverage. I don't think that necessarily means the entirety of the analyst community, the sell side on AppLovin, is saying we could rally 60%. Hey, maybe they are, but I think a lot of times it's just a more reactionary price type activity.
Things are on the move, so I do have an update, but let's hit SMCI first, and then before we go to break, I'll go through some of the headlines, but it looks like we're getting some comments from the president regarding the conversation with Trudeau earlier on today. SMCI, read on the session. There's some news regarding Foxconn.
There is some news regarding Foxconn. So good news from Arrival could be at least trying to aid another name that has pulled back. I pretty substantially from its highs here, but we did see yesterday it defied a lot of the fears over tariffs that actually rose 8.5% in yesterday's session. Investors, though, looking to focus on the strong demand for AI servers. So Taiwan's Foxconn, known as Hon Hai Precision Industry, reported Wednesday that its revenue for the first 2 months of the year was up 25% in 2024. Foxconn did say it expects a strong first quarter. And, of course, they're like Supermicro in the fact that they are right now benefiting from being a major manufacturer of these servers that do contain NVIDIA chips. But Supermicro, again, still notably off of its highs that it saw once really we got those delisting fears somewhat aided and done for. But right now, I do think that the overall disappointment we've seen that has somewhat plagued this name today, and be no exception, it's just the uncertainty.
We got a pretty nasty storm outside.
Yeah, well said. Do you want to go through some of these headlines?
All of our utilities are buried, so don't worry about that. It's just
So we have sort of two things going on at once. Now, Brent, I'm really
tornadoes. Let me see if there's any tornadoes in the forecast.
The media were getting this information. I think Howard Lutnick was maybe in an interview on Fox, but I don't know where the Trump quotes are. But Lutnick, a couple things that were said there. Repeats April 2nd.
All right, severe weather.
Is coming. Says that he spoke with a giant computer maker today. Obviously confirmed that the call had happened. When you look at what Trump has said, he confirms he spoke with Trudeau. He said that the call ended in a somewhat friendly manner. But then there's a phrase here that I think may have led to some of the weakness, at least initially. He says that he told Trudeau that's not good enough. It was also said that Trudeau asked what could be done about tariffs. And it sounds like it's still a situation that's going to be continue to be resolved and negotiated. It doesn't sound like at this point that maybe some of the optimistic leaks that you saw yesterday, that some of these pauses might be coming into place, or that maybe it was going to be a very short-lived little spat over some of these things. Doesn't mean that we won't have resolution soon, but doesn't sound like we have resolution right now.
That would be correct. And I would say that Howard Lutnick and some of his commentary yesterday were a huge maybe point of relief if we weren't going to see necessarily the entirety of these tariffs land. But doesn't seem that way, at least as of right now, saying remarks from Trump saying that is just not good enough. So we will be following the story closely as it develops, as I'm sure Trump will continue to move markets throughout today's.
I mean, how hard is it
these unknowns regarding tariffs
to monitor fentanyl crossing the border? I mean, there's got to be ways to do it.
Here as well, Supermicro Computer with our chart master coming up next.
I would think. All right, so got some wind gusts there. All right, Supermicro drifting a bit lower at the moment. Supermicro. If you got puts or cover calls on it, helping to dampen the volatility in Supermicro. Let me see what those cover calls are doing. Okay, those are okay. They're up $60 per contract. All right. Be nice to get more than one or two follow-through days.
This is the story of the one who doesn't just see a broken dot, he sees lost revenue, a late night, and work stalled to a halt. Thankfully, he has the experience to handle.
Yeah, that weather should reach you, Mondo, by 4 p.m., it looks like.
Offering access to technical product specialists and the scales delivered fast. So he can keep his business in gear and always moving forward. Call thegranger.com or just stop by. Granger, for the ones who get it done. And the beauty. Now that I've traded Samson, I've essentially done everything I can. He now needs to rest. He needs to build up those energy reserves so that he has a chance to see it right through to tomorrow.
Okay, yesterday we looked pretty good too. Yesterday, we need to get above yesterday's high, get back into Monday's range. RSI is still set up to move higher. So is MACD and stochastics. It's better for the bulls right now if we do get a bounce. Markets are set up. Okay, Microsoft's still pushing here. Microsoft, day 2 on the reversal. Microsoft looks good. You're starting off with Microsoft. Don't buy it at the high of the day. You want to buy a BNC pivot Okay, we just got another little dip right there. Right around 11:15, 11:45, we had that little double dip chance to get into Microsoft before it went higher. Okay, day 2 looking really good for the reversal. Volume's picking up. By the end of the day, it would be nice to see if we could match yesterday's volume. That would be confirmation of sorts. Okay, we got Zscaler tonight, earnings tonight on Zscaler and MongoDB.
First up, taking a look at Tesla sales in Germany falling 76% in February. This in response to CEO Elon Musk weighing in on the country's closely contested federal election. Now, Musk did endorse a far-right alternative for Germany ahead of the election on February 23rd. Tesla sales decline was a sharp contrast from the overall EV sales that we did see in Germany. They actually rose by 31% in February. But when you're taking a look at today's stock reaction, parallel gains of just about 0.3%. Of course, is coming on the heels of the pressure that we have seen on the stock most recently. It is one of those that is bucking the downward trend that we are seeing across some of those Mag 7 names. But again, Maddie, this calls into question just, I guess, two things. One, just whether or not demand for the EV market, what exactly that looks like, and what exactly maybe those more realistic expectations are going to be here in the months, quarters, and years to come. But then two,
Apple, another hammer. Apple looks like another hammer today. Nice reversal so far. Short this morning. Congrats. Nice reversal. Meta needs to get back above the 50-day. Meta looks like it's going to do it today. So we had buyers in this area. 640. We slipped below that yesterday. Now we're back. Trying to get back above the 50-day. If Meta can push a bit more, we may get another rip higher for Russell, who traded this yesterday for, I believe, double-digit gains on calls. Okay, Microsoft, we just talked about. Apple, we talked about. Amazon reversing off the 200-day. That's a good place to look for institutions. Watch for the volume. Still a little absent of what I'd like to see. I'd like to see more volume like over here. Okay, when we break out of consolidation, I want to see volume like this, mostly green. Right now it's a little mixed, so not the best confirmation. But stochastics and MACD are trying to turn, so is RSI. So this looks pretty good for Amazon, back to the 50-day perhaps. I have AMZU. I have AMZU shares. AMZU. Okay, so at the 200-day, this is a leveraged ETF. 2 times bull. Looks good. Look for this to get back to 43 or so in the next 2 to 3 weeks. If Amazon can continue. All right, Broadcom, there was some news there about Broadcom. Okay, nice little bounce. Meta, we talked about. Tesla. All right, still consolidating near the 200-day. It's not dropping off. That's kind of a good sign. I'd like to see us back above the 200-day and volume pick up. RSI, MACD, stochastics are all set up. We just need to see volume like over here in November and December. We don't have that. We have the opposite. We have selling volume, but yet we're not dropping off precipitously. So watching Tesla for a move back above 290 and the 200-day moving average. S&P at 5,800, trying to push a bit higher.
This is retailers brace for a pullback in consumer spending and the impact of tariffs. Yahoo Finance's Brooke DePalma joining us now with the biggest takeaways. And Brooke, we are seeing a big move here in the share price.
Yeah, shares falling as much as 16% this morning after the company reported this slower sales growth expected in fiscal year 2025. Now, the company said specifically that they expect net sales to grow between 3 to 5% this year as consumer spending does in fact weaken, and that was less than what the street was looking for. That's largely leading to this decline in the share price this morning. Now, the company does see operating margins to come in between 14% to 15%, and that is an outlook that includes the estimated impact on tariffs from imports from China, Mexico, and Canada. They've made sure to say that this does not include any incremental tariffs that could go into place this coming year. But the company did say in response to these tariffs, they have no plans or intentions to take any significant price increases. They said they've been pretty disciplined in their approach to pricing, and they are keeping close to customers to understand just how much they can spend in this environment. But gross margins did improve year over year. That was driven by lower promotions. The company said that they're also looking to see if they can pull back on any promotion days this year, as they really keep in mind that
NVIDIA.
promotions, but also sometimes they're willing to spend. Yeah, and Brooke, just
Okay, NVIDIA trying to move off this double bottom zone. This is pretty good for anyone that likes to swing. You put a stop underneath 110. It's about 8 points. You could put a stop underneath today's low and look for a follow through.
Absolutely. We've heard this from Walmart. We've heard this from Target. We've seen this cautious approach that these retailers are taking. Walmart CFO John D. Brady telling Yahoo Finance that he calls it a prudent approach because they really don't know how consumers are going to swallow this potential increase in cost. The tariffs could impact like tomatoes and avocados and agricultural products in the
NVIDIA.
next days, and then eventually trickling all the way down to the apparel sector. And so it's really uncertain on how exactly consumers will respond. And so consumers taking this really cautious approach when it comes to same-store sales growth outlooks there.
All right, Brooke, thank you so much for joining us. I definitely appreciate it. As we head to break, I want to take a look at shares of BlackRock, the world's largest asset manager, led one of the biggest acquisitions of the year, and a deal that marked both the firm's expanded reach and infrastructure and a win for U.S. President Donald Trump, who raised concerns over control of key ports near the Panama Canal. The company led a consortium that will buy a controlling stake in Panama ports and become a political lightning rod in a larger unit that has operations across 23 countries. CK Hutchinson is saying it will receive cash proceeds of more than $19 billion from the sale. You can see BlackRock shares up just about 0.6%. We'll be right back.
Okay, after hours, Rigetti. We got Rigetti reporting tonight. Rigetti reporting tonight, earnings. Okay, I'd love to see this back above 12. All right, what's Palantir doing? Palantir. Okay, trying to stay above the 50-day. Robinhood, looking for that to push back up. Robinhood.
President Trump's drill baby drill policy getting a standing ovation at last night's address to Congress. The president saying that he is focused on reducing energy costs as a way to tamper down inflation, very much reiterating some of the rhetoric that he has been saying as of late. Now, his tariff announcements in tandem with an expected boost in supply from OPEC have also weighed on oil prices over the past several sessions. We now have crude below $70 a barrel. Joining us now with more, we want to bring in Fernando Valle. He's Hedgeye Risk and Management's energy analyst. Fernando, it's great to have you back here with us. Let's talk about maybe what is the biggest driver in your view of the drop that we've seen in crude prices and really across the board when it comes to oil over the last several days. Is it more tariff driven or is it more OPEC driven?
All right, let's see if we can stay above 5,800.
Plus, increase in supply. I think that was something.
The New York Fangs are kind of mixed at the moment.
Expected to be delayed continuously throughout 2025. We're still not in a super tight oil market, so bringing in as much as 2.2 million barrels a day, which is just over 2% of global supply, back into a market that's not, again, very tight, is almost certain to bring prices down.
So it sounds like you think that OPEC plus output hike outweighs any potential negative impact from tariffs that could lead to a lift in prices.
Yeah, absolutely, and especially because when you hear what's happened since even when we spoke yesterday at night, they're already talking about not pushing those sanctions on Canada or Mexico, and even the energy tariffs themselves are only going to be 10%, not 25%. I think the consumer has been very clear that they can't afford higher prices, and so even if any tariffs came on, I would expect that to be borne more by the refiners and by the oil producers than by the consumer itself, because again, they're already fairly stretched.
I know you have crude obviously below $70 a barrel. You also have Brent breaking below $70 a barrel this week. I guess the question is, given all of this, what does that downward pressure then potentially look like? How big of a slide could we be potentially seeing?
Well, I know from our sources in the administration that they want oil to go as far down as $50, whether that be Brent or WTI, to help with inflation significantly. And of course, energy is a major component of inflation because it affects nearly every other segment. So it could be pretty painful if they try to get more production out. And again, OPEC Plus has an outsized weight on global supply, even more so than shale could do. I think Scott Bessent, the Treasury Secretary, has talked about trying to raise U.S. production by 3 million barrels of oil or 3 million barrels of oil equivalent. I think that's not feasible, but OPEC can do it, and in relatively short order. So that's, again, not a super tight market. Having that supply, you could push it down quickly. It is counterbalanced by Germany saying yesterday as well that they're going to increase investment significantly. So that could be higher energy demand. But we'll have to see which one prevails at the end.
You know, prices go that low. How much pain is that for some of these larger oil giants?
For the larger, not so bad because they have really strong balance sheets. You know, you look at an Exxon, a Chevron, even a Diamondback, they have pretty strong set balance sheets, and they've braced themselves on not having oil price support in the near term. They can withstand this shock. It's really the players.
Robin Hood, watching Robin Hood.
Markets, the players that have weaker balance sheets. You know, I'm looking at a Devon Energy, or players that are in more marginal basins like a Chord Energy that is in the Williston Basin, is a pure play on the Bakken. They may have to shut first because their cost structure is just higher than someone in the Midland Basin or in the Permian, like a Diamondback, for example.
And Fernando, since you're already talking individual names, what would you say is the single best investment idea that you have in terms of a company that could be the biggest beneficiary of these lower energy prices?
Well, we tend to like the natural gas names. We have Range Resources as one of our best ideas because on top of getting more demand for natural gas overall from reindustrialization, AI, data centers, you're also getting more demand for LNG that's going to Germany, as I mentioned, and other parts of Europe. And then on top of this, the tariffs and lower oil price will decrease the production of associated gas in the U.S. So that would lower the overall supply of natural gas, which would be positive for someone like Range that does dry gases and doesn't produce oil, mostly natural gas.
And since you mentioned your sources within the administration, Fernando, I'm just curious what you've heard from folks in the White House in terms of potential carve-outs for energy suppliers.
All right, watching Super Micro for our turn back up.
As the administration teases out
Watching Super Micro.
Well, the main importers are Canada and Mexico, so
Okay, S&P. S&P just sitting here consolidating again. Looks like we're going to consolidate.
by the Trump administration, we don't import significant volumes from OPEC anymore, but I would expect that it also would not be taxed at the same level as other tariffs.
All right, Fernando, we gotta leave it there. Thank you so much for joining us. We appreciate it. We're gonna get a check-in now on some chip stocks, something the president touted on last night's joint address to Congress, talking about the end to Biden's CHIPS Act. Again, that multi-billion-dollar CHIPS Act from the Biden administration, Trump calling an end to that, while also announcing investments into chips manufacturers that would bring domestic production to the United States. So an interesting kind of cognitive dissonance on those two policy positions here. You can see a lift to some of these chips names, specifically Broadcom, lifting ahead of earnings of about 1.8%. You have some pressure in those domestic names like AMD and Intel, and then you've also got NVIDIA flipping around the flat line a little bit today, again, off of that announcement from President Trump calling an end to Biden's CHIPS Act. We're going to be back with more market coverage here on Catalyst.
All right, futures just kind of went to sleep. It is 1:35 on the East Coast, the best coast, the coast with the most. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a rainy March the 5th. We're waiting for Beige Book to come out at 2 p.m. Other than that, the markets are just sitting here taking a siesta. Tonight we have Rigetti earnings along with Zscaler and MongoDB. Looking forward to those later this evening after the close. Pretty intense weather outside. All right. While we're chopping around, if you have positions that are looking like they're going to continue to move higher. Maybe sell some covered calls while we're sitting here chopping around for the end of the week or next week. See if you can't get $150, $200 per contract for every 100 shares that you own. A good way to make some premium while the markets aren't moving. All right, see if we can't get a bounce. We got a consolidation again like we had earlier. Earlier this morning, we had Bollinger Bands contracting. We have that again. Watching the New York FANG components.
Jackson, thanks for being here. So we've been talking about the impact of these tariffs all morning. One of the questions we have is around CapEx, as we're seeing companies sort of pausing on spending, having some questions about the policy implications moving forward. How could some of these AI companies be impacted if we do see a slowdown in CapEx?
Well, if we see a slowdown in CapEx from the broader industry, I don't really see much of an impact in terms of its negativity or potential for the software stocks. But if these tariffs or just the broader uncertainty maybe calls into question whether the software companies or the hyperscalers that are spending a ton of money on CapEx, whether it calls into question whether those investments are a good idea or not, that is where the CapEx cycle would impact software. But in terms of their customers, I'm not really sure if I see much of a direct impact at this point.
Do you see any correlation just to the threats of tariffs and the real risk there, maybe the implications more broadly speaking across the industry?
So the tariffs, we all know this, whether in software, it's not as if those companies are importing many things from Mexico, Canada, China, wherever. It's not. They are human businesses. They are intellectual property businesses.
Yeah. But just going back to Matt
Yeah.
and more so introducing the uncertainty, right, and the impact that's going to then potentially have on CapEx, and I guess those that could be most exposed.
Before that, this is an ongoing slump. You saw a slump in January of 60%. So you're just seeing back-to-back declines. The decline's getting worse. To your point, he has angered people over there. There's been essentially backlash after Elon Musk endorsed the anti-immigration, the AFD party ahead of those elections. You've also seen this broader slump in sales over there in Europe for Tesla across the EU and the UK. You saw sales slide there by more than 45% year over year to fewer than 10,000 vehicles. You saw market share decline there as well during this.
Blah, blah, blah. Tesla. All right.
Make their decision.
So let's look at an example of a company you cover like Microsoft. One of the questions I have is, as we've started to see all this tech volatility, the sell-off in the Mag 7, has anything fundamental to these companies changed that would impact anyone's bull case on a stock like Microsoft? Have you seen any material change to the business that investors should be worried about?
I don't think so. No. Fundamentally, no. Other than, like I mentioned, the risk that some of their larger deals might decrease in size, or some of their larger deals might take a little longer to close.
Welcome back to the Exchange. I'm Kate Rooney with your CNBC News Update. The Department of Veteran Affairs is planning to cut 80,000 employees. That's according to an internal memo obtained by NBC News. Top officials at that agency are being told to cut enough workers to return to 2019 staffing levels. The Biden administration added tens of thousands of positions to help handle the 2022 PACT Act, which expanded care for veterans exposed to toxic chemicals. Meanwhile, the Trump administration has stopped military deportation flights to Guantanamo Bay and other countries because of the price tag. According to the Wall Street Journal, Some flights carried a dozen passengers to Cuba for at least $20,000 per migrant, while 3 flights to India cost $3 million each. And in Florida, a man is under arrest after he allegedly swallowed stolen jewelry valued at nearly $770,000 last week. Orlando police say the man took that drastic step as he was being arrested, and an x-ray of his torso appears to show a foreign object in his stomach. Police declined to comment on whether they recovered the earrings. Guys, back over to you.
Gross. Thanks very much, Kate Rooney. Elon Musk is saying this morning that AI productivity gains will transform everything about our economy. And the next key battleground for AI, voice. It's the most natural and efficient way of using it. And there's a new player making a big splash. Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly. So that new player, Sesame, was all but unknown just a week ago, and it already has an active fan base, including myself. I've been playing around with it. Here's a snippet of my conversation with Miles, the chatbot, this morning. What do you think is the hardest question that I could ask you?
Ooh, tough one. It depends, Miles. Are we aiming for philosophical, personal, or
I'm not
maybe a good
Miles.
old thing?
You're Miles.
My bad. Brain fart. Sometimes these circuits misfire. So, what's the hardest question you think you could ask me then?
Yeah. You tell me. I'm asking you.
All right. You got me there.
Now, you can see it's not perfect, but I chose that portion of the chat because it showed that I could easily interrupt it without it missing a beat. It also seemed almost embarrassed for the mistake it made, calling me Miles. And that's really key because the next frontier in AI is voice, but it's voice with a dose of EQ or emotional intelligence. Now, the strength of OpenAI.
All right, watching Meta.
It's grasp of context and empathy that outshines other models, which are designed to pass math and coding benchmarks. Likewise,
Meta.
Amazon's voice assistant, Alexa Plus.
Okay, Rigetti. We got Rigetti earnings tonight. Meta.
That can even detect tone or mood and answer accordingly. Neither of them, though, are
Trying to get back above the 50-day. Meta.
chatbot, despite hundreds of millions or billions of dollars they cost to develop. According to PitchBook, Sesame has raised just $10 million, and it's based on Meta's open source Llama architecture. In that sense, Kelly, it's reminiscent of DeepSeek's breakthrough in model building. That came out of nowhere to jump to the front of the race. Sesame may have just done that in voice AI, and at least to me, Kelly, feels the closest thing we have to, that version that we saw in Her, the movie from the early 10s, where there's a chatbot that you can just talk to for a long time.
Notebook LM was kind of close to this experience, but a different product. I'll definitely sample it, see if it'll help me with cooking tonight. And I take your point about the cost and the effectiveness in using Llama to do this is very, very significant. Deirdre, for now, thanks, Deirdre Bosa. Speaking of DeepSeek, coming up, Democratic Congressman and gubernatorial candidate Josh Gottheimer, who estimates Trump's tariff plan will cost American families an extra $2,000 a year. He joins us from Capitol Hill to discuss that and his bill to ban DeepSeek on government devices. That's next.
All right, watching Apple for another push higher here. Apple. Okay. So everybody has their spin on Trump's speech last night and what it's going to mean to the average person. I don't know. I just think about the last time this happened. Remember when in his first term he was doing tariffs on solar panels and washing machines back in 2018? Remember that? Well, just so happens that we bought a washing machine at Home Depot right during that time period because we had just moved here. And actually, we hadn't moved here yet. It was solar panels we were looking at. The costs, I didn't really see a big difference from the cost estimates I did in 2018 and what we actually had installed on our house when we moved down here in 2021. So I don't know, maybe short term, there's going to be some costs, additional costs, but the markets are at all-time highs, barring the recent pullback, but we just made new all-time highs 2 weeks ago. And it's in the face of everything that's been going on. And if you saw what Charlie Bolello posted a little while ago, Let me take a look at that. Screenshots. Screenshots. Charlie Valello. Downloads. All right, Charlie Valello reporting that 97% of companies reported S&P 500 fourth quarter operating earnings are up 14% over the prior year. All right, so all those companies reporting since Trump took office and the fourth quarter earnings up 14%, the 8th consecutive quarter positive year-over-year growth. Now, you might be saying, well, yeah, it's about time to roll over, which is what we're in the middle of. Could be. With 97% of companies reporting, that is looking pretty good. So there goes the S&P starting to move higher. So end of day, let's see if we can't run up. Let's see if we can't run this up a little bit more, up to 58.50. If we can push off of this level and volume pick up, watching the volume here. Watch the volume, see if we can't head towards 58.50. Next resistance, 58.45.
Make money.
All right.
Last year, and if you look at the first 2 months of this year, it seems to be tracking to an even higher level. So I think that's reflective of the fact that there are just so many flavors of ETFs out there today, and so many different types of investors. A lot of different views are being expressed, which is not surprising given some of the activities that have happened over the last few months. It's very hard for anyone to be right or wrong right now because it seems to be shifting on a day-to-day basis. We've seen a reversal in the flows to some degree, where we saw a lot of participation, obviously, and sort of the strong equity markets at the end of the year, and a little bit of softness in the fixed income markets. That's flip-flopped over the last 2 months, stronger fixed income markets versus equities. But we're still seeing a lot of flows into U.S. large cap securities, so they're just reflective of still this bet that in the long run, the U.S. economy still has some legs to it. We're seeing some softness in small caps, so a little bit of that, maybe taking a little bit more of a conservative approach. And things like dividend securities, others are starting to get a little bit more play.
What about the international component? Are you seeing more interest, I would guess?
Yeah, absolutely. I mean, if it's actually been a pretty, again, surprising few months, maybe not surprising, but very different. If you look at EFA versus S&P returns over the 1, 3, 5, 10 year period.
S&P trying to move here. S&P watching. Looking for buy order blocks.
Pretty big buys there. EFA is up very strongly at the start of the year. You're seeing obviously some engagement in possible increase in defense spending in Europe, other triggers that are causing reinvestment to happen in Europe. So outside investments are making up about 15% of ETF flows, which is a step up from what we've seen over the last couple of years.
But it sounds like that's not leading to as much of an outflow.
Okay, looking good here.
As I might have anticipated.
Yeah, I think part of it is that the pie is getting bigger, so just a chunk of that allocation is going to international, where we're seeing a little bit of reallocation flows, a little bit less in the long end of the curve on fixed income products, as again, there's maybe a bit of defensiveness.
S&P 500. Let's see if we can't get to 58.50.
This year, the thought was maybe that rates would stay stable for possibly a bit longer, while there might be rate declines coming in the year ahead, possibly, maybe not as many. As you're looking at some signs of economic weakness, some questions around what the tariffs might do in the short term.
Okay, Bitcoin with a higher low. Bitcoin.
There's been a little bit of that pullback, that thinking that maybe there could be a few more rate decreases. And if that's the case, then do people want to change the duration of their portfolio? So we're seeing a bit more play in the short end of the curve from the ETF flows. We're seeing money going to products.
President Trump emphasizing his Make America First agenda in last night's congressional address, vowing to cut taxes, eliminate wasteful government spending, retaliate against countries he says take advantage of the U.S. with reciprocal tariffs. My next guest warns these measures will hurt families, not make our country stronger. Joining me now is Democratic Congressman and gubernatorial candidate from New Jersey, Josh Gottheimer. It's great to see you. It's almost like I don't even want to get into the it's great. He's the best. He's the worst. What? How about this 1 month delay on auto tariffs, Congressman? What do you think? Welcome.
I think it's good to see you. I mean, listen, I'm mostly worried about what I didn't hear last night, which is what are we going to do to make life more affordable for people, to get taxes down, to restore SALT, and then, of course, the tariff policy, which we know is a $2,000 tax increase.
I love it. Representative from New Jersey talking about what Trump is going to do to get taxes lower when he's in a state that has some of the highest taxes in the nation. Love it.
To me, it's all about how we're going to make life more affordable. There wasn't a lot of time spent on that, and I was surprised.
Yeah, well, and look, there are some saying today, look at the massive spending by Germany, which could help the U.S. Look at the massive stimulus spending by China and our bond yields. So on that basis, he's been able to achieve some things that we might have not expected to be done around the world.
All right, S&P continues.
8 weeks ago.
Right, but look at, and obviously the market reacted to this, but look at the policies he's setting forth and the pain that's coming. If you actually do put if you had this across the board tariff with two of our key trading partners in the north and the south, and we know from autos to food what the impact of that will be on real folks who are just going to the grocery store and dealing with higher food prices to begin with on eggs and other products. You know what this can mean is just higher prices and higher costs for people. And it really is a tax increase on people at a time where we need to be cutting taxes and making life more affordable. And I was surprised he didn't talk about SALT either. You know, he threw in a few items on taxes, but didn't talk about restoring the state level tax deduction, which he had been talking about. And I think that's critically important in any tax package that's coming down the road.
That's very interesting. And yeah, it was a warning sign during the Biden administration when consumer confidence really plunged. And it's not looking that great right now. So that's going to have to turn around if they want to kind of build a coalition, get through the midterms. I mean, pass this massive tax bill that's got a lot in it.
So we and right now, you know, they're going it alone. There's many of us be willing to sit down, and I'm reaching out to try to figure out where the places we could agree on a tax bill where we can actually get taxes down for folks in Jersey, make their lives more affordable. Whether you're talking about a child care tax credit or you're talking about SALT or other provisions, R&D that would help. Obviously, a lot of businesses in Jersey grow and hire people. So those are the kind of things that I'm focused on. And also, last night, you know, he went after a lot of, and this is what part of the problem with his chaotic across the board approach in general is you got to make sure these unintended consequences of not hurting key places like the FAA at a time where we've had a lot of incidents or.
Okay, we'll continue to move higher. S&P looking good.
Seniors that I'm hearing about, right? This uncertainty, what information is he collecting on them? Those are the kind of things that I think are really effective. And then of course you saw with the VA, I think they announced today there's going to be 80,000 jobs cut from the VA. That's a significant number, essentially processing these claims of sick veterans who are exposed to toxic chemicals. So, you know, those are the kind of things that I'm getting a lot of calls, and by the way, bipartisan calls, Democrats and Republicans calling and saying, wait a second, what's going on here? It's one thing to make government more efficient, which I believe in deeply, smarter and more efficient government. It's another just to go across the board and affect things like the CIA and national security, which is obviously a big focus of mine.
No, you did a lot as a congressman and you know, for governor on the efficiency front. So there's some meeting of the minds there. Just a few seconds left, Congressman.
All right, headed towards 5850. That was the target for today. If we can manage to move higher.
Now you're leading the charge to get DeepSeek off of government devices.
Yeah, and by the way, people should know that's the #1 downloaded app, right? That the government of China has made it pretty clear that they put code in to be able to grab people's information. So whatever you're searching for, people got to be very careful. I'm obviously concerned from a government perspective, and have written to all the governors, asked them to ban it from their devices. This is the Chinese Communist Party that wants to steal our IP and our information and get into our national security and influence Americans. You got to be very careful here with DeepSeek and what they're doing.
Yeah, no, and I appreciate you kind of coming on to talk about it. We hope to elaborate more in a future time. Congressman Josh Gottheimer, thanks for the time today. Appreciate it very much. You too.
All right, watching for NVIDIA to follow through too. Apple turning, looking good. Pressing the highs of the day now. Okay. Looking good. Okay, next leg higher. Next leg. Okay, where's my 5850? 5850. All right. Here we go. Here we go. Looks good. Okay, looking good. All right, let's go, SPY. Let's go. S&P. Okay, we've got 2 hours to go. 2 hours to go. All right, looks good. Okay, you know what dealers are going to do? All right, looking good.
Welcome to Power Lunch. As stocks take a turn based on another potential turn in tariffs. We're going to tell you who said what and why it matters. Plus, as oil and bond yields fall, will it force the Fed's hand? We'll have breaking news from the Fed, and why one biotech analyst, Kelly, says we may not need most biotech.
I don't know if he would go that far, but we'll see. The major averages have turned around on that news that auto tariffs on Canada and Mexico will be delayed by a month. That's got the Dow, the S&P up nearly 1%. It's a little bit more than that for the NASDAQ. Ford, GM, and Stellantis all nicely higher, building on gains that we've seen throughout the session as these rumors ahead of the actual announcement, Brian, we're building.
Yeah, and by the way, we've got a pretty fired up Canadian in-house in moments to talk just about this. All right, let's begin with some maybe good news for Detroit and its investors. A reprieve, even temporarily, for the automakers. Kelly just talked about it. Let's talk about tariffs and trucks. We've got Megan Casella in DC, Philabo as well. Megan, let's start with you.
There we go. There we go.
What is the latest that we are hearing, and what do we know about potential tariffs / non-tariffs?
A little bit of firmer news now, Brian. Just a few minutes ago, we heard from White House Press Secretary Caroline Leavitt. She's the one who confirmed that rumor that we've been talking about for about 24 hours, saying there would be this 1 month reprieve for the automakers. She worded it as cars that are associated with the USMCA would not see tariffs for another month. She also said the president is open to hearing more about exemption. She said this exemption came about because Ford, GM, and Stellantis asked for it when the president spoke with them yesterday, and that he's open to hearing from other industries. That's the good news. The bad news is that she says it's only 1 month because these reciprocal tariffs, which they call the big ones, those are the ones set to take effect on April 2nd, and that the president is very firm on those and will have no exemptions there. So it's this temporary reprieve. The other bad news I would say, guys, is that steel and aluminum tariffs have already been signed into law, and those take effect next week. They'll hit Canada and Mexico, and they'll hit the automakers as of now. So it's good news, but it might be brief.
And copper prices are jumping today because that was called out last night. That could be a place we go to next. Phil, so the automakers, look at the results they're getting from these phone calls.
That's good news. That's a 1 month reprieve. But in the end game, Kelly, when you look at this, they're still behind the 8 ball because they have to make
Okay,
a
we
decision
continue to move higher. 58.50 was the target.
in the next month.
If we manage to move higher, we told you.
Because I'm just guessing that they're probably
If we managed to move higher, we thought that we would see dealers buying. And that's exactly what we're seeing right now. So dealers are buying. We know that that's a force to be reckoned with. If you're short, you're covering on this breakout as price action moves higher. So this is looking pretty good for the bulls. Okay, so this looks pretty good. Nice volume too. Check the volume. Check the volume here on the breakout.
Well, you're also, Phil, not going to make major and long-term. I mean, these auto plant. It's not just about buying parts from Canada or Mexico to put into a car, is it? It's about long-term investment. You look at the Ford Super Duty pickup truck. Ford is planning.
Okay, Robin Hood on the move. Robin Hood on the move.
In Ontario, Canada, and those kinds of decisions are up for grabs. These are billions of dollars, and I would imagine, to your point, they're not going to change or waver based on something that may or may not happen for a month.
Correct. And that's the decision that they're facing is, okay, if we know that this is going to be the trade policy, let's say for the next 5 years, 4 years at least, what can we do realistically?
Robin Hood on the move. Okay, looks good. Okay, Amazon looks good. All right, everything's working now. We can keep this up. Looks good. Nice follow through. Moderna looks like a double bottom, still dealing with a bearish sloping 50-day. I have Moderna. It's underwater a little bit, but I've been selling covered calls. My cost basis is closer to around 35. I started around 40-ish, looking for this breakout. It started to fail. I didn't want to sell, so I kept the shares. And every time it would bounce, I sold some covered calls for north of $200 each time I did it. So it brought my cost basis down about 6 points over the last 3 or 4 weeks. Moderna still dealing with it, looking for the breakout. If you're looking at it, look for a break back to the 50-day. I sold a 40 strike. So if at the 40 strike, given everything, my shares would be taken back from me. And I would break even on the shares that I average around 40, but I've been making money on the covered calls. Last tabulation was about $1,200 per contract. I've sold about 5 times since that peak back in January. So looking pretty good. And there goes the S&P. S&P on the move. There you go. There's your S&P.
Materials when it came to housing, but overall expectations were slightly optimistic, a bit of a downgrade from prior reports. Job growth nudged slightly higher. You saw that weak ADP report today did show 77,000 growth. Job growth was seen as healthy in healthcare and in finance. Labor availability improved in many sectors and districts. Quote, rising uncertainty over immigration influenced labor demand, according to the Facebook. Wage growth was moderate, with wage pressures easing. Now, on prices, as a part of the Facebook, the Fed follows closely. They were up modestly in most districts. Several districts reported an uptake in the pace.
All right, there goes the S&P. Nice move on the S&P.
Prices of other food ingredients impacting food processors and restaurants. We talked a lot about that. So there were increases seen in insurance and freight costs. They were said to be pretty widespread. Finally, firms were noting a difficulty in passing along higher input costs to consumers, but they said when these tariffs come along, they're going to lead them to raise prices. And some firms even said they have raised prices preemptively. Guys?
All right, Steve, thank you. I'm trying to pour some cold water there, but the market is shaking it off with the Dow at 500 points. We take your points, though, about the impact this is all having. Steve Leisman. Francis Donald of RBC Capital Markets is here on set with us, alongside Adam Phillips of EP Wealth Advisors. Francis, to you, busy day here. We just heard from the Beige Book. We heard about the tariff reprieve. We were talking about economic uncertainty just a little while ago. What are the big points for you?
Another example that the uncertainty around tariffs is already in the data. We saw it with a surge of imports. We've seen it with consumer confidence. We've seen it with inflation expectations.
All right, Robinhood, nice look to Robinhood. All right, I'm going to sell some covered calls on this one. Since I did buy it, what was it, Monday or whatever it was, Monday, and it promptly pulled back right after that. I'll be selling some covered calls at the 50 strike, and probably not do it just yet. Robinhood looks pretty strong.
CNBC in the morning on Squawk Box will say tariffs are back on, the market's tanked. Then you got Lutnick or somebody comes out, or we get this headline that tariffs are off or they're delayed, and the markets, to Kelly's point, are soaring. What's our long-term strategy? How do we get through? I'm not going to say it's noise; it's bigger than that. But I think you get what
I do get it, and look, they're playing with our emotions as investors, right? And so I think it'll be interesting to see if we can hold on to these gains into the close this time, since we couldn't yesterday. I think we will this time, but this is the environment we're going to be in for the foreseeable future. We know that tariffs, the topic of tariffs, aren't going away.
All right, everything looking good now.
Is coming up April 2nd.
Nvidia's about to go.
With the reciprocal tariffs. Beyond that, call it the second half of the year, we believe that volatility could subside, and we can actually get this catalyst.
Okay, watch Nvidia. Nice pop there.
In the form of tax reform. Now, ultimately, we got to get through this period first, and I equate it to what I tell my kids: you have to finish your vegetables before you can have dessert, right? And this is some of that near-term pain that we're gonna have to deal with. How can you get your pudding?
I was going to say, I give it up. I just say you can just have dessert.
It's a battle.
Yeah.
It's a battle.
I'm going to quote Francis Donald to Francis Donald. This is what you wrote. As much as we expect the U.S. to remain the leader of the economic pack, thank you, we have rising concerns about the downside risks for growth. So how much downside risk for growth is there in the United States if these tariffs
Okay, Beige Book out. Looks like we're moving higher. Looks good.
Of tariffs, hey, I'm not downgrading everything. Around the 3-month mark is when you're going to start to see material downgrades to growth. But you know what, Brian? I'm more worried about the inflation side for the United States right now, because we were already running too hot on inflation. There's room on growth. We had 2% growth for 2025. Hey, if we get down to 1.5, it's not going to break anything. But 3% inflation or higher, that puts the Fed in a real difficult situation, especially with the unemployment rate wrong. Watch the inflation side here, not the growth side.
Well, you know what we've been talking about, and what the narrative that's going around, and you can dodge this question, Adam. Don't worry.
Okay.
Is there a part of any just quiet part of you that thinks Scott Bessent's a smart guy, Howard Lutnick?
Okay, Uber.
They know, I think, what they're doing.
What's Uber doing? Uber.
Is there any part of you that thinks that this is
All right, nice move on Uber back up to 78.
slow things down for crap? Do it now when you've just started.
Uber 76, sorry. Move up to 76. Buy order blocks, no sell order blocks. You know, I love it when I don't see any sell order blocks overhead. Let me go to the 5-minute, make sure I'm not missing something. 5-minute. Okay, there is some on the 5-minute. So that was from pre-market. So if we can get through that level, 78.50 or so, 76.50. Look for Uber to follow through, maybe sell some covered calls.
We've already seen expectations for Fed cuts to move up. So now we're looking at possibly mid-year, potentially 3 this year. I would defer to Francis on this.
Okay, so we got Palantir turning up. Palantir. Big surge on Palantir.
That brings the stagflation risk even higher and creates an additional risk of calls here.
So on that point, just I don't know if we can pull up the 10-year tips in the back. Friends, I think it's ironic that the market is less worried about inflation. I mean, it's fallen from 230.
Okay, Palantir, nice move on Palantir.
So they're showing less of an inflation concern, but your point is, what if the Fed goes, well, we got to be careful. You know, they are so reluctant reactive to take market signals, that they may end up just saying,
Palantir on the move. Notice the buy order blocks, no sell order blocks.
That's a big issue, and that's why I think this
Okay, Microsoft gone. Microsoft is gone. Okay, looking good. Microsoft, thank you very much.
reflationary deregulation and all the positives that came with that. We're getting the difficult elements of this first. We're talking about a Fed put here with respect to the stock market, but the big focus from our view is there an element of looking for tariff revenue so that we can compensate and offset the extension of tax cuts? They're looking for some sort of revenue in order to allow us to be able to eat our dessert too. So for me, I'm looking less at is the stock market going to provide that Fed put, and what is the bond market looking at?
There goes Tesla.
Fiscal, and at the end of the day,
Tesla.
we're concerned that the 10-year yield, the 30-year yield, is going to end up acting as the brakes on this government and its policy versus the stock.
Well, we had another RBC person here yesterday. Halima, her name is Halima, a very wonderful woman who I'm sure you know well. We have this chart, and it's a chart I asked to make, and it's oil versus the 10-year bond. Oil appears to lead borrowing costs. Oil goes up, borrowing costs go up. Oil kind of is the bond market in a weird way. Oil is falling. It's 65 and change, and that's the blue line. And then the orange line is the 10-year treasury yield that's rolling over. How much are you, Francis, watching things like commodities and the price of oil as like an inflation tell?
Well, Brian, you're going to make a chart for me along with my colleague Halima Croft, which is look at inflation expectations amongst consumers. They're almost always driven by gasoline. Gasoline prices are down 8% in a year. My goodness, I don't think a lot of Americans are worried about the price of energy right now, except last month, inflation expectations spiked, and they spiked without an increase in gasoline prices. Why is that? It's because inflation is creeping into the psyche of the consumer without oil prices in play. That's something to watch very closely because it's a break in the way that we think about those relationships, an area to watch absolutely.
Adam lives in LA. I mean, so gas is now under $6 a gallon, I think. There. I mean, what are you going to do with all your extra money?
Well, I'll be buying maybe one more egg I can afford with it. Thanks to this food inflation, right?
Yeah.
But it's so true. And as we think about where prices are heading, I was asked recently, where do we go from here? And much to Francis's point, it depends how long this actually lasts. But I think back to 2018 when we were dealing with the tariffs the first time around, and we saw a 10% correction. That was a very different environment in terms of valuations at a 22 times PE today versus 18 times then, and inflation, which much different back then as well, down at below 2% versus I think core CPI has been above 3% for 46 straight months. So it's still very, very
I
elevated.
know we have to go, but if you had to buy one thing, stocks or bonds right now,
I'd still be putting money to work in equities.
you would just more upside.
Look, we're long-term investors at EP Wealth Advisors, and I think that when you get an opportunity like this, you're probably not going to hit the bottom. We expect this volatility to continue, but we think we're putting money to work.
France, we have a new tariff boss. That's you.
I'm new to tariff boss.
Oh, very nice. Very nice. Palantir looking good too. NVIDIA. Nice move on most of these stocks. Congratulations if you had patience and you stuck through this whole first half of the day. Didn't do much in the first half of the day. Now we're going.
Francis Donald and Adam Phillips. All right, so coming up, last night the president said he wants to, quote, take back the Panama Canal. What exactly does that mean? We're talking about that, tariffs, and more with insider Mick Mulvaney coming up.
All right, nice move there. Back up to the high of the day, looking good. All right, nice day, evening session. Now, don't forget about what happened yesterday after 3 o'clock. All right, don't want to get too cocky that we lose sight of the fact that we had a big reversal yesterday. Okay. Uber. Okay, looking for Uber to continue. Uber. Like to hold this one for a swing. So I keep selling covered calls on this one as well. I have the 8250s now. And that is August. So if we start to head towards 8250, what I'm going to do is I'll probably drop those calls, roll them to a closer strike. See if I can get more credit by coming closer and down, like say to the 80 strike. Get taken out, the shares get taken out, then the whole trade closes and then restart the trade. That's just one way to do it. I know that probably didn't make a whole lot of sense, but it makes sense to me and it works. So whenever the markets are pulling back, you sell into strength and markets pull back. That gives you a lower cost basis when you sold those covered calls. So if you were buying near 80 and you sold a covered call for $5, now your cost basis is 75. So it gets down to 75. You could either close the covered calls and then buy some more shares, look for it to run back up and do it all over again, which is what we're doing with, what was the one that you're doing, Farmer Jim? Oklo. Oklo sold a 38 call last week, bought that back for $10 each, sold them for $140. So I made $130 per contract. Now we're looking for this to bounce and push higher. We could sell the 35 strike. That's at the 50-day moving average. My cost basis right now is 34. 34.40, I believe. So I need this to push a bit higher first. NVIDIA looking for more.
CNBC viewer and listener, things like tariffs and inflation, even talk about taking back the Panama Canal. Joining us now to talk about it all, Active Consulting co-chair and Donald Trump's former chief of staff, Mick Mulvaney. Mick, great to see you on Power Lunch from a CNBC perspective. Inflation, tariffs, economy, etc. What was the one or two main takeaways from Mick Mulvaney last night?
It wasn't the Panama Canal. It wasn't even Ukraine. It was the tariffs. And I think what you're going to see now, Brian, is what I call sort of a strategic ambiguity on tariffs.
Okay, S&P. All right, so 5850 is resistance. Okay, if we get above 5850, next level was, it's all across the bottom of the screen. 5,900. So the next level is 5,900. Okay, 1 day implied move. We already made it through that level. You see that right there? 5820. 5825 was the 1 day implied move. We're trading up here at 5854. And we've got the hedge wall up there at 6,000. I don't think we're going to get there, but it's looking pretty good. Looking pretty good so far. Let's look at a few other things here. Okay, S&P is at 5847, 5847. All right, 5850. Okay, you'll get some calls in this area. See those calls right there, the orange? 5850. Next level is 5900. There's a little intermediate level at 5875. So if we get above 5850, we could see 5875.
The cost of living stuff is real. Keep in mind, I have full faith that what the Trump team is doing writ large as a package is going to have downward pressure on prices, just like it did in the first term. Look, we were running huge deficits. We had no unemployment, and we had tariffs in the first term, but inflation was under control. That's because the other things the Trump team is going to put into place over the course of this first term will have a downward pressure on price. I'm thinking specifically about deregulation, which still doesn't get enough attention, even on this network. But that being said, tariffs are going first, and they are immediate. It takes a while for the deregulatory agenda to flow through to prices. Tariffs will have an immediate impact on prices. In fact, as you just pointed out in the previous segment, some prices are going up in anticipation of the tariff. So cost of living is real. Look, people say they care about spending. They don't. They might care about cuts to government. They care about their own pocketbooks, and if prices are still up,
Isn't that the weird thing? Because this president ran on killing inflation. I mean, I did the road trip to Erie and to not fancy places. I actually talked to real voters, and they all talked about the twin eyes, I call them, immigration and inflation. All right, so let's focus on inflation. We have a president who said, I'm going to, if you elect me, I will crush inflation.
5840, that's the call wall.
Tariffs, which, as we just heard,
Iron Condor.
are inflationary. What are we missing here?
Yeah, you're missing the other half of the equation. You're looking at it as an all.
Okay, we're bouncing up. We're through the upper strikes for that Iron Condor. Okay, so this Iron Condor, 15,000 contracts. 15,000 contracts.
I expect to see some decent legislation maybe on that even, and that's a rare thing in Washington D.C. these days. But it's writ large. It's the agenda that I think will have a downward impact on prices over the long term. The issue is a lot of those men and women on the floor last night don't get elected in the long term. Over the long term, they get elected in about 18 months.
Yeah, there's also a bill to pass with a very slim majority and a lot of costs associated with it, a big wish list.
Sure, and the taxes. Look, there's a lot to be done. The taxes are probably the legislative agenda. My guess is not much is going to get done legislatively. Maybe there's an energy bill, but really what you're going to focus on is the tax bill. That's where all the emphasis is from the Trump administration. These are the Trump tax cuts, and he wants them to be extended. I expect them to be extended in some fashion. I expect them to be to increase the deficit. I don't think they're going to be able to find the spending reductions. You're already seeing on Capitol Hill the pushback on a case-by-case basis against what DOGE is doing. Why is that? Everybody loves spending, and every program that is in a spending bill has somebody who absolutely loves it. And if Elon Musk's and DOGE and OMB go after it, it's going to upset somebody, and sometimes those are Republicans. So I expect the spending to continue. I do expect the tax bill to pass. And if I got a concern long-term on the impact on inflation, it's from spending much more so than it is from tariffs.
I'm going back to the Panama Canal. Okay, and don't give me that. Don't look. Dude, this is real.
Can you see this? I'm sorry. See, I can't see you. You can see me. That's not fair. But go ahead.
I look exactly the same, just younger and handsomer than I looked a couple months ago. Mick, the president. We're going to play a soundbite. The president said this about the Panama Canal last night.
To further enhance our national security, my administration will be reclaiming the Panama Canal, and we've already started doing it. Just today, a large American company announced they are buying both ports around the Panama Canal and lots of other things having to do with the Panama Canal and a couple of other canals. The Panama Canal was built by Americans for Americans, not for others, but others could use it.
What is that? Then he went on to say we're going to take back the Panama Canal. Listen, I'm not making a joke here. The Panama Canal is one of the most important commerce transit points in the world, along with the other canals, Route and the Delaware Canal, apparently. Mick, what was your take on what does that mean? Take back the Panama Canal.
Yeah, I remember the reclaiming thing, the part you just played. I don't remember the take back, so I apologize.
Right after that, he goes, we're going to take back the Panama Canal.
I believe you. What I'm saying is that I'd have to hear it because, and here's why. I know when Donald Trump is speaking off the teleprompter and when he is ad-libbing. What you just heard about reclaiming was off the teleprompter. And so that's sort of the official policy. I can't tell take back was also teleprompter if that was ad-libbed. But look, step back for a second. I don't think anybody would deny the fact that the Panama Canal is of strategic importance to the United States. Does that mean we're going to send troops down to Panama to invade the country and physically take control of the canal again? No, I think you're going to continue to see what you saw when Marco Rubio went down there a couple weeks ago, which is to try and figure out a way to reestablish the close connection between us and Panama, to circumvent China, who has been trying to get a toehold in that part of the world. So we sort of extend or renew in a 21st century way the Monroe Doctrine, which is the stuff that's here, the stuff that's close to us, we're going to be a lot more involved with than we have been in the last couple of years. I do not think we're sending troops down to Panama anytime soon.
All right. Satisfied?
I don't know. Take back. What does that mean? Take back the Panama Canal?
I like his point about was it
Brian,
prompter or not. Go ahead.
Let me be more serious. If an American company buys the canal, is that taking it back? I think that's probably yes. I mean that's not the same as having the military do it, but if it's controlled by American interests, or at least folks who are more aligned with us than they're aligned with China, doesn't that sort of reclaim it? Doesn't that take it back? I think you're focusing too much on the actual verbiage as opposed to the concept, which is that we want to be more involved in the canal and we want China out.
And it looks like it's heading that way, one way or the other. Very interesting. Nick, thanks. Really appreciate it today.
Thanks, y'all. Great to see you.
Of Actum. Reminds me, I got to get the ashes later today. Further ahead, cyber insecurity. This name down big on a weak outlook, and the reveal is coming up in Fruit Stock.
Okay, S&P. All right, we're still dealing with this 5850 area. Consolidating at the highs. Tick cumulative is green on the 60-minute. It's been moving sideways for the last couple of hours. So I'd like to see that continue to move higher. Okay. All right, looking good. Consolidating, stuck to the highs for now. Hopefully we don't get rejected. We continue to follow through. Let's take a look at junk bonds and see how they're doing into the evening session. Junk bonds, okay, looking a lot better. Junk bonds looking much better. All right. Junk bonds look a lot better. Good. Futures just stuck here. So a nice little run up to the highs. SPY, can we get something out of this SPY? See if we can push this a bit higher. Come on, SPY.
All right, welcome back. I do not know how to say let's talk about Germany in German. But if I did, this is where I would put it. Because the German stock market and other parts of Europe, they are soaring. Now, Germany, if you're not paying attention, close to agreeing to a massive new stimulus program, about $500 billion in Germany. Folks, based on GDP ratios, that would be about, I don't know, $2 trillion of stimulus here in the United States. And that expected stimulus making an
Germany, let's see what Germany looks like.
The
the German DAX index
Whoa.
is up 16% this year. So too the stock markets of Austria and Poland, France and Spain, their stock markets not far behind. In fact, on some measures, we're showing them to you right now, they're actually doing better than Germany. Now, I wrote about this 2 years ago, and part of my
Wow,
prediction
nice.
was a combination of sky-high energy costs and a weak economy, Kelly, would lead to likely stimulus in Europe. But even in my wildest dreams, again, however you say that in German, $500 billion, not approved yet, is a lot of money.
Yes. So transformative. People think this has legs. For the stocks that involve, they can keep going. There's still a lot of reforms that need to happen for the European economy overall. Draghi has been very eloquent.
Sweden breaking out.
So here we are, a place where very few, myself included, foresaw.
Australia.
We all saw the charts.
Ireland. Ireland breaking out.
Percentage America was of the global stock market. You know, a line can't go straight up to 100. So this is a big reset that's happening. Emerging markets doing pretty well lately also.
All right, so some nice price action in international markets. Emerging markets moving higher. Chile, South America, Argentina, not really. ACWI, that's starting to come back up. Let's look at Brazil. Brazil coming back up. All right. Let's see. South Korea. All right. The Trump talking about South Korea last night. Mexico. United Kingdom. UK breaking out. All right. So let me look at this. Let's go to Candle Glance. Okay. International markets. Germany, let's see. Italy. Germany. That looks good. Germany. Okay. China. EWU, the UK. Netherlands. Okay. Sweden. Chile. All right, lots of action here. Ireland. EEM. France. Spain. All right, all of these look pretty good, actually. Okay, looking for that next leg higher. S&P. Can we get a next leg higher, or is that it for today? We took out the upper leg of that iron condor, 5840.
Welcome back to Power Lunch. I'm Kate Rooney with your CNBC News Update. The United States and Israel have rejected an Egyptian-led plan for rebuilding Gaza that was approved yesterday at an Arab emergency summit. It called for the rebuilding of that territory without displacing Palestinians. That plan in stark contrast to President Trump's proposal to transform Gaza into the so-called Riviera of the Middle East. A national security spokesman says the Egypt plan doesn't address the reality that Gaza is currently uninhabitable. And in Los Angeles County and the city of Pasadena both filing lawsuits today against Southern California Edison, alleging the utility's equipment sparked that deadly Eden fire back in January. Company officials haven't commented on those lawsuits, but did say last month they were still investigating the possible causes. And the Vatican updated the Pope's condition today, saying he remains stable and hasn't had any new breathing problems, and spent the day seated in an armchair and resumed some of his work activity. The 88-year-old pontiff has been in the hospital for weeks battling double pneumonia, guys. Brian, back over to you.
All right. That's what Tim. Okay, thank you. All right, so folks, we've got a big biotech deal. Chimerix is being bought by Jazz Pharmaceuticals for about $1 billion. Chimerix shares are up 70% right now. A good day today, but it's far from all wine and roses. If you go back 10 years, look at that chart. Chimerix has crushed investors, losing about 80% of its total value. It's just one example of how hard it can be to make money in biotech. Stocks, they may seem cheap, but if a drug trial fails, the company can sometimes fail right along with it. So are there any safe or good places to put your money in biotech? With us, Jared Holes. He's a healthcare strategist at Mizuho, some of the best research notes on Wall Street. Jared, thanks for joining us. I mean, your notes, your firebomb, I love it. You wrote this. You said, why don't we do this? Count all the number of, and I'm reading, count all the number of biotech stocks with enterprise values below zero, combine them all, then dissolve them, give shareholders back a ton of cash, billions, maybe keep around a couple for fun, the ones with the clever tickers. What point were you trying to make to investors with that?
Well, great to see you. First of all, thanks for having me. Yeah, I mean, when you look at the denominator of biotech stocks in the public market, we're kind of like in the 700 to 800 range, given or depending on the day. There are, a quarter of those almost have enterprise values in negative territory. That basically means that, investors have kind of, not only investors, but the companies in some respects have exhausted options. And in order for, any value to be created, they're going to have to either shift their focus, come up with another plan of attack, buy an asset that they don't currently own, resuscitate the company. And so in some respects, we're always looking for, some clear pathway for biotech as a sector to perform better. But if a quarter of the index is filled with companies that have more cash than market cap, I think we're in a tough place. So that's why I kind of suggest.
All right, let's see if we can't push this higher.
Hyperbolic, of course, but let's get rid of a lot of the tail here. There are too many assets out here.
But it's so attractive to some investors or traders or gamblers, whatever you want to call them, Jared. Is it not? Because let's say there's a stock, it's is it $5, and somebody tells somebody who tells somebody, I think that company is going to cure cancer, right? And it's $5 a share. And you're like, all right, you know what? If they do have a great drug trial result, the stock may go to 100, right? Maybe it's the next Amgen or whatever. But if it doesn't, it could go to zero. It's a very tempting scenario sometimes.
It's incredibly tempting. There are thousands of investors that are, putting their careers on the line every day to try to figure this stuff out. I would kind of characterize biotech as one of the only sectors in all of.
Okay, watching buy-order blocks here on the S&P gets above 5850. We could run up to 5900. That would be a hell of a move. Take out yesterday's high. Negate that pivot would be nice.
Has doubled or more. So there's an obvious issue with the broader complex, but like you alluded to, if you find the right asset, you can kill it.
So Jared, to just back up here, we're at an ironic juncture. We have investors who are back in love with healthcare stocks for like the steadiness and some of the dividends and a kind of unclear economic period of time. Biotechs, no one wants to kind of go out on the risk curve there right now. Okay, so these companies are still trying to hope, that they find the diamond in the rough. But the big takeaway from you is don't own the broad index. Don't look for a big kind of turn and catalyst point here. Are there any names you want to leave us with that you do feel more confident about?
Well, I think you're right. I mean, so much of the moves this year are, in my opinion, or sense of the market, rotational, with tech selling off and the market looking for defensive assets, and so you've got many names in the pharma complex up 15 to 20%. Biotech has not followed suit. I think there are some attractive
Robinhood
opportunities.
continues to drive higher. Robinhood.
Driver of single stock selection. And then you've got to kind of look at, the catalyst pathway. So I think when you look at, the Insmed and the blueprints, these are assets that I think the street is looking for an exit by large cap pharma. And then we're dealing with a bunch of, catalysts that have data readouts over the next couple of months. I think you've got to kind of place a bet here and there. But M&A for single stock selection, and then otherwise catalyst. That's the way to make money here.
Yeah, no, it reminds me of the shale boom, right? It was great for consumers. It was terrible for investors. And you're kind of, would you say it's largely because VCs have propped up these business models?
I think that's the perfect analogy. I've used it before, Kelly, so I think that's
Could be distribution up here, folks. Just keep in mind, we could be seeing some traders keeping this up here to help this take profits at 58.50. 0 day, bigger and bigger, larger and larger volumes have been trading.
Jared, really appreciate it. Thanks for your time. Jared Wolf, thank you. And if you ever miss an episode of Power Lunch, no problem. You can catch the podcast version anytime. Just listen to Power Lunch.
60 minutes on a buy signal. Tick cumulative is still green. Junk bonds look pretty good. Let me just update this. Junk bonds. Okay, junk bonds are above. Okay, that looks good. What's Merck doing? I see Merck is lower. Merck, all right, looking for a move above the 50-day soon. Okay, Robinhood, nice move on Robinhood today. Back to the 50-day. I would probably sell some covered calls, maybe the 55 strike for next week. Let's see what we can get for those. All right, looks good. Robinhood. All right. Robinhood looks good. Uber looks good. Uber. NVIDIA. NVIDIA, looking for it to drive higher. NVIDIA. Up just shy of 1% right now, NVIDIA. All right. Futures looking for a push higher. See if we can't break above 58.50.
Welcome back to Power Lunch. Stocks are higher across the board. Dow is up 1.1%, about 500 points now, as autos from Canada and Mexico are getting a month-long delay on tariffs. And meanwhile, in the bond market, we're seeing a A wide range of yield moves. The German bond market making all of the headlines. Yields soaring there on some major headlines and a wild day. Let's bring in Rick Santelli with the latest from Chicago. Rick?
You know, let's start out with the U.S. We had a major reversal in rates in the U.S. Consider, we're at 3.99 now in a 2-year, unchanged. You know what its low yield was? 3.89. And a 10-year right now, we're at 4.26, up 1 on the day. Excuse me, up about a half basis point, 1 basis point. But the point is, the low yield was 4.18. So whether it was data or the German stimulus, remember on the data.
Okay, looking for a nice push here.
The ISMs were strong. The PMIs, they were all great. We saw very solid durable goods, very solid factory orders. And back to the German scenario. Remember, this is debt-funded stimulus, hundreds of billions of dollars potentially. Constitution has to be amended.
All right, come on, let's go S&P. NVIDIA looking for more.
Fiscally very stubborn. And another
Microsoft still pushing. Microsoft looking really good. Microsoft pushing a bit higher. Day 2 at the highs of the day.
fungible, meaning whatever happens on the other side of the world, if it's a positive stimulus, it will have effects around the globe. Of course, the major effect has been in Germany. Now, let's go to the board, shall we? German 2-year today was up 21 basis points to a yield of 2.24. That's the highest closing yield since the end of January. Now, granted, it's just this year, but it's very important to pay attention to this because if you consider that the euro currency right now close at a 4-month high, dollar index, by the way, at a 4-month low.
All right, NVIDIA looking good. Come on, S&P, it's just taking forever here. We got a little bit over an hour and 11 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday the 5th. Beige book is out. We're higher, taking out the higher strikes of that iron condor we presented this morning, that if we got above 5,800, we could see a move to 5,850. We got that 50 handle run, so hopefully you made some money off of that. That was a nice trade. I'd take some off into strength as we start to, if we can break out here. S&P, Microsoft looking good.
So we look at German 2-year versus the 10-year. That spread today is at 55.5 basis points. That is the steepest this yield curve has been going all the way back to the summer of 22. So we really need to pay attention to all these variables. Now, a couple of
Come on, S&P, let's go.
with the debt spending is done, but the framework is done, and the Germans seem to be totally committed, of course. We know they have a new government, and all of this, of course, is not only for security, but it's also for Ukraine and their domestic economy. So we need to continue to look at rates, especially our neighbors' rates, and how much higher they could possibly go. Brian, back to you.
I believe it was the largest single-day move in the German bond market since 1990, Rick. I was 19 years old. Kelly was 14 years from being born. We're back for after this. I wish.
All right, come on, futures, let's go. Doesn't look like they want to do it, do they? All right. Watching the S&P stuck to the highs of the day. Feels like they are unloading positions, trying to keep it up here as long as they can. Would love to see us close at the high. Remember what happened yesterday after 3 o'clock. So that could happen again today. Hopefully it doesn't. We can press through this area and take out yesterday's pivot high. That would be really productive. Okay. The FANG stocks look okay. Microsoft continues its climb. Microsoft. Okay, Apple's climbing as well. Apple. Okay, NVIDIA looking for another higher high. Can we do it? Can we get all of these stocks to pop at the same time? Yesterday, it looked like they were buying. So I'd like to see some more follow through in the New York FANG components. Here we go. We're trying to test the 5850 level. We keep getting rejected up there. Let's see if we can get through this area. We only got about an hour and 7 minutes to go.
actually on my list for this week. I'm trying to see what the earnings look like, and more importantly, definitely correct. They are making money, and you're going to see them get to 8 million, 10 million, and then continue to grow from there. But it's really the way they're doing the layering. It's so important. You're able to actually access this in the public cloud through Amazon and through Azure. You're about to exit it through StrangeWorks and anywhere, or you can go direct with them. They'll custom build. They have thought through the entire model the way that Jensen thought through NVIDIA, trying to figure out what are all the things that you need to get computing to be done in a way that any company can access quantum computing. So it's actually here today. Lots of companies that are early adopters are using it, and the next explosion is going to be where they actually get to the average customer, where everybody's using quantum. And so I think, you know, in my mind, the answer is quickly. You should buy during the dip.
So buy on the dips. I mean, the others, IonQ, we have quantum.
Come on, S&P, let's do this.
You know, Ray, do you have
Microsoft's still pushing. Microsoft's still pushing up at the highs. Apple trying to push higher too. Apple. NVIDIA. NVIDIA trying to push through this area of supply overhead.
U.S. jobs, U.S. industries, and U.S. tech, then we're going to see that rise again. So I would buy. I see Rigetti going to $12 a share.
Yeah. Oh, $12 a share. Okay. Sean, do you own the others too? Because I know you think Rigetti is like in a good position, has some great customers, recurring revenue, and you think that's somewhat rare even in quantum computing. Of the group, do you buy all of them, Sean?
I think you do right now, and the reason why is you've got, for example, you got some companies that are focusing on unique niches. I think Rigetti is a little bit stronger than most of them because they are providing quantum as a service, and they're able to go to market with a much more wide offering. But there are some that are really focusing on qubit assembly. Some others are focusing on other parts of the quantum market. This is a long time hold. I mean, you really want to get in because it's a good bet against the future. I mean, look, sure, when we look at the space race, you know, we crashed a few things blew up on the pad, but in the end, we won. And I think quantum computing is very similar to the space race. It's worth the bet for the average investor in a long hold.
So you feel like it's very early. It's not like AI or cloud computing that has now become sort of mainstream and the hyperscalers. Ray, final quick thought. I saw that, Sean, in your notes. Ray, quick thought.
Yeah, no, we are definitely early in this stage, but you do want to bet on a few of them. I like Quantinuum, given the way that they set it up so that you can actually scale out. And I also like what's going on. If you're thinking about playing it safe, you're probably going to buy Microsoft. You're going to buy Alphabet and IBM because they've been in that space and you know that they've got other routes to market. And that's a safer way to play if you're not ready to get in too early with the early players like IonQ, D-Wave, and of course, Continuum and Rigetti.
Good luck here at this name. I appreciate it. RG.
All right, starting to push through 5850.
Long and Sean Grimm, thank you. Good to see you. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with us. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Market on close with Oliver Rennick next.
Yeah, let's run it to 5,900.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one.
Okay, NVIDIA, all of these stocks turning higher, looking good. NVIDIA trying to take out the highs. We got Apple turning up. Apple, big reversal, big hammer on the daily today. Apple, Microsoft. Okay, all these looking good. Microsoft, new highs. Beautiful trade on today. Microsoft, if you took it earlier. Day 2 on the reversal over there on the right. Okay, SPY. Looking good, SPY. S&P got buy order blocks looking for a push higher.
Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing,
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two
Okay, getting rejected.
Their college educations. Someday it'll be their turn.
Morning Movers brings
Microsoft looks good.
headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon and welcome to Market on Close. I'm Oliver Rennick, and we finally have a rally here. Stocks are up. We're heading into the bell with good momentum. Yesterday kind of looked similar around this time, and we faded pretty hard in the last half hour. But I'm not going to jinx it. This looks pretty good, especially because we had pretty good data today. We got some catalyst for it. We had a good services print, went smoothly after yesterday's manufacturing was pretty bad. So you do have strength in stock market, weakness in bonds. That's the combination you want, the opposite of what we've been getting lately. So you've got a good rally underway. Took a little bit for some things to wake up, but they're all moving now. Mag 7 higher across the board, except Apple. That's all right. It's kind of how it's been when you've got big up days. Tesla's moving, Nvidia's higher, everything about 2% in that group. So we are looking pretty good right now. Coins are up. Bitcoin a little over 3%. Not exactly the huge BTC move. That's all right. We'll take that too. Everything here finding some support. After yesterday, we faded hard into the close. We still did manage to end up off the lows, and we have seen some attempts to buy the market. They've just all failed. So this one looks like a successful attempt and maybe the start of something. Obviously.
All right, S&P, here we go. Pushing back up, S&P.
4 days in the week. We got employment on Friday. We've got Jerome Powell the same day. But here's a few reasons why this looks compelling here. Number one is that bonds are down while stocks are up. That's really important because there has been one.
Here we go, breaking higher. SPY's breaking higher.
The weakness in the stock market, and that was deterioration in some of the economic data, largely survey data. But we'll get the hard data with jobs, and ADP was a miss, not great, but the employment report on Friday is going to be the highlight. It's slowing down a little bit generally, but it's okay when they come in better than expected. So services look pretty good, even though prices paid were high. We still had an uptick in employment orders, and it was very different from yesterday's manufacturing, and that's a good distinction. Those two parts of the economy are still disconnected. So you've got bonds selling off and holding a line on that chart. If you look at the 10-year chart, basically the line in the sand to hold recent lows and basically the midpoint of the range for the 10-year. That's right below 4.2. So we explored down there briefly, bounced back up. So support for yields and some resistance in price.
JP Morgan, watching JP Morgan. Okay, cool.
to try and get some yield curve steepening. And you don't want as much contraction as we've been.
Microsoft going. Okay, Microsoft looking pretty good today. Microsoft being bought. Watch Microsoft. Microsoft looking really strong. Big move on Microsoft today. SPY looks like it wants to go.
The other thing too is that you've got some life in commodities. Some of that might be attached to the China trade, as it seems they're getting ready to stretch their usual comfort with the debt and deficit, and they're looking to stimulate. The dollar is down. Even though yields are up, the dollar is still down, and it's down sizably. The dollar now has really cratered quickly, but it is still above where it was the week of the election. So there might still be just a little bit of tariff stuff baked in there, but it certainly is coming out of the market in somewhat of a hurry. Whatever tariff premium was built into the dollar since Trump's election, the fact that we are now very, very close. If you look at the chart since November 5th, you can see we've almost come all the way back down. So,
All right, here we go. Starting to move through this area.
I think this chart is telling you that tariffs no longer really get to be an excuse if stocks are coming off or you got slammed in a position or something. You should know about tariffs at this point. The market's gone through an entire up and down phase in the dollar that was big. That took us to 110 in the greenback.
Don't forget, yesterday we had a big sell-off.
Multi-year highs. So that coming all the way back off almost, with the exception of a few more points of the dollar, basically it means in my mind that that's the tariff round trip. So the tariffs now, as we've heard about them, should all basically be fully priced in. That's what that chart tells me there. So that's probably a good thing too. So I think all these things are looking pretty positive. As far as the performance goes and the leadership goes, it's a bit lackluster, but that's all right. You've also got a bit of a different tone in the commodity market. You've got crude oil dropping in a hurry, which seems to be a clear policy reaction. But now you've also got copper up, as I mentioned. Obviously, we've had firm natty gas prices. That's going to help some of the message.
Robinhood going, looking good. Robinhood.
Materials are doing good. It's a pretty good rally overall. And the mags look fine too. Tesla finally.
NVIDIA is trying to break out. NVIDIA trying to go.
Situation we got here. Let's try not to jinx it. I got Jenny Horn with me in studio. Host of Next Gen.
NVIDIA is trying hard to go.
Jenny, this looks like we've got some momentum.
NVIDIA is trying to go. NVIDIA is trying really hard to get through this area. So is the S&P 500.
Like the consumer and some of these individual components of the economy. I mean, I know that the market isn't always a direct reflection of that, but I think that this is a problem. I mean, I think that again, U.S. consumer confidence has carried us through what was basically a market propped up by 6 stocks. So I think that now, if that's dented, now going forward, we see spending habits shift. We see people delay purchases of like autos. I mean, I think there's maybe a good reason to see a pullback here. So with markets sitting irrationally exuberant post-election, I think this come down perhaps could be pretty healthy, honestly.
Yeah, it basically is a come down, right? This is a come down. We were pretty toasty up there. We were flying kind of high. Now we're kind of like coming back down to earth. So the stuff that's moving at the top of the list today is
Okay, here we go. S&P looking good.
You've got industrials, materials. It's not exactly a big tech sprint today, but they're holding up as well. Apple's lower, but it does that a lot on these risk-on days compared to the rest of the group. NVIDIA being positive, the semiconductors being positive. These are important developments too. But there's nothing really at the front of the S&P that like shouts leadership.
No, and frankly, a lot of these names. I mean, I know that we're seeing again a decent pop today, but a lot of what like our exuberant and our frothy leaders really, I mean, look pretty dismal when you look at them relative to their 52-week highs. I mean, like so much of the enthusiasm is tied to areas like Tesla, Bitcoin, Palantir, Super Microcomputer, and these are brutal charts. Tesla breaking below now its 200-day moving average, and now one of the 5 worst performers in the S&P 500 this year. However, today's move actually now definitely helping with these losses. We're up 2%. More notable is like Ford's up almost 6% here.
Yeah, nice move there.
This name had
Looking good.
after its earnings, and we have just been stuck at like this $9 or so range. So again, encouraging that we're at least, I think, rallying for good reason when it comes to like the Ford Tesla narrative.
Yeah, I like that. the possibility of less damage to the bottom line from tariff stuff, maybe kind of factoring in there a little bit. But I think the actual the leadership potential still maybe limited from that group. But again, this is like one of those days where we'll take it.
Yeah.
Whatever good news there is, whatever spin, to get us off the mat and like on our legs again.
And that's you will take it, because I do feel like on a day right now where Tesla is positive, for example, like it's a win. And I think that right now we've become so disconnected of like what actually matters.
Nice move on the S&P.
And I know Elon Musk, it's hard to even put him aside, but I think that you have to consider
Looking good.
all of the enthusiasm into the election, all post-election, had nothing to do with the actual fundamental story. And again, I know that I say like Elon Musk aside, but also he's done some major damage in Germany. We're seeing headline numbers out of that country be dismal for the month. Not a huge impact on their top line revenue. I mean, it's like 2% roughly. So take it for what you will. But I think for a long time there was this strange narrative riding that like, because Elon Musk had cozied up to Donald Trump, that Tesla was going to be just safe from all of these tariffs. And then we saw finally some reaction to that. I mean, like, I know we say Tesla's not an auto company, but I mean, in some ways it still is. And it was just completely disregarding any tariff overhang, which I think now finally that caught up with it.
Yeah.
Microsoft. Nice move on Microsoft today.
Holding the line at 280.
Looking good.
That would be compared to the election 250, 260 gap. So we're kind of like in it right now. So to your point,
Nvidia looking good. Nvidia pushing higher.
full unwind of
Okay, Uber, S&P Uber.
technically Trump flat.
You're right.
Right? It was both.
Okay,
Now it's done nothing.
S&P.
I think that's good. The fact that we're kind of even. We've cleared
Well, Microsoft has had a hell of a day. Microsoft stretching its legs. Microsoft.
Necessary again when you have valuations as high as they were. I mean, we saw some of these names just get decimated on the back of what were okay earnings. And I say okay, that's like I think even being generous as far as like the bears are concerned, because so many of these names are still expecting growth. They're still giving, I mean, like beats as far as their quarterly performance, and then you see them just get crushed the next day. And that to me says you were valued too high into this print. And collectively, so many of these tech names perhaps needed to come down off of what we've said, the expectations for reality.
Meta having a good day as well. Meta driving higher.
An opportunity when you see markets pull back.
Okay, back above the 50-day. Meta would love to see this stretch its legs and get back above 700.
Commentary right now, I've looked historically. I've done so much deep research on where we see benefit from tariffs, like, and it's long term, definitely when it comes to the autos, but it's very hard to find information that will say these tariffs, as it stands, will translate into economic growth. And I know long term we see that, but it's still a massive overhang.
It's literally like I was reading an article about tariffs the other day from NPR, and they had a whole like fact check at the bottom that was very subjective about what tariffs did the last time around and what they do. It's like depending on who you sample, you get wildly different answers. So at least some of that maybe now has been kind of fully priced through with the market and allowing us.
Okay, Apple's still trying to push a little bit higher. Apple,
Appreciate the help there taking us through the session.
S&P. Not a bad day. We got a little bit. 48 minutes to go.
What's up, Jared?
See if S&P can go some more.
Appreciate that. Dollar's getting slammed. Stocks are finally finding a bid alongside it. Are things looking a little bit better here? Take me through what you're seeing.
Well, it kind of depends how you define better. Stocks did get down to support. We touched the 200-day, rallied off of that. I think we're going to rally for a little while. We got payrolls on Friday, so that could be a negative catalyst. Basically, what I think what's going on here is that we are having a deflationary impulse. And I think what a lot of people don't realize about the tariffs, I think first order thinking is, tariffs are inflationary because we're paying more for goods. But second order thinking is tariffs are actually deflationary because if you're going to buy a $60,000 car instead of a $50,000 car, you're just not going to buy that car, and consumption is going to go down and it's going to slow down the economy. I think the tariffs are deflationary. If you look at the inflation data out of Truflation, it is dropping hard. It is now 1.3%. Inflation is falling. We've got 3 rate cuts priced in this year. I bet we get a lot more than that.
I remember you were talking last time, pretty cautious on that front, wanting to basically own bonds still. You think yields should be even lower?
I think yields should be a lot lower. Bonds are down today. They've really been bid up, I would say, the last 4 or 5 trading sessions. 2s are at about 3.9, 10s are at about 4.2. I think you get 10s down to 3.5 over the next 3 or 4 months. I think that's super possible.
Okay. What gets Powell eager to cut? Because I don't think he's.
Okay, here we go. S&P some more. Looking good, folks. Looking good. The 60 minute is very bullish. Tick cumulative is green. Tick cumulative.
Doge is laying people off, and that is going to feed through into the employment numbers. Might even feed through this week. The labor market has been bulletproof for the last 2 years. The last claims number was a little high. I think it was 242. We're getting another claims number tomorrow. ADP came in weak at 77,000 versus 160 expected. So you're seeing minor signs of deterioration, but I think the labor market is what will get them off the fence and get them to cut more this year.
Okay. Jared, do you feel that this has already basically been set in motion, or do you think, are you watching for things that could, obviously we're always looking for things that could disprove our thesis, but how convinced are you that the machine gears of...
I don't know how much more we can get out of these stocks today. If you're day trading, you might want to be taking some profits off in the strength. Yesterday, we had a pretty decent sell-off in the last 45 minutes. So...
I think the tariffs also, like I said, they're deflationary, not inflationary. Not only, I don't think the tariffs are bullish for the dollar. I think they're actually bearish for the dollar. And one thing you're seeing with this dollar weakness is that European, Asian, the rest of the world is stocks, which are cheap, are starting to look pretty good. So if you're looking at ETFs, European ETFs, Asian
a little bit of profit taking. Don't forget what happened yesterday.
Really come alive this week.
It would be demoralizing if we did see a sell-off here.
That's an argument I was making in my newsletter for a while. The rest of the world is so cheap relative to the U.S.
Yeah.
You have to have an international allocation.
Yeah, that's important. And I know that's something you've talked about. Our Schwab research team, Jeff Kleintop, Michelle Gibley, been on that train too. I think that's borne a lot of fruit in particular. And the case that you made and that you just did was a valuation one, and to some extent that still arguably probably has some room to close.
Oh my goodness, yes. So, even Latin America, I spend a lot of time looking at Latin America. Basically, Latin America ex Argentina is trading at 6 times, right? You get your money back in 6 years. That is fantastically cheap. Argentina is a little more expensive because of Malay, but the rest of Latin America is 6 times.
Okay, futures pulling back now.
Trading at 10 times. China is trading at 6 times. The U.S. is trading at 23. It's a simple valuation argument. And this valuation discrepancy has persisted for a long time, and I think people are finally starting to notice.
Okay. The one thing that I want to come back to, maybe there's some room for a debate on the macro side, is with the dollar and tariffs being deflationary. That argument, I think, is very sound, a very compelling one, especially as we erase a lot of those gains. But you still also have the rate spread between us and the rest of the world, which I guess you think is probably going to normalize if we've got to cut a bunch. But that does kind of seem like
futures, big drop off. Here we go. Here we go.
The number of cuts, the dollar could be quite a bit firmer, even if we've got tariffs.
Well, the other thing about the rates market is that you probably noticed that Trump has not been tweeting about stocks in his second term.
Very much so.
His first term, he tweeted about stocks relentlessly. This time he hasn't done it. he and Bessent are not targeting the stock market. They're targeting the bond market, and they're targeting it through Doge, first of all, through budget cuts. But they're also talking it in words and actions. And I think the goal of Bessent is to get long-term yields down so we can get our interest expense down. I mean, that is the point of this exercise.
That's a really important one. I think probably the biggest subject here. I'm glad you mentioned it because I've been hearing more about it. And it does resonate with me that the stock market's not being propped up this time, that if they're going to target bonds, we heard a lot about how the Fed's going to cut, and it didn't make a lot of sense when we were getting the numbers we were, and with inflation where it's at, based on what we've heard from Powell. But if they are going to be willing to risk the stock market, that could tighten things up, then to get those cuts as well.
Yeah, and the stock market, aside from today and, as of yesterday afternoon, the stock market's been pretty weak. I don't look at the VIX a lot. The VIX got up to about 23, 24. Things were, as of yesterday's trading session, things were a little dicey intraday. It felt like some panic was seeping into the markets. Really, this is the first, even remotely sign of panic since back on August 5th when we had the yen carry blow up. So, like I said, they're not targeting stocks. I don't think there's a put. I don't think there's a Powell put or a Trump put. I think there could be more downside if we break below the 200-day.
Okay. Best way to play it? Is it still short stocks? Can you own volatility, VIX 20? Or do you just get out of the stuff and into the better things that we talked about, international, et cetera?
I think absolutely go international. I mean, a typical asset allocation for a retail investor has had about a 10 to 20% allocation to international stocks. I think at this point in time, the dollar, even at these levels, is still massively overvalued. It's still overvalued. So I think you have to increase that allocation to international to about 30 or even 40%.
Okay. Big chunk for sure. Love for the rest of the world. Thanks, Jared. Good to catch up.
Thank you
Appreciate
very
the
much.
framework. Helpful, as always. Jared Dillon, investment strategist at Model Economics.
All right.
Coming up.
S&P, a little drop there.
Firstly, the rally, which is still.
People more than likely remember yesterday.
Take a supply chain specific look at the role of tariffs. It should be a good conversation as we continue to probe the ways this is going to change global business or maybe lack thereof. I'll be right back.
Okay, let's go look at junk bonds. Junk bonds at this time of day. Junk bonds with 39 minutes to go. Junk bonds sitting on the 50-day. Pretty much flat. Advanced decline percent. All are pointing up, so that's good. Tick cumulative is green. Signal line keeps going back and forth along a flat green tick cumulative. Let's look at the number of stocks above the 50-day and 20-day. Number of stocks above the 20-day look a lot better on the equal weight index, a lot better. Number of stocks above the 20-day has drifted a bit lower. Now it's bouncing. 50-day, same thing. Getting near washout levels.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Okay, we're at the 50-day.
Schwab.com/coaching and start learning today.
On the equal weight index.
strong here as the market maybe starts to see the light at the end of the tunnel on tariff policy and the ramifications for things like the global supply chain. That's what we're going to talk about with the CEO of Blue Yonder joining us as we continue to talk big tariff implications. Duncan Angrove. Duncan, thanks for being here on the Schwab Network.
Yeah, thanks for having me over.
Okay, so tell us firstly, because I know you guys have a software angle, I know you guys have an AI.
Okay, all the New York FANG stocks are seeing some profit taking up here at the highs, so be aware of it.
Yeah, so Blue Yonder is the world's leading supply chain transformation platform, and our AI software basically optimizes and accelerates chains for retailers, manufacturers.
Started here. Up next, Sycamore Tree Capital's Mark Okada is back with us, breaking down. He's navigating the volatility in this market. He'll join me right here at Post 9 after the break.
Okay, looking for another bounce. Maybe sucked a bunch of bears in. Let's see if this works. Suck some bears in, thinking that we might see the same kind of drop that we had yesterday after 3 o'clock. New York FANG components did see a little bit of profit taking there at the highs. So, but we are at highs, so that's a good thing. And junk bonds are staying above the 50-day. We are seeing a little fade in some of our breadth indicators, but most of them are okay. If we do get a bounce, we have plenty of fuel, plenty of oxygen for a move to the upside. As the number of stocks above the 20-day dropped to about 35% yesterday. We're at the 200-day moving average, looking for a bounce. Still higher, still lower highs, a higher low for now. Okay, so there a lot of mixed signals. So if you're an investor, if you have an investing time frame and you're not day trading, this crazy price action, you're looking for an opportunity to add to your long-only funds in your 401k or IRAs. So that's probably a few days off. We got to see if this holds, this 200-day holds, and what the tariffs are going to do for the markets at the in the short term. Okay, so right now, if you're an investor, I'd just be sitting on some cash right now, waiting for a base, which we talked about earlier today. If you're looking at some of these long-only funds like TRBCX, which we talked about this morning, TRBCX. Okay, we're looking for this consolidation to become very obvious, and then a break back above the 10 EMA on the weekly time frame. That could take anywhere from 1 to 2 weeks or more. Right now, we're below the 10 EMA for the third week. So, I mean, we are at highs, 120% from the lows where we initially bought this TRBCX. Okay, we initially got into it down here in late 2022. Okay, so that's 120% gain. Now we're waiting for prices to come back and base. And we're also thinking, has this been enough? Has it been enough of a pullback, 7% pullback? Is that enough to encourage some buying? Where did that candle's missing for today? That's weird. Let's see if it shows up. There it is. Okay. That was weird. It wasn't there. Okay, so we're trying to get above yesterday's high into Monday's price action. Would be nice if we could close at the high of the day. Bears would be forced to cover some of their puts.
Markets have remained mostly calm through the early stages of this trade war. It is one of the reasons why the stock market hasn't had a steeper correction, perhaps. So will that remain the case? Let's welcome in Mark Okada. He's the co-founder and CEO of Sycamore Tree Capital Partners here at Post 9. It's good to see you again. Welcome back.
Thank you.
I mean, those are the markets you watch more than the equity markets. Credit's behaved okay, right?
Sure, it's been all right, but it started. We're starting to see some
spreads are widening a little bit.
Yeah, a little bit.
You concerned?
Viasat. Viasat back above the 50-day. Looks good.
Across geopolitical, economic, consumer markets, rates, Fed, all of this uncertainty.
Google, I have some Google shares. That was a nice reversal today. Google, looking for our Google to get back up above the 50 and the 200 day. 200 days first obstacle above 177. Google, Meta back above the 50 day. Would love to see this bounce and start to base, move a little bit higher. S&P 500. Okay, nice bounce today at the 200 day. Looks like a broadening formation. Okay, broadening formation. Okay, pretty obvious broadening formation. Okay, we're probably going to head back up into this range. Not necessarily immediately, but probably going to move back up towards the 50 day at a minimum, I would think. That upper trend line would be cool. That'd be the 6,200 level by the time we get there. 6,200 is where the call wall is. That'd be nice.
You said, you're not as bullish as you were 6 months ago, but this was supposed to be risk on.
Yeah.
Right?
Yeah.
What's happening?
Well, I think Trump has come in untethered, and I do believe that he has assessed that his time, right, is not long, and so let's say they lose Congress in the midterms, right, and his ability to get a lot more done kind of goes away in that scenario. So get it all done now, push as much out as possible,
Including a lot of the messy stuff.
yeah, the uncomfortable things. But on the other hand, right, what we had proof today of what markets do. I think Trump probably only listens to the markets. He certainly doesn't listen to anything else, but he listens to the markets. So what happens, right? The markets sell off. We lose the whole Trump bump, and okay, we're not going to do the tariffs on cars with these guys, right? We're going to moderate our policy, and we see this bump today. So I think as we think about credit, where I would see the canary in the coal mine and the thing that I would be watching if I were, an investor at home, I'd look at probably the IG market. It's a much bigger market. It's pretty high and tight. It's run well, but that spread there, when it starts to move, and if it moves, it's up 5 basis points on this kind of stuff, which is not much. But if it goes out 10, 15, 20 basis points, I'd start to think really seriously about some defense.
Are you worried about corporate confidence eroding further, and that's why you're watching that particular market as closely as you are?
I think corporate confidence is
Okay, we got a broadening top right now in the S&P. This is Tom Bukowski's book on chart patterns. Okay, 19 of 23 of these. Average rise about 29%. Throwback 54%. Percentage meeting price target 62%. Price trend is upward, leading to a formation. Megaphone appearance for higher highs and lower lows that widen over time. Breakout is upward.
It's definitely a problem. And it's also, when you think about the Fed, what is the Fed's reaction to all of this? The Fed's in a difficult spot because they've got things that are going both directions on it, right? I mean, employment is definitely an issue. I mean, I think if Doge is supposed to do something about the deficit, it's an ice cube at a volcano. The Doge doesn't. There's only 4.5% of the budget that's people, that's salaries, right? So Doge doesn't affect the overall sort of deficit, which is really the issue. But it does hit confidence. It does hit payrolls. It's going to hit one of the things that the Fed really cares about. And so we'll see what happens on Friday with the employment report. So that would kind of, and the market's pricing in 3 cuts now. So maybe that's what people are thinking. But on the other hand, all this tariff stuff is stagflationary. That's not good. That goes the other way on their mandate. So I think they're sitting on their hands right now. And if that's the case, and you're a CEO, you don't know which way the Fed's going to move. That makes it even more uncertain. So it's difficult.
How's a guy like you play defense? If you feel like getting more defensive in credit, how do you do that?
Well, the themes that we started around before were we like dry powder in
floating rate, high grade stuff. So AAA CLO, still yielding 5%, floating rate, AAA, better yield, better rating than the correct U.S. government. That's been good. That's continued to be good. That's a great place to hide. You're still making good returns that are better than CPI or any sort of risk you're looking at from an inflationary standpoint. And then within the credit book itself, like there's 1,500 issuers that we could be invested in. We're going to pick higher quality. So quality is the theme that we've had this year, and we'll continue to play the quality
Do
theme.
you think rates are overshooting to the downside right now?
I do. I think that's a function of, you've probably had Dan Clifton on. He's talked about this liquidity bazooka. When we hit the debt ceiling, right, the Treasury starts to pay their bills by spending down their cash. That money is outside the banking system until that happens. That goes into the system, creates more liquidity. This time it's like 500 or 600 billion, so it's a big number. So that's depressing rates. It's depressing the dollar. But on the other hand, it ends around the end of April. So you could, I mean, who knows? We're going to snap back to 5 in the 10-year. I don't know that.
You're not planning for that, are you?
I think it's a risk. I think it's a definite risk in this kind of market. Because this fall is really, really amazing to watch. I mean, we didn't talk about the yen carry thing, but the yen moved from 158 to 148 in 28 days. That's a big move.
Yeah. Well, we saw what happened the last time we had an issue with the unwind of the carry, and I think it was August, right? The first week of August.
That's right.
That didn't feel good down here.
No.
Which means we'll have to catch up.
All right, we got 26 minutes to go.
Good to see you as always. All right, that's Mark Okada from Sycamore Tree joining us. You be well. Up next, Treasury Partners, Richard Saperstein's back with us. He makes the case for two sectors that have been beaten down this week. He explains next.
All right. So we've got about 26 minutes to go. 26 minutes to go. I'm your host, Cosmetti, coming to you from theclosingprint.com. We did get the move we were looking for. The move above 5,800 drove us up to 5,850. We traded up there for a while above 5,850, 5,860, and now we're just kind of consolidating. So yesterday we had a big sell-off this time of day. Right now we're holding our gains, so that's a change in character to a certain degree with 25 minutes to go. So we'll see what happens. Consolidating above the 200-day, give the institutions time to pick up shares, if that's what they're going to do.
Some of the durability that we could actually be kind of building up, some your immune system, if you will, to some of this news that we're getting out of the White House. So that's something that's also kind of notable. Once again, we can't quantify that on the chart, but I think it's something that was definitely different from today compared to yesterday.
Okay. Yeah, well said. Okay. All right. Now, if we are able to maintain pressure on VIX and stocks upward, how much participation do we require? Because the big tech stuff is firm, it's solid, but actually you've got better performers on the day, sector-wise, materials, industrials, discretionary, comm services. So that's where it starts to get the Mag 7 included. But you got a couple groups in there that are a little bit more cyclically oriented, a little bit more maybe about an economic message, which I think is encouraging.
Well, all of them were at risk for tariffs as well, right? Especially when you're looking at the industrials. Obviously you're going to want to have participation from communication services and technology, but even if you have like this small rotation that's still kind of putting money to work in defenses, I don't think that's actually really a bad thing. Technically on the chart here, we're kind of going to the upper end of this first channel that we've been kind of highlighting here, which is going to be an area of resistance. We're pretty much testing that right now. What we do not want to do is actually come down and fade and close actually below the opening print for yesterday.
Okay, we're still holding on to the move off of the low for now. Looking good. Setting up for tomorrow if we can hold up here. It's all about confirmation. It's all about the closing print. We want to see how we can close here and what the different sectors look like. Let me take a look at that real quick. All right, so all sectors are green.
day for a swing for maybe the next couple of days to the upside here, Oliver. And that's kind of what I'm looking for is more upside potential rather than downside movement if we can continue to hold that 200 day.
Okay. So that seems like a good technical line to hold. The advanced decline, it did kind of weaken and deteriorate a bit, but still recognizable. So the damage, maybe contained. I mean, that's kind of why I kept pointing to the election week level on the chart and that gap for a lot of these things, because it seemed very symbolic to try and put up a fight there. And so we are. If we do continue this through tomorrow, maybe let's say even into the weekend, KG, if we start to recover lost ground, where might those flows pull us to? Like, what's the best case scenario you could see? Let's just get silly and bullish real quick.
5,900 is going to be your key area. And there has been flows over the last couple of days on the call side there. Now, that's call selling flows, right? So you're selling out of the money calls in order to collect premium if you're collaring a portfolio or a position. But that could be your next area where we might see, one, resistance, and then two, a magnet for prices kind of moving higher. And any type of breakdown below this, I know you didn't ask me that, but I think it's very critical. You're looking at 5,600, and that's where it becomes a really big problem for this market. And you start talking about, 10% corrections, unfortunately, right? So we're making some ground. It's looking decent. We're holding the right lines for right now. And to the upside, once again, 5,900, that would be a win if you can close out there for this week.
All right. Good stuff. Thanks, KG. Good perspective. We got pretty solid momentum. Russell trying to get to 1% here as well. S&P's 58.54, basically where we started the segment. Nice. We didn't jinx it. Coming up, we're going to take a look at some of the commodity moves. The tariff machine is on, then off, and on, then off, but a few charts have certainly found.
Yeah. Whatever.
The risk of 500 basis point increase in the Fed funds rate. Now is the
All right, so we're pretty close, 58.50.
is policies out of Washington, and that's what we have to pay attention to. But in the end, the landscape for investing will be more beneficial for corporate profits to grow.
Is the Fed still really accommodative?
Potentially, yes.
I mean, you would think you come into the year thinking, yeah, they are less than we thought before. Still accommodative now. I don't know. They're like sitting on their hands because they don't know the impact of tariffs any more than you, me, or anybody else.
Agreed. And I don't think we need the Fed for stocks to go higher. I think we've got to get through this period where a lot of these policies are implemented, creating volatility, and look through to the sectors that will still do well.
We teased it here at the beginning, or at least we read it in the intro. You got two sectors that have been beaten down that you like. What's one of them?
Okay, so let's talk about utilities. The demand for power is growing 2.5% a year. It's not just from data centers, which is 40% of that demand. It's from residential, electrification, onshoring.
Mm-hmm.
There's a lot of power demand that's going to occur, and the sectors that we're looking at right now is the utility sector, specifically independent power producers. And there's two, VST, Vistra, and NRG.
Okay.
Okay.
Well, Vista's been crushed in the momentum unwind.
Absolutely, and it's a great opportunity to add. Right now, it's a $42 billion company, roughly $5.5 billion of operating cash flow. The free cash flow yield is over 7.5% on that company, so they're going to return it to shareholders. And it's in a position now where we're going to add to our position.
You are going to add to it?
Absolutely.
When are you going to do that?
As soon as I feel
as soon as you get off the show? No, I'm serious. When are you going to do it? I wonder if you missed your chance. I mean, these things got crushed so bad. Some of them have rebounded a little bit.
We own it in the 20s since 2021. Okay, so we're going to own this stock for 5-10 years. So I still think the market's going to be very volatile, especially through April 2nd when Trump's going to announce the product tariffs. These were just kind of fentanyl and immigration-related tariffs. So I think we have to be patient here. And look, I've seen these drawdowns for 40 years, and we don't have to just jump right at the first opportunity.
I guess the only thing I would ask about Vistra again is the idea that maybe after DeepSeek, we are coming to grips with the fact that maybe we're going to need less, not more, of everything. I mean, we're still going to need more compute, we think, but maybe it costs less.
we're still going to need a lot of power, but if you can do more with less, maybe you don't need as much power as you thought initially. That sent these stocks literally straight up to the moon.
If you listen to Nadella's last interview, all right,
I know what you're going to say.
all right, so AI agents are only increasing, so we're going to need more compute, more data centers. We're going to need more power to fund all this, to power all those data centers. So I think it only increases the demand for inference and compute.
Okay. And the other sector you would buy that's been weak is big tech.
Yeah, large cap tech. So Meta, 3 billion daily users. Google, 4 billion daily users. Microsoft, 2 million installed corporate base. Apple, 2 billion daily users, right? I mean, these companies have large moats, recurring revenues, and their operating cash flows right now. You take Amazon and Google, it's back up to 7.5%, 8% right now. So I think it's important for every investor to have these in their portfolios and not look at it as just a trade. These are long-term investments.
Sure, but I mean, you think Apple's worth 31 times forward?
Well, is the market worth 22 times forward?
Well, I mean, you need to answer that question, but I mean, Apple, are the fundamentals currently of Apple worth the premium of that multiple?
This is the biggest debate right now, and we can dissect it, services, products, but I own the company. I believe it's going to continue to grow. It's probably at a rich multiple right now, but I think it's got to be essential in everyone's portfolio.
We'll leave it there. Good seeing you again.
Likewise.
Richard Saperstein joining us back here at Post 9. Up next, oil. It's falling for a third day. We drill down on what is behind that next on the belt.
All right, looking good. Looking good. 337. What was that? Just looking at the last 15 minutes of the trading day, watching. Okay, let's see. Okay, S&P drifting a bit lower at the moment. All right. It's only one day. Only one day. We need more days like this if we're going to get out of this hole, trading just above the 200-day. So this iron condor, the way the strategy works, they'll have to double up on their position to 30,000 contracts tomorrow. That would be crazy. We took out the upper part of the iron condor. 15,000 contracts. Freeport McMoran, let's see.
We want to welcome you back. It's a very special bell ringing here. In about 10 minutes, 12 minutes or so, the Congressional Medal of Honor Society is doing the honors today at the New York Stock Exchange. The shot we were just showing you there of that great man, Colonel Paris Davis. He was the Medal of Honor recipient. He's 85 years old, by the way. He was presented with the Medal of Honor on March 3rd of 2023 for his service in Vietnam. Although wounded in the leg, he aided in the evacuation of other wounded men in his unit. With complete disregard for his own life, he braved intense enemy fire across an open field to rescue his seriously wounded and immobilized team sergeant. And while carrying the sergeant up a hill to a position of relative safety, Captain Davis was again wounded by enemy fire. He again refused medical evacuation until he had recovered a U.S. advisor under his command who had been wounded during the initial ambush and presumed dead. While personally recovering the wounded soldier, he found himself severely wounded but still clinging to life, not leaving the battlefield himself until after all friendly forces were recovered or medically evacuated. Several Medal of Honor winners up on the podium today, and we are honoring all of them for their great service to this great country. To Pippa Stevens now for a look at the energy space. Pippa?
Hey, Scott. Well, Brent oil is sinking to a more than 3-year low on 4 key factors. Demand uncertainty amid the U.S.'s tariffs on China, Canada, and Mexico. OPEC announcing it will increase production beginning in April. A possible easing on sanctions on Russia, which could bring those barrels back to the market. And finally, U.S. data today showing a larger than expected inventory build. Now, the energy sector turning negative on the year today, dragged lower by the refiners. That's Marathon Petroleum, Valero, and Phillips 66. While the tariff impacts will likely be felt across the supply chain, the refiners are the first exposed since they will have to pay the higher price for that Canadian crude. Scott?
Pippa, thank you. That's Pippa Stevens. Still ahead, what to watch for when Marvell reports its results top of the hour. Back on the bell right after this break.
All right, we're trailing off a little bit at the moment. Little profit taking. Basically 2 days, 2 spinning tops above the 200-day. So I'd like to see more confirmation, not just the New York FANG components moving higher. So there's still risk. There's still risk that we could retest the 200-day and drop. So we'll see how the options settle for this evening and plan for a trade tomorrow. The trade for today was, do we move above 5,800 and go long to 5,850? That was 50 handles. That worked out. Or will we drop below 5,750 and start shorting? That didn't play out. We did try an area of liquidity. We did attempt a move below this area of liquidity below. Okay, there's this area of liquidity that'll show up here shortly, I would imagine. Has it been erased? Okay, so they might have traded it out. All right, let's see what the 5-minute. 5-minute. Okay, there's some liquidity right there. You see these two levels? We came down to that lower area of liquidity this morning. We thought we would ping pong along this area unless we got above 5,800. Had a nice run to 5,800, 5,850, 5,860. So tomorrow we'll be looking for the same sort of setup. being that Iron Condor trader will be back, most likely doubling their position. The way the strategy works, if you have a losing position, you double up on the next. They had 15,000 contracts today. Tomorrow, 30,000. Note the volume, end of day right here. Note the volume. Okay. So the daily looks okay, but it's just two spinning tops. So pretty decent range. Decent range. We do have world indices also looking good. So there's other areas for you to look at, like Italy, Germany, France, Spain, Greece, the UK. There's money being made in these sectors too, or these ETFs. So watch the international markets as well. We got 7 minutes to go. 7 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Wednesday, the 5th of March. Now we're starting to get a little bounce into the close. Okay, let's go check out breadth. Breadth. Still looking good for tomorrow. Tick cumulative is green on the 60 minutes, so that's good. All right, so could be better. Could also be very, very much worse. So count your blessings. Don't want to count your chickens just yet. Let's see. Summary. S&P 500. Not a bad day. NVIDIA's pushing the highs right now. NVIDIA pushing the highs. Okay, NVIDIA pushing the highs. Okay, nice little follow through. Microsoft pushing the highs. That looks good. Okay, here we go. Okay, the S&P. Much better look today. If we can close up here, that would be awesome. Shorts looking for more downside, probably covering their positions right now. Come back for another trade tomorrow. Robinhood making a new high here. Robinhood making a new high in the evening session. Okay, Robinhood back up to the 50-day. Need to see a follow through on Robinhood. Look, keep in mind, I want you to keep something in mind with Robinhood. I know a lot of people don't like the stock, but whenever you see a company that has earnings that look like this, you got to do at least a double take. All right. 1,700% earnings growth, and the company is expanding into the UK. 115% revenue growth. And you got a 28 PE, forward PE of 28. That's crazy. I think it's actually a forward PE of 24. I think the current PE on Robinhood is 28. Let me just check real quick. I think it's 28 on current. Forward, I think forward PE is 24. So you got a 1,700% in earnings growth, 155% in revenue growth, and we're looking for, 30. All right, so 30 forward is 24, 20, 26, something like that. So looking for this little dip to wash out any weak hands and looking for this to follow through this week and push a bit higher. Okay, Robinhood looking good. Looking good. Robinhood going right now. Robinhood is going right now into the close. Aaron, you're doing well on that, right? Looking good. Okay. So I did notice that Viasat had a nice couple of days. Viasat 2 days in a row. Pushing higher, Viasat. Okay, big range bound pattern. Okay, we got 3 minutes to go. 3 minutes to go. Who was it that I wanted to take Iron Condor on? Let's see. We got MongoDB tonight and Zscaler. Zscaler. CS. Okay, 220 and 170. Let me see what that looks like. Zscaler for Friday. Friday trade, Iron Condor. See if I can do this real quick. Buy a Iron Condor. Let's see, the upper strikes, 220, probably too far. Sell 220, buy the 205, 225. And it puts 170. Let's go 170, sell the 170 put. 170, buy the 165. Let's see what that goes for. That's a pretty cheap credit. Let's go out a week. Nah, okay, 220. Okay, 210. Let's say 210. Sell the 210. Buy the 205. 210. 210. 205. 170.
You kind of had the maximum tariff aggression along with maximum short-term concern about how the economy was holding up. I think you got eased up on both fronts. Maybe that minor step back to firm the auto tariffs, but also better ISM services. Facebook usually doesn't move the markets, but it didn't hurt to have a little bit of reassurance. And so it allowed the S&P to
210, 215, 170, 172.
So I think it's sort of like you check off the box. An oversold market is able to respond. We're sitting right at the waypoint that you would have expected, which is yesterday's high.
750. Nah, it's not worth it. I'm going to pass. I'm going to pass on Iron Condor.
When we can basically say, okay, we know what the situation is going to be. But ahead of the jobs number, bond yields relaxed higher. I think part of that was the German yields running, but also just this idea that maybe, the economy's hanging together. You can tell yourself a story that it was weather, kind of weather impacted January and February, and then you kind of have a little more spending ammo in the tank here.
You don't get out of a growth scare on Wall Street overnight, obviously.
For sure not.
And we're starting to obsess a little bit about the idea of stagflation. Now everybody's talking about it. So let's see how long it takes for that to run its course.
I think you're going to need
All right. That's a wrap, folks. Microsoft closing at the highs. Looking good. Microsoft closing at the highs. Big move today off the low. Very nice, Microsoft. All right, folks. Have a great evening. Take care. We'll see you tomorrow. I'm your host, Cousin Benny, coming to you from theclosingprint.com at the closing bell. It's Wednesday the 5th. Take care. We'll see you tomorrow. Ciao.